righty. Are we live? Wait for it. Wait for it. Oh, there it is. Whoa, that's loud. Good morning, ladies and gentlemen. I hope you're having a wonderful day. If you're watching this and it does not say live at the bottom of the screen, unfortunately, you're watching the recap. The good news is we are live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. Make sure you're subscribed. You're on mobile. Press hot chat. X out the chat. Hit the thumbs up button. Second link for the nightly watch list and main channel. First link for the Scream Alerts boot camp and real estate course. But ladies and gentlemen, we have a very interesting morning. Believe it or not, you have not heard that much about the debt ceiling, which was a big difference from yesterday. However, HD had one of their worst earnings in 20 years. Expectations were a lot worse, or the numbers were a lot worse than expectations. That was bad. And then retail sales in the morning, if you notice, bond activity started moving. Retail sales was actually decent, and that gets rid of the idea that maybe the recession is right around the corner, hence the bond yields reacted how they did. And then there was one more thing people were tripping on this morning, but overall, pretty active right now. We're getting ready for the rest of the week. We have a lot more data on the way. You got industrial production and a couple of other things. I think even housing market, and then business inventories, and then you have like 3 or 4 Fed speakers, and then another thing, that's what it was. The bonds, there's a big Pfizer bond offering, and that is affecting a couple of things in the bond market. But Chad, it's going to be a wild one. We're already dealing with a lot already. I'm sure it's going to be an exciting one, but also be prepared that we may not move anywhere. Again, we may have a lot of movement to go nowhere, so we will see what happens. But Chatadonia! Good morning, baby. I know LT10 was true, apparently. I guess that's what happened, baby. We'll see. What's up, Justin Franklin? What's up, Rob? Gus Gonzalez. Business, baby. Baba Chan. Q. Forever Young, baby. Good morning. Open face, baby. Good morning. Oh, Max Capital. Laker. J. Oh, good morning. What's up, Sippin' Ghost? Oh, Jerry. Stafford College. J. Max. Oh, good morning. Jason Richardson. Riley Mack, baby. Max Capital. Lateral. Oh, Nope. Caesar, good morning. Oh, Carissa Hines is in the house with the berries. So is Christine. Oh, what's up, Jai? What's up, Benny Silverio? Jake Cortina. Oh, Darren, Big Jai. Oh, my gosh, the chat's going crazy. Oh, T. Grider, the garbage monster. Joe Shanahan, 10%, baby. What's up, 10%, Alex? Nick, good morning. Oh, how to become a billionaire. Turbo, Josh Jacobs, Mustafa Solomon. Good morning, Brandon. Oh, what's up? Candy, how you living? Good morning, Mr. Hanlon. William Ward, Dinosaur. Oh, my goodness. Good morning. What's up, Charisse? What's up, Turbo? Lucky Soldier, baby. Oh, Nepal. Good morning. Oh, what's up, Marty, bro? What's up, Charlie in the tree? Payday Devil, Picky Audie, Woodrow, Dispassionate Newman. Good morning, baby. What's up, Pingo? What's up, JP co-member? Amor Fati Trav. Oh, my goodness. Dude, the chat is, you guys are ready to go. What about the retail sales at Home Depot brought this out of you? Oh, my goodness. Oh, my goodness, Chatadonia. So good morning. I hope you're having a good day. I hope we have a better day. And if not, I also hope that your expectations are not too high. Just in case we do nothing. Just in case we do nothing, bro. Oh, did I say Monday? I meant Tuesday. It's already Tuesday. Oh, that's beautiful. That's beautiful. It's already almost done with May. But Chatadonia, good morning. I don't know. Baidu's earnings were actually good. So I don't know. I saw only good on there. They were up a little bit. I think they'll do good. But again, China data last night was awful. Literally, China missed on everything. I forgot about that one too, but that one was not good. So we'll see. We have a lot of push and pull today. There's a lot of things that can make us move, and then we are just in this environment where we will not move. So we'll see what happens. But let us get into the news, Chatadonia. Pfizer. They kicked off an 8-part high-grade bond sale that will help fund their acquisition of Seagen. According to people familiar with the matter, the longest portion of the deal, a 40-year note, is expected to yield 180 basis points over Treasuries. Benchmark Treasury yields edge higher after the Pfizer bond deal was announced. Futures declined, and the dollar was little changed. Oil advanced, and gold declined. Any progress on the debt limit and a slew of Fed speakers may add to pressure throughout the U.S. trading day. Time is running out to settle the debt drama. That's what Janet Yellen said, reiterating that the impasse has already increased the debt burden to American taxpayers. Joe Biden is going to be meeting with Kevin McCarthy at 3 p.m., adding tension. Progressives in the chamber warn that they'll oppose any agreement adding more work requirements for food assistance to the poor. A Goldman banker quit just 2 weeks after landing a plum position as COO of their prize merger advisory unit. Troy Broderick is leaving for Perella Weinberg, according to People Familiar. Wall Street talent is being snapped up by Saudi's wealth fund for their New York arm. The PIF, which deployed $4 billion in the U.S. last year, hired former .72 executive Jason Chung in January to the head unit. Goldman alumni Mark Cranley and Vesa Henlin joined too. The kingdom may decide within weeks whether to sell more Aramco stock, a person familiar said. An offering may come this year. Investors are actually the most bearish they have been all year, according to Bank of America's latest fund manager survey. Global fund managers flock to cash on recession and credit concerns. Most expect the debt ceiling to be raised in time, but the dragging negotiations probably aren't helping sentiment. The most crowded trade is being long on big tech right now. Home Depot cut their outlook after sales fell more than expected. The retailer now sees comp sales declining as much as 5% this year. Shares fell pre-market. Horizon plunged after a person familiar said the FTC plans to sue to block Amgen's $28 billion biotech takeover. Morgan Stanley may cut 7% of their investment banking jobs in Asia, with those in China being the hardest hit, People Familiar said. 13F breakdown. Pension funds had 26% in tech last quarter, the biggest weighting among 6 major investor types, according to Bloomberg. Banks had the lowest exposure at 19% of portfolios. Bloomberg looked at 54 pension funds and 219 banks for the analysis. HPE, Intel, and Kingsoft Cloud were among the top position increases in tech by pension funds. Clearing houses in the U.S. executed more than half of the trades in the euro swap market for the first time, underlying a shift to New York after Brexit. The U.S. market share reached a record 51% in March, according to Ostra, a post-trade network. EU venues accounted for 35% and the U.K. 14%. The data showed the U.K. share was above 60% in 2020, the year in which Britain left the EU. And then the chart of the day is here's one reason why the debt ceiling talks are fraught. Thanks to higher yields, the U.S. expends more each year on servicing debt than their defense in 2022. So this year, the government laid out more only on Social Security, $1.2 trillion, and health, $909 billion, while income security was in line with today's debt servicing cost of $813 billion. That's crazy. So it pretty much costs $813 billion to service our debt with these current interest rates. Today, 9 a.m., Janet Yellen is speaking. 9:15, April industrial manufacturing production. 10 a.m., ECB Lagarde. 10 a.m., Fed Barr testifies before House Financial Service Committee. 10 a.m., OpenAI CEO Altman testifies to Senate panel. 10:30, Fed Barkin interviewed by Bloomberg. 11:30, $36 billion of 52-week bonds and $45 billion of 154-day CMBSs. 12:15, Fed Williams. 2:30, Fed Goolsbee. 3 p.m., Biden meets with McCarthy, and then 3:15, Fed Logan. And then at night, 7 p.m., Fed Bostic and Goolsbee. So that's a packed schedule, Chattadonia. Welcome to the data dump. And 6 p.m., Elon Musk will be on CNBC, even though he says it's not with CNBC and it's with that one dude. JP Morgan and Tesla hold shareholder meetings. Earnings include Keysight Technologies. U.S. retail sales rebounded more weakly than expected in April. Headline sales rose 0.4 versus a revised 0.7 in March. Later, the manufacturing sector may have eked out 0.1% growth after a drop in March, but BE predicts a flat print as the PMI is contractionary. Allies of Michael Pence formed a pact to support him as he moves closer to challenging Donald Trump for the Republican nomination. Pence, who has said he'll announce whether he'll run before late June, sanctioned the creation of the Committed to America Super PAC, People Familiar said. Petrobras changed how they set their fuel prices to help control Brazil's inflation. Prices will be taking a combination of domestic and international costs into account for the best alternative for clients. Canada's inflation unexpectedly picked up to 4.4 in April from 4.3. German investor confidence weakened for the third month. The ZEW expectation gauge fell to negative 10.7 in May from 4.1. An index of current conditions also fell this week after the data raised concern Germany had a winter recession. Falling new manufacturing orders cast doubt on how strongly it could rebound. ECB rate hikes are close to an end, Yanis Storanis told Naftemporiki TV, but whether it'll be one more hike or two, I cannot say. China data missed across the board, adding to signs that the recovery is losing momentum. One major worry, the youth jobless rate rose to a record 20% in April. Industrial output rose 5.6 year on year, while retail sales climbed 18%. Urban investment slowed in the first 4 months from a year earlier. Global central banks tapped a record amount of yuan FX swap lines in the first quarter. The outstanding balance of foreign currency swaps was $15 billion at the end of March, up from $20 billion yuan the prior quarter. The RBA weighted the risk of upside surprises to inflation from a tight labor market market and rising home prices as they delivered a surprise rate increase. Minutes of the May 2nd gathering showed. Malaysia may have to raise key rates again, and Sri Lanka's economy may recover next year as they get funds from a $3 billion facility from the IMF. China's commodity output fell month-on-month in April. Oil processing volumes retreated from an all-time high in March. Coal and gas production also declined from a record, and metals, aluminum, and steel supply dropped. Aluminum output may have shown a stronger recovery in coming months, while producers in Yunnan see adding capacity to the end of June. Copper slumped to trade near their low of the year as weak output in China and rising exchange inventories added evidence of weak demand. Other metals also weaken. The LME is trying to rebuild faith on their nickel contract after an epic short squeeze last year. CEO Matthew Chamberlain said wheat, corn, and soybeans retreated as the U.S. crop planting accelerated last week. Oil demand is set to rise more than expected this year as China's intake from an all-time high, the IEA said. Consumption may climb 2.2 million barrels a day, about 200,000 barrels a day more than previously forecasted. While China's latest economic data missed across the board, the vast majority of the projected demand recovery is already in train. Crude inventories will deplete a rapid clip of 2 million barrels a day in the second half, says the IEA. OPEC output will drop 850,000 barrels a day in April and December, and Russia has not implemented their pledged cuts, with exports hitting post-war high of 8 million barrels a day in April. U.S. corporate bond investors are seeking shelter from credit stress. Should look at debts from nations like Mexico, India, Vietnam, and Indonesia, said PIMCO. There's little risk of default, and they have lots of tools to deal with stress. Rakuten plans to issue new shares to raise $2.4 billion. An investor group led by Xavier Niel and hedge fund vet Albert Saporta sought to raise stake into their GAM for more than 10%, signaling opposition for the takeover by Lion Trust. Musk buys job tool Lasky in first acquisition for Twitter. Vodafone will slash 11,000 jobs over the next 3 years, about 10% of their workforce. Wells Fargo agreed to pay $1 billion to settle a class action over 2016 customer account scandal. Investors sued in 2020, claiming execs misled the bank's compliance with federal consent. Tiger Brokers will delist across-the-border trading app Tiger Trade from app stores in mainland China to comply with regulations. FTC will sue to block Amgen's deal for Horizon. Goldman bankers win promotion and leave rival 2 weeks later. Gas producer Santos aims to bring Asia's emissions to Australia. JP Morgan says Nike will settle down with risk to stall in the second half. And Apple unveils new features for cognitive accessibility. And London theaters are offering something for everyone. From an immersive Guys and Dolls picture to a new show about England's football team, may also bring the opening of a musical version of Brokeback Mountain and Ruth Wilson and the Second Woman, a 24-hour marathon of a play. Here are the 10 best shows to see this summer. It's draft lottery day, and the NBA will learn who gets the chance to pick Victor Wembanyama. Oh, I love that kid. Oh, have you guys got to look up this kid's highlights? He's like 8'17", and he shoots like Steph Curry, and then he like kind of play like Kevin Durant mixed with Antetokounmpo. I can't even say it. Oh, yeah, Wembaya, bro. That's why check it out. 14 teams will have a chance to win the number 1 pick for the June 22nd draft at an event in Chicago, the AP reported. Detroit, Houston, and San Antonio have the best chance at 14% each. Wembanyama, a 7'3", 19-year-old phenom from France, has been consensus as the top pick for months now. The 76th Cannes Film Festival kicks off today, and Johnny Depp returns in Juan de Barry. Other big names include Leonardo DiCaprio and Robert De Niro and Martin Scorsese's Killers of the Flower Moon. Harrison Ford makes his final bow in the title role of Indiana Jones and the Dial of Destiny with co-star Phoebe Waller-Bridge. Lamborghini roars off-road with a new $273,000 Huracan Sterrato. Bloomberg's Hannah Elliott was a bit skeptical, but after treating the Sterrato like her personal dune buggy, she dropped any doubts about its raison d'etre somewhere back in the sagebrush and just went on another ride. CEO pay packages fell for the first time in a decade this year, the Wall Street Journal reported. Companies for the first time this year are tabulating gains and losses in the stock awards that make up much of the package. The numbers show about 2/3 of the top execs in S&P firms ended 2022 with smaller comp than they were originally awarded, at least on paper. The median package slipped to $14 million from a record $14.7 in 2021. Wow, big drop, big drop. And then, on this day in history, American economist Merton Miller was born a century ago. He was the co-author of Modigliani-Miller theorem and pioneering contribution in the field of corporate finance. He won the 1990 Nobel Memorial Prize in Economic Sciences with Harry Markowitz, the creator of modern portfolio theory, and William Sharpe. Miller died in the year 2000. All right. That's it. Modigliani-Miller theorem. We may have to look into that, Chad, but that was today. That was today. That was today. I hope you're feeling good. Oh, industrial production just came out. Again, so another data set, industrial production, 0.5 month over month. Expectation was 0. Capacity utilization, 79.7. That came in line. And then manufacturing production, 1%. Estimate was 0.1. So that was another strong set of data. Again, yields might go down. Retail data was good, but then again, we went down because that does not support any rate cut narrative. The better data gets. So it's kind of weird. It's good and bad at the same time. Just depends how you look at it. It depends how you look at it. But Chattadonia, we still got a lot of time here. I still got some pre-market movers actually for you. So let's get some of these. Let's see what is moving right now. Again, bond yields are already on the run. But Amdocs, DOX, they rise 2% after the IT service company is upgraded to overweight from equal weight at Barclays. Applied Digital, APLD, climbs 43% after the data sector company said they recently launched AI cloud services and had their first major AI customer worth as much as $180 million over 24 months. Capital One rises 6.5% after recently 13F show Warren Buffett added the stock to their portfolio this quarter. Dish Network shares are up 7.5% after the company James DeFranco, director, reported a series of insider transactions to the U.S. SEC. Expedia shares are up 1.8% after Gordon Haskett upgraded the online travel agency to buy from hold. Gilead shares rise 0.8% after BMO upgrades the biopharm company to outperform, saying it's best in class. Home Depot drops as much as 2.5% after cutting full-year guidance and reporting comp sales that missed the average analyst estimate. Horizon HZMP plunges 17% on a report that the FTC is preparing to sue to block the firm from being acquired by Amgen. Neogenomics, NEO, shares are down 3% after Raymond James downgraded the healthcare service company. Novacure NVCR rises as much as 3.7% ahead of the bell after Wells Fargo analyst Lawrence Beagleson raised his recommendation on the oncology company to overweight from equal weight. Rumble falls 4.7% after the video platform company saw quarterly losses balloon as they expanded their roster of influences and personalities. Both analysts covering the stock are concerned about the company's near-term outlook. CLTD falls 6% after the company's first quarter revenue missed the average analyst estimate. Vodafone drops as much as 5.4% after the telecom operator's guidance for profit and free cash flow missed expectations. And then Williams Co., WMB, shares are oversold after their underperformance this year, says Citi, in a note upgrading the energy infrastructure firm to buy from neutral. Ba-da-bop-bop-bop. Not bad. Not bad. So, Chad, I hope you're ready. Again, a lot of data, a lot of speakers today. So we're just getting started. Again, you're down 0.25% right now in the futures. Bonds are down about the same. And a couple of reactions here from Home Depot, China data, and retail and industrial data here in the morning.
Staff is very engaged.
But I will be right back. Go to the bathroom. Follow me on Instagram.
Engagement
at the Trading Fraternity. I love you.
As constructive. The most important thing is making sure that Congress fulfills its basic responsibility to avert default.
National Economic Council Director Lau Brainerd calling staff-level talks both serious and constructive. Here's House Speaker Kevin McCarthy's take on the same thing.
We're only a couple weeks away, but if you look at the timeline to pass something in the House and pass something in the Senate, you've got to have something done by this weekend. We are nowhere near any of that. I appreciate the president signing in to talk after 97 days, but there is no move.
According to him, staff-level meetings are not productive at all, and we are nowhere near reaching a conclusion. Meanwhile, Secretary Yellen is doubling down on her warning in a letter to congressional leadership, writing the following: "We still estimate the Treasury will likely no longer be able to satisfy all of the government's obligations if Congress has not acted to raise or suspend the debt limit by early June, and potentially as early as June 1st. Yellen indicating the U.S. is already paying the price. Joining us now from Capitol Hill is Kaylee Lyons. Hey, Kaylee.
Hey, John. Well, there seems to be diverging views clearly on how much progress staff-level talks have made in recent days, but it is going to be the principals in the room today at the White House. President Biden, along with Vice President Kamala Harris, will be meeting with House Speaker McCarthy as well as the other big congressional leaders. So there is a question of whether or not we will emerge from that meeting in the Oval Office today, what we will hear when they all go to the sticks and speak about the progress that they made in the room. What we understand is on the table are ideas like spending caps, though the Biden administration would like that to be in shorter duration than Republicans would like. Permitting reform also on the table, as well as work requirements for entitlements. The thing is, John, that even if these 5 really can reach a deal today. That is just part one. This still needs to be sold to the rest of Congress and ultimately passed. That is where the timetable gets incredibly difficult because remember, the president is scheduled to depart for Japan tomorrow. And of course, the Senate is scheduled to go on recess starting Thursday through the Memorial Day holiday. So the clock is ticking as Treasury Secretary.
The clock is ticking. Surprisingly, not as many of those headlines here today. So we will see. But Chatadonia. Oh, and I bought a gold future last night. I forgot to tell y'all. I remembered by looking. I forgot. I put in an order. It was like middle of the night. I'm back to my middle of the night future trades. It's okay. I have a problem, but we'll see what happens. We'll see what happens. But Chatadonia, it's time that we get into a couple of plays here. Let's see what we got here for the day. We got the Chad post. Let's see what other Chads are looking at. I asked you guys, I said, did you expect Michael Burry to be buying bank stocks? And 82% of you said no. I think this was the first poll where we have had a solid majority. Usually it is split. So, again, Michael Burry, man, Michael Burry. Let's see what we got here. Options. AI would like to continue up, but the market could go both ways. We'll short if we spike up today. Google puts. Thank you for everything, Josh. It's a blessing to be a part of the community. God bless you, Ghost Dog. TTF Colt Rookie Broski. Shout out to Colt, baby. Watching my ZQ, MCL, Baidu plays. Also keep an eye on bonds, energy, and commodities and biotech with upcoming events. Forever young, baby. Neurosci. From here on out, we will forever be known as the BTD Burry. Who would have guessed the big shirt was actually bullish on bank dips? Who would have thought? Rebecca, God bless that call. Full armor, Chad. Any Washingtonians here? Swear we need to have meetups. It would be dope, baby. Amen. God willing. What's the plays? Chatadonia. Peace and love. RKLB to the move. Long on note. Sox S swinging AMD put. That's for RJ, baby. Short in Tesla. July 180s. Ready. Ivan. S2K Colin. Watching TGLS. Teradyne at $98. Watching Tesla. TQQ. Devon Energy. GOF. EFC and DX. And SPY puts 410 daily. Hot dog. Wow. So a couple of plays there. A couple of plays and ending it with SPY 410 puts. Chatadonia, what you got for me? Let's go, baby. You're here live. You got a chat right now. You got fingers. You got a keyboard. What's that first play of the day, baby? Post it in the chat. What are we looking at? What are we looking at? Give it a second. Wait for it. Wait, there it is. Watch it. Walmart, HD, KRE, 51% short. Troika, Tesla call, SPY puts, AMD puts, WMG, IGT, long on Pickleball, selling SoFi calls, NWL, Troika, Troika. Did Ackman buy anything on the 13F? I haven't checked yet. Troika again. Going long. APLD calls on Josh. TMV, Tesla 230, Baidu, Yang, TFC, COF, Yang share, shorting myself, JWM puts, Tesla 169, SWK under 78, Carvana, GVIP, Hibbs, SWK, GID, FAZ, Troika again, MU breakout, Yella, AI, scalp short at open, long LMT, Life on put, SDIG, Tesla 180, GME 25, chill until the setup, Apple calls, PayPal long, Meta calls, Bank of America, Josh calls, Bank of America shorts, Josh stock, SoFi calls, QQQ, Tesla shares, Rum calls, Upstart, short Nvidia, Labu, AMD puts, Amazon calls, Cash, Peloton puts, Roblox calls, Christ calls, AI short, scalp at open, puts on everything, S&P 4180, Meta put, Troika, TPET, long CTLT, Snap, scalp, SQQ, MRO calls, God is good, Josh Habibi, MLKN, covered calls on Jesus. There's a lot of God plays right now. Meta short, FSLR, NASDAQ shorts, just waiting. Tesla puts 408 call and 413 SPY put. IDAI being patient, and the final play is up dog. What's up, dog? On jaw. Let's go. I'll take it. I'm fine with that. I'm taking it. Final play was up dog. I'm down with that. Used to be a funny joke. You know, you'd be like, yo, you got that up dog? They'd be like, what's up, dog? You'd be like, nothing, man. Nice to meet you. Yeah, what's up, dog? That up dog, you know? Okay. Anyways, I got a couple of plays. I'm going to be watching bonds again, still short on them. We'll see where we end up by here. I may want to close out of that play by the end of the week. ZQ, I like the Fed futures, especially with the data. So we'll see how that plays out. I grabbed a gold future overnight. I'm down on that one now, but I do like gold. I think we're going to flip that a couple of times all the way until the debt ceiling or until it gets resolved. HD post earnings will be good. Again, very, very big miss, but it had a fat bounce already off the first candle. So watch out for that. Then Baidu, again, we really like that play there. They had earnings. I want to see how it ends up playing out. Then Capital One, a lot of people bought into them, including Warren Buffett. Then SC, they're down 5%. I think that'll be a good one for the downside. Maybe gets a bounce on continuation. But now Walmart and Target, I think those will be your final retailers. So we will see what happens. But Chattadonia, those are the plays. How much time? We got like 1 minute, man. There you go. We're right on schedule. We're right on schedule, baby. Oh, my gosh. Happy Tuesday. Are you guys ready? Again, we have a lot. If you weren't here for the schedule, we already read over, like, I think there's like 10 different things already. Meta dropping bad already. Oh, wow. Look at the chat in the morning. Ready to go. A little bit. Meta's down 1%. I mean, again, the market's down. Oh, there it is. There it is. There it is. Well, we will see what that leads into. But ladies and gentlemen, boys and girls, I hope you're ready for another awesome day. And here at the Colt, before we do anything, before we try to chase a dollar, before we try to enrich ourselves, we must pay homage to a very special group of people that has sacrificed more than most of us ever have and ever will. And I am talking about the veterans of the United States of America. So on behalf of the Colt, people here, the people not here, we want to give a huge special shout out and thank you to all the active servicemen, past servicemen, anybody who has served this country. For real, thank you for your service and God bless you. And even shout out to the families because they made their sacrifice as well. And big shout out to anybody else out there helping out their local community. All the doctors, nurses, teachers, firefighters, police officers, garbage men, janitors, helping out with a nonprofit, man. You just giving back. You coaching the kids' baseball team, man. If you just giving back, man, God bless you. And I hope you know you're appreciated as well, too, baby. So, ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Son of the Jets! Oh, it's game time, baby. Horna, let's go. Oh, Chattadonia. Good morning. Wake up. Wake up. Good morning. Oh, wow. Meta is still going. Wow. By the time we finish the pledge, it keeps going. So Chattadonia, again, I think every like 15 minutes or every 30 minutes for the first like hour or two, we're probably going to get event headline data, something of that nature. So we'll see. A lot of things are moving right now. Again, that's a very interesting spot where we're at. Let's see the timing. Where we at? SPX. We got about 1 minute, 45 seconds left. You're at 41.38. So you are near the low of the day right now on the futures. And we are still, where is that compared to Powell? I think this is still even the lower end of Powell. Actually, no, this is the release of Powell was at 41.29. So you're actually above the FOMC statement right now. So we'll see. I mean, the information, there's a lot of information. What's going to spook us the most will probably be the biggest surpriser. But I would pay attention to the Fed speakers. And like we saw yesterday, you had a lot of them. They all echoed the same message. There's a very good chance we don't move until Powell. So I'm kind of biased. My bias coming into this week is that we do nothing. So every single day, you know, I'm hyped up here right now at 6 in the morning. I'm expecting we do absolutely nothing. So that being said, we'll see what the data really shows us. But I'm waiting for Fed speakers. And then if anything, I mean, we've already got the big retail sales that move bonds. I mean, maybe the housing index moves things, but it's probably going to be some Fed speakers. So we're going to see here. We're going to see. But we got about 30 seconds remaining. Again, Meta is already doing something. Let me see if I could get news on that. Yeah, we might as well check. Get ready, Tim Cooks, activist investors. Nope, I don't see anything. I do not see anything. David Tepper bought more Uber. So there you go. Again, HD. Then we got Baidu and a couple of the other ones. Bonds are already at the low. But get ready. 10 seconds, Chad. Drop that thumbs up on the video. Show some love. Make sure you're subscribed. Call out any plays. Call out any news. If you need any news, let me know. And let's have a good day. Ooh. Round 1. Fight. All right, Meta down 1% to start. Let's take a look. Everything's in the red right now. Utilities and real estate are trying to be the best. So is tech, but starting off pretty negative, about 0.31. Dow is down the worst, 0.37. NASDAQ 0.3, and then SPY is actually the best, 0.27, with Russell down 0.6. So where are the regionals at? Regionals are up 0.4. Microsoft pop. Again, don't forget about HD and Baidu post-earnings, and then Walmart, Target, the ones that haven't reported. Google's on the high. Google went green. Netflix, they're still red, but they're trying to get a pop there. Amazon is in the green, and then Apple, too. Remember, Apple was negative yesterday. Yeah, new. I think it was a mix of financial results as well as 13 Fs for them as well. Tesla's still down 0.3. Again, that was a wild ride. Again, bonds are still down 0.3 right now as well. Gold is down on the day. Microsoft running, JPM. Again, banks are doing pretty decent. Let me see. Big four pop. Again, so that was the theme from all of the 13 Fs. Everybody bought in the tech stock. So again, that was one of the headlines here this morning, is that this is the biggest concentration, the most crowded trade right now in the market, according to hedge fund holdings and pension funds, is that they are all owning big tech. So tech is actually in the green right now, up by 0.10 right now. Financials are number 2. Worst on the day is consumer staples, down 0.75, and that's simply because of Home Depot, probably. Walgreens came down. JP Morgan starting to come up. Again, banks are doing good. Bond caught a bid as well. What the hell was that? And then SPY, high of the day for now, still down a quarter. Again, futures at 41.40, so SPY's at like what, 41.20, 41.27. The gap between the futures and all that is actually starting to tighten up here. Again, the gap fills at 41.36 for SPX. JPM's on the high. Home Depot might slip. Why are my charts? I got like one chart that's behind. Microsoft's at the high. Tessie's going green. Again, a lot of purchases on tech. That was kind of the big thing. Again, there's Uber, Tesla. Tesla is green now. Amazon, Apple. I think they all went green now except for Meta. Meta even recovered a little bit. MU, Baidu popping. Baidu should have gone up a lot. Again, I like the earnings. There it is. It's coming back up to 128 now. Other China names are down, though. Some of them. MPW, they're getting another day, another sell. Another day, another sell. 2% now on that one. Again, real estate was trying to get a bid here in the morning, but they're kind of in the middle. Again, Baidu now 128. They're popping. Microsoft, MPW, RIP. Troika. Oh, where's that other play from yesterday? The Zen V. That one's dead. Note, not really getting that AI hype. Google. Again, you have CEO of OpenAI. He's testifying before Congress today. And then SPY still holding that level. Let's see. Bond. Damn, Bond's flush there at open. What the hell? Oh, this is because this is a 5-minute chart. That was from earlier. Bitcoin still up. Gold at 2013. 41.26. Again, until we get to like 41.19, it's going to be the same setup. Maybe like 41.20. Baidu starting to break out a little bit. Let's check some of the other post earnings. Home Depot. Home Depot starting to continue down. Congress, I have the time they meet. Let me see. Please hold. Congress meeting will be at 3 p.m. Hour before the bell. Biden meets with McCarthy. So we may not even get a headline till after the bell. I like XRP, but I'm not really an investor in it. I bought XRP back in like, 2016 or 2018. So I remember I bought Ripple when it was like in the early days of it, but I never really, I never became a Ripple boy, if that makes sense. So, and then they had that lawsuit, and then they made it pretty hard to buy. You just flipped it? No, I'm actually still holding it. I flipped some of it in the early days, but I have a bag of Ripple somewhere. I haven't touched it since it got halted by the SEC or whatever back in the day. 35 shares of Redfin for the long term. HD's coming down. That's an earnings continuation. Redfin again, they were dropping there yesterday. Amazon's on the high. AMD's starting to go. Again, Baidu is at the high right there. Yeah, AMD's starting to run. NVIDIA, AMD's up 1.39. You keeping bagged almond milk? Try to buy Ripple, but got almond milk. And I don't do ICOs because it's all a shell. Pay me in Ether, you could keep your check. Oh, they don't know. They don't know. Target down too. Again, HD, bro. I mean, we were all laughing at Lendington, but I think he got the last laugh. Bro, the Home Depot is big. Again, the fact is, I mean, even without the retail sales, people were reacting to HD in the morning. Again, that's very big on the consumer staple side in terms of missing. Again, tech is the only thing green right now, following 13Fs saying that every hedge fund manager bought tech. Everything else is red. Financials are number 2, down 0.05. And again, discretionaries and consumer staples, those are the worst on the day. HD is flushing again. Actually, the most volume into this one. Let's see, oil. Oil's trying to work its way back up. Oil is actually the 3rd best on the day. So let's see here, because that'll be a dynamic to watch out for, is if it's tech or oil today. NASDAQ recovered a lot, though. Dow Jones is down 0.4. That sucked there in the morning. It's only been like 5-6 minutes, but they're still down the most. SPY down 0.25, and then NASDAQ has recovered a little bit, but everything is still down. Upstart, AMD. AMD is killing it. And then Upstart is a very finicky guy. Tesla's on the high right now. Tesla's at like 167. Amazon's at the high. AMD's at the high as well. Yeah, Upstart's back down 1930, down 4%. Amazon's at 112, up 0.75%. 3M getting clapped. Yeah, 90. Has it gone below 99.59? I think that's the 52-week low. So give or take. What else? Again, Walgreens. I think 3M though too, isn't it? Somebody even asked about the sympathy related to HD. JPM coming down a little bit again. Banks are number 2 on the day. Only thing in the green right now is tech stocks. Ford is on the low. I've seen that on the low a couple of times now. They're down 1.2. Tesla and Google still running. Damn. Or Amazon and Google. Why would it be a sympathy? I think just because they sell like products, basic materials, but that's the only thing I could think of. There's Tessie, Bidonius. Again, Google 117. Amazon too. Again, Amazon and Google are really, really killing it right here. And then Meta is just holding up. Actually, no Apple, though. No Apple love. Apple's up 0.35. Remember, all day yesterday, Apple was going down. MPW is just, it's been dying since that refinance news related to Stewart. MMM 2013 prices. Healthcare is slaughtering the rust. Down 0.4 XLV. I mean, there's a couple things worse, but they are doing pretty bad. Lows at open. Google is wicking into the high. SPY is hitting the low of the day there, and then the bonds are trying to go with it. SPY is actually a little lower than the bonds there, not in terms of percentage, but new low on the day, 41.24. Again, watch like 41.21. That's not even the level. The real level is 41.19. But see how we play there. Ulta dumping. Wow, that's how you know for the consumer stocks today. They're even selling off Ulta. Upstart was selling off. Watch if that one turns around, but just remember the move that it made yesterday. Yeah, Upstart's still kind of drilling into the lows, another 1%. Disney's down too against. It's held 92 to 90 though post earnings. Bonds are at the low. No McDonald's short, but maybe Again, and then you have Walmart and Target this week already. I think Target dropped a little bit more than Walmart. HD, again, HD still at the lows there. They're dancing around. LRCX. Yeah, LRCX is up 0.7. I think all chip makers are doing really, really good today. ASML's, oh yeah, and except for C Limited. I don't know. I think they do a little bit more than just chips. Nvidia's on the high. Baidu chopping, I know. Hey, Baba's breaking out though, so we'll see. But I like Baidu's earnings. I was very surprised. But Baba's going. The data in China though, just full on miss all across the board. That did not get people excited. Tesla's still holding up, but they're in the red, believe it or not. Again, Apple has just been going up all day. AMD as well. I think you've heard that AMD has already hit 300 highs to start the morning. So we've been here for about 11 minutes, and AMD has 300 highs on the day. So take that into consideration. It's very, very big, Habibi. Very, very big. ARK is going lower. That could be in response to the retail data. Again, that's why the bond yields. I think ARK is probably going to trade like the bond yields, if anything. Airbnb on the low. Again, Expedia got an upgrade this morning, but Airbnb back below 105. Again, it still hasn't got above 107. Boeing still at 202. And then wasn't VZ dropping yesterday? And then 3M, they could still be dumping. Yeah, 3M a little bounce off the bottom. MPW, but they're still down. Natural gas lifted off. I think oil in general is doing pretty good too. Let's see where we're at. 41.28 now. So literally 4 minutes ago, you set a new low on the day, and now you are about to set a new high on the day. Yeah, you've actually broken out of there. So again, still a little bit. 41.36 is where we closed at yesterday. Meta is now on the high. So Meta is starting to rocket up a little bit here. OMH, that was the runner from yesterday. Meta's still down 0.5%. Yeah, bonds are flooded. This is where it gets interesting. Again, up until here, they were kind of matched up. Stocks hit a new low before bonds, but now bonds hit a new low. Stocks are going up either C, because either bonds keep flushing or bonds will catch up here. And then we're just playing the lagging game once again. Apple, Horizon, HRZN. I feel like, wait a minute. I feel like people are confusing this with HZNP if this one starts running. The data, China data was bearish. Retail sales was bullish, but we went down because of the bond yields. The retail, ironically, retail sales was good news, but it was bad because it does not support a rate hike or a rate cut narrative. That was about it, and then everything else kind of came in line. MRVI takeover rumors. Maravai Life Sciences, Chad. Danny's posting that one in the chat. MRVI possible takeover. I have not confirmed yet. It's halted right now, actually. So you can't even make a play on it. So keep an eye on it, MRVI. What is this? Straight up. Straight up. We're going to do this. Remember, just every single day, every single move, until we break out of a zone that we've been in, none of this is meaningful. So, again, don't get too drawn out by the pops and drops on everything. But that's a fat rip right there. 41.34, you're 2 points away from filling the gap. Again, tech, and that's a big driver here today. All of those 13 Fs. If you read any headlines today about what people bought, again, we're talking almost 30% of hedge funds are just owning fat places in tech. Again, people like David Tepper, we're talking $40, $50 million positions on NVIDIA and other names, and, you know, high fly runners that have already went crazy this year. We found out they were buying them. So it's that's given us a little bit of the upside here, but we'll see. Again, couple more events, and today we have a lot on the schedule. So what time is it now? It's 9:45. You should be getting 10 a.m. We get ECB Lagarde, Fed Bar, OpenAI CEO, and that's it. And then 15 minutes, then you'll get business inventories and then housing market. And MRVI still halted. AMD's killing it. NVIDIA now on the high. Meta's about to go green. We watched it sell off 1.5% there right after the pledge. HD's gassing? Oh, even dude, HD just woke up. That's like 1.5% right there. Okay, Walmart's on the high now too, and then so is the SPY. Only down 0.06. NASDAQ is now in the green. Tech is up by 0.61. Communications are up 0.15, and financials are in the green by 0.3. Worst on the day now is materials. You say data dependent, but every time we get data supports the bear side, it goes up. Remember, it's not just me saying this. This is sadly just the market. So it's not like if I was the one who invented it and got to tell you it and the market actually responded, I'm sure it would be different. But then again, if that's how it worked, I'm sure that's why we always ask the questions. But today was bullish data and we went down initially. So I don't know if you saw the futures, and I don't know if that makes it make sense for you. But quite simply, retail data came in strong this morning and we sold off. Now we're back up here at cash open. So that's why I think today was interesting. And then you had bad China data that we went down with a little bit, or at least the China names. I'm going to sell Bill at the end of the month. It means nothing until we actually get out of here. I don't think any of this means anything. Again, I'm conditioned for the cuck now. MRVI unhalted. That's the takeover interest. It's only up 1%. And then Amazon and Google still continuing to hit highs nonstop. Again, Google up 1, Amazon up 1.5. I don't understand how he could possibly be close to all-time highs. Doesn't make sense. The one thing I will say is a lot of people, there's a silent narrative going along. I mean, let me ask you this. How many of you, to start off the year, thought that 2023, that this is when the recession would happen, right? Because imagine, everybody, we talked about recession for a full year in 2022. So a lot of people thought the recession was going to happen in 2023. But the fact is now we're halfway through, and there's a quiet narrative going along that people are like, no, nothing's happening in 2023 anymore. So, again, I don't know if we're going to go 10% higher from here, but the idea is just like if now you are very convinced of a recession in 2023, if it doesn't arrive till first quarter, second quarter 2024, I mean, the economy is going to keep chugging on for the next 6 months, 9 months, depending on how it is. So, again, that's only if there's no recession. I think the fact is things just change quickly. So, I'd go with what makes sense to you. Keep your conviction and don't let finicky Wall Street go back and forth, knock you out of what you believe. Other than that, though, patience will be required. Otherwise, I think right now the market is going to weed out the impatient. And I think and then you have an incentive with cash at 5% to just chill. Another boring day. Depends how you look at it. I mean, you're actually getting some movements. Again, tech is on fire right now. A lot of people are reacting to it, but it's still not the best move, and we're reacting to stuff overseas yesterday. Again, China was not good, and then HD in the morning kind of scared some people. And then retail sales were good, which kind of puts into question this whole rate cut debate that we've had. So we'll see, but you have a nice schedule today. Whatever we had today, you have a lot more arriving. Google, man, again. Giglet. Tech is hot because everyone is buying tech. Yes, legitimately the most crowded trade in years right now. I need to compare it to 2018, but apparently based on the 13 Fs, though, tech is one of the most crowded trades right now in the market compared to even historical levels. SPY getting a chicle. Baidu's trying to work its way up. Oh, I forgot you got the Pfizer bond offering too. 13F is anybody who owns like a certain amount of stock, they have to file what they own every like 30 months or pretty much change in positions every 90 days. Yeah, Baidu, that was a pretty decent candle there. Again, Tesla's come. I think you have to wait till Amazon and Google come down. That's a decent cheek lay. Again, whatever you think about the market today, if you were, again, just look at this. Again, so we hit that low. 4 minutes later, that proceeds into a high, about to fill the gap. You didn't fill it, and now you are down 14 points in 3 or 4 minutes. So there you go. Again, and then who knows after a Fed speaker or whatever else we get, just, you know. Welcome to May, my friends. Welcome to May. It's so corny now. COVID market was lit. Well, remember, I think that's what they want. There was a market before COVID, and now they're bringing it back to the boring days, I guess. But it's also May too. Again, sell in May and go away. It really does have some truth to it. Again, especially as we get towards the end of the month. But you know, we're about to approach summer. Baidu is now breaking out 129. It's beautiful. No deal today. ZI, Gordon Haskett, renewed activist chatter. Zoom info. So that's an analyst talking about it. Up 1.9. Boyle's on the high. Again, Baidu about to go to 130. NASDAQ went negative. That's crazy, man. This little move. NASDAQ went positive by almost a quarter. And then it went negative on that move. Again, everything is still red. Russell is down 1%, though. And I think healthcare is contributing to that. But regionals are green. They're at the low right here. XLF has gone red now. Banks are down 0.5. They were the second best. I still have my Baidu, yeah. JPM down 0.3. Microsoft holding up 1% like it's nothing. Apple popping now. So just watch out for that. Again, all your big tech, it's one of those. This is like that day a couple of weeks ago now where the breadth, where you're just going to have a couple of tech names kind of lead. And then again, if HD and energy could bounce, that'll hook up a couple. And HD did recover a decent amount. PBR 3.7, Dow down 1.5. I see Dow down 0.5. I see Russell down 1. Yeah, this is crazy. Are you guys? I don't want to tell you this. You're gonna get pissed off. If you were already like, what the fuck, man? Are you ready for this? Right here, right now, on the S&P 500, there is 50 names that are in the green. 452 of them are red right now. So literally, 10% of the S&P is up. And then let's check the NASDAQ. That one's probably doing a little better. Yeah, interest rates have spiked again worldwide today and as a result of even our data. And then for the NASDAQ, you have 800 names in the green, 1,900 names that are in the red, and 815 names that are break even. So again, the breadth is this is just a couple of names leading you today. I think it's the 13F effect, low key. I didn't think it would even be that big, but I think just because it's big tech, you're getting people excited. BlackRock calls staff back to the office 4 days a week. McCarthy says work requirements are a red line on debt limit talks. So watch out, because now, sadly, bonds and stocks are matched up in a very weird way. SPY is down 0.39, 37. Bonds are down 0.37, 36. And they both kind of have the shape trading near their lows. Actually, stocks are lower. Bonds are right at their opening. Stocks are slightly lower. Zoom info is running. Again, Danny just posted that Gordon Haskett takeover stuff, or the activist investor. Yeah, Zoom info is going there. That's 7. No, it's just up 1%. Yeah, Zoom info is gone after that. Ulta 2.5, Nike again. Most names are down. Again, materials and energy now are the worst. It was consumer staples. Zoom Info, that's it. That thing's gone, bro. That's 9% right there. That was great. I have the XOM from the random play. Yeah. I feel like I should stop watching the stock market until things get better. I mean, listen, I want you to be here. You know why? Because I'm here every day and I don't want to be alone. Okay? So that's the first thing I will say. But second, if this shit's fucking with you, walk away. I could definitely get behind that. I don't think there's ever anything wrong with taking a break with it. And just in general, it's just like this economic situation is frustrating and it should get, it's not easy. It's, the movie The Big Short made it look so much easier. You know what I'm saying? Again, even Big Short guy is gambling on bank stocks right now. So that's what you got to keep in mind, though. It's like if it's either take a step back, listen a little bit more in the sense of not to me, but kind of just understand how slow things move. But if it's like bothering you and getting you in a way, you're getting in trades, and even if the trades get you frustrated, all that, just take a step back. 100%. You will never learn by walking away. I agree, but also too, what's worse is building a bad habit. The last thing I'd want to see people do is again, that's what I'm saying, like building a habit of getting frustrated, of the market doesn't do what you want it to do, and then you freak out, and then you bring the emotions into your personal life, and you know what I'm saying? It's just like, that's building off of a bad habit. So if that's still messing with you, you might want to take a step back and just see. And then too, you could also observe the market with less on the line, and you might see it a little different, or just play it really, really small. TGT, a lot of staples, Apple's coming down, but a lot of those consumer staples rocketed, and bonds just hit a low. And compare this to yesterday, so it's simple. It's either bonds are going to keep dumping and the market's going to follow, or market bounces, bonds hit a low, and then markets start bouncing with it, or bonds start bouncing with it. I've not looked at Tree. No, it's a rate play. How so? Data in 2 minutes. Yes. Business inventories and housing index. Shouldn't move us too much, but let's see. Again, bonds are already moving off it. Just keep in mind what I just said. Watch for either the bonds to flush or the bonds now hit a new low and then go with the market. But we're going to see. It's matched up good. Now bonds are down more than the S&P. And then NASDAQ's at 0.08. Russell's down 1%. I'm in ZenV from yesterday. Yeah. That play's fucked. Make volatility great again. Well, that's the thing. I'm in the gold play for any of the debt ceiling stuff as we get hyped on that. But, the VIX could also be another play. Some people are expecting the VIX to start going up there. Do I still have close family in Egypt? I have most of my family in Egypt. So we have more of the Answers family lives in Egypt than in America. International VC. The last time I got close to international investments, it was actually China. I've actually never done an investment in Egypt in my life. And 10 seconds. Get ready. Again, Target just went green after down 2.5%. Again, even HD as well. That was actually crazy. And then Baidu's running, HD's there. Data. Housing index went up by 5. Estimate was 45, came in at 50. And then business inventories dropped by 0.1. Estimate was 0. So kind of bullish for the consumer, but if anything, no surprise there on any of those. Again, housing market, where's 50? It's a nice recovery in housing, but still low. So that could be the negative side for inflation, but nothing too crazy. Yeah, it's 50 for the home building index. All right, we'll see. Again, bonds and stocks haven't really moved off of it. I think one of them is going to take the lead. Again, Target now, HD. Bro, any of the earnings plays that were down right now, they just got all bid up. TMDX. Tesla was at the low. They're popping. So first little reaction, kind of pointing down, but then bonds are trying to catch a bid. TMDX. Transmedic Group up 0.61. Where's AMD? AMD still 3% at the high. Yeah, I don't think any of them are slowing down. Again, even though we're down, there's a lot. Like I said, it's that 10% of stocks that are in the green right now. Those names are holding up. Data came out as pretty much nothing. Again, business inventories could be slightly bullish. They dropped a little bit, a good sign of demand. And then housing index went up by 5 for home builders. So that could be bearish, again, in terms of inflation. If people start to build again and home builders are like, yeah, more high prices. But other than that, I think the data in the morning gave you more of a reaction. That didn't move shit. That didn't, no instant bond reaction, no instant stock reaction, gold, oil, nothing really moved off of that. So I think that data's borderline a dud, and now get ready for the Fed speakers and everybody else. A Bud Light influencer backlash shows no signs of letting up. Bud Light sales volume and sales declines have worsened, according to latest industry point-of-sales data, suggesting that the transgender influence backlash is showing no signs of letting up. ADRs are down 1.3. So the recent data shows that declines in Bud Light dollar share, volume share, and sales have continued to worsen. Bud Light's market share slid continued in the latest of the Circana market scan to 8.3 in the 4-week period, compared with 9.1% a week prior. And then shares are down 9.6 since March 31st versus TAP, which is up 22%, and S5 Cons up 2.1. Yeah, the chips, I mean, the logic was that chips first, they were oversupplied after the undersupply, and then they're like, oh, we got to lower our prices, we got inventory, and then half of the chips got into AI, then the other half didn't. So one, a lot of the guidance on chips was very low after the crash from August of 2021 or 2022, but then it was really half of the companies started talking AI and getting demand and customers, the other half didn't. But that's part of it. Again, AMD and NVIDIA, like you got to realize, even yesterday on the 13Fs, all of the people who were buying like NVIDIA, all of the references were towards AI, or at least that's how the reporters described these purchases, just an AI wave. So sadly, some of the chips, I mean, when you're looking at why they're up in the valuations, even if they had problems in the last couple months, some of them are trading off of future expectations of AI and how it's already kind of garnered a little bit of business in that direction. We're definitely in an AI bubble. I think AI is going to be useful. Like I said, I think some are going to actually remain, but it's definitely a bubble. Just I don't even think I need to explain it to you. You see it. You bought COF puts right at close 5 minutes before Warren's 13F. A lot of people bought Capital One. That's just bad timing. It's okay. I feel you, though. What time is it? 7:05. Still very early. Did I read Kolonovic's new report? Was it hit? I read the other guys. There was the other guy saying that it wasn't Kolonovic. He said the opposite. He said 0 days are stabilizing the market now. So one guy at JP Morgan, Kolonovic, is like, oh my gosh, it's going to crash the market. And then another JP Morgan analyst is like, nah, it's actually stabilizing the market. Google may delete accounts if not used for 2 years. AMD still going. NVIDIA got a cheek lay. The one thing here, last 5 minutes, 4 minutes since the data, bonds hit another low, stocks aren't. So if bonds go down and stocks do their own thing, that'll be great. We haven't seen that one since Powell. But for the most part, I'm feeling that they are going to move together here. How many Fed speakers? A lot. Even today, you have Fed Bar, but that's for the SVB, House Financial Services. But then we have Fed Barkin in 30 minutes, and then in about 2 hours, hour and a half, Fed Williams, and then 2 hours after that, Fed Goolsby, and then an hour after that, Fed Logan, and then at night, Fed Bostic and Goolsby. So that's already like 5-6 people here just today. And then tomorrow we get a couple of more. Thursday, John Williams again. And then Friday, Ben Bernanke and Jerome Powell. But like I'm saying, yesterday, even you're watching the stupid moves here today already. I don't think we're going to actionably move until Powell. I think you need Powell. Most of them have said the same thing. So I'd pay attention to the voting members. Whoever's a voting member will probably have more impact. But low-key, until we get Powell, I don't think anything actionable will be said, or that's it. No real update. Powell? This is Powell's opportunity to address the market following what happened. And again, he might not even use the opportunity and just say the same shit he's always had. But there is a theory. Do we got likes? How many likes do we have? How many likes do we have? Let me give you some good economic Fed theory here. Oh, 800 likes? You guys are looking like you want to get 1,000 likes. I don't know. Maybe I'm judging. I shouldn't be that judgmental, but you just look like an audience that has 1,000 likes. I'm just saying, you guys look like you guys are in the upper income bracket of likes. It looks like there's a beautiful, beautiful, beautiful crowd out here today. I'm just saying, I think you have it in you. I don't know. Maybe, correct me if I'm wrong. Correct me if I'm wrong. I think you guys are ample with likes.
Yeah, it's great. They're ample. He's looking terrific with likes. You guys look amazing. All these likes everywhere. Wow. It's amazing. Oh, there you go. Thank you.
All right. So here it is. Fed theory. So this is a quiet one. This is what sucks, man. Honestly, I hate this in this market right now, is because like low key, there's so many different theories right now, but they have different volumes. So just keep that in mind, okay? There's a lot of loud people in the room, and you have to deal with the media, and you only get certain things, right? So certain things are louder. Just keep in mind the volume. But this is a quiet theory going around right now. I believe this one was outlined by Ira Jersey of Bloomberg. He's one of their bond market strategists, the head. And what he was saying is that there's a good chance, or at least this is what you should be worried about, is that Jerome Powell in the Fed, if the market does not begin to unprice the rate cuts, then Jerome Powell and the Fed, they have to come out with a hawkish mouthpiece. They have to talk it down very, very hawkishly. So essentially, when you look at the bond market and the Fed futures, they are very sticky, and they are stickily pricing in that there's going to be a rate cut, right? And even if Powell, every single Fed member so far said no, data dependent, no one's talking about that. So what they're saying is that the only way that you can get the Fed odds to reprice back to what the Fed is saying, one, you need the SEP in June, but ultimately a hawkish Powell and a hawkish Jawbone will do the trick like they've done in the past. So pretty much right now, just as long as the market keeps pricing in the rate cuts, I mean, that could open up different potentials from what you hear from the Fed. So that's what we're keeping our eye on as we move forward. Not to mention everything else. Young debt ceiling. SPY going lower, though. That's even gold dropped on that. I didn't even check oil. I think Bitcoin's been somewhat stable. That's a new low of the day, 41.21. We have yet to hit 41.19. Yeah, oil dropped on that. Gold dropped on that. I think everything dropped. So, again, that's a pretty decent-sized candle, 41.27 to 41.19 now. That's another 7 points. So, both of these little things were huge. This move was gigantic. That was 15 points. This one's like a solid 13 points. So, I don't know if you feel it, but the moves are actually pretty big here right now so far. You're down 0.4 on the SPY, 0.6 Dow, 1.1 on Russell, and then down just under a quarter on the NASDAQ. Tech is still in the green, though. Tech and communications. I have not looked at Ford. Meridian Capital takes 13% stake in Petrotal. Yeah, Ford is at the low. SPY still going down again, back to 41.19 now. Can you explain the debt ceiling to my bro before the first week of June? You want the easy answer, or you want the like super macroeconomic nerdy answer? Because the simple answer is that the government has a paycheck and they have 2 weeks until their next paycheck, but then their rent is due on June 1st. So unless the landlord, a.k.a. Biden and McCarthy, come to an agreement to extend your rent, then you get evicted from the whole entire economy. That's the easy answer. So by June, so pretty much there's $80 billion left in the Treasury. They have $80 billion of available capital right here, right now, updated as of Friday. We will get another update this Friday. They have $88 billion, and by June 1st, they will lose all of that money. All of that money will be spent. So if there's not a debt ceiling extension or a raise in it, then we will default and then lose. The nerdy explanation starts with, first of all, it's never going to happen. It will never happen in history. It has never happened. It does not happen. We are not a deadbeat nation. That's where the first, if you want the nerdy answer, you have to always start with that. So you have to start with that one. It will never happen. And then we have to bring up the history and talk about the difference of 2011, the difference between a downgrade and a default, and what happened in 2011, and how this started about 6 months ago. And 6 months ago, Janet Yellen in the Treasury, they issued something called extraordinary measures, which meant that 6 months ago, they knew they were going to run out of money. They knew they were going to lose their job, right? So 6 months ago, they started moving money from their checkings and savings to make sure that they had enough money till today. But now that that money is now ran out or dwindling without a decision, then the economy and market is put at risk. And why the market and economy would be put at risk? Because if there is a downgrade on United States credit or a default on United States credit, it will totally upend the entire bond market. It will raise rates and tighten the economy more than any rate hikes could do. And then everybody would tweak out, as it would be the first time in history that America has not paid its perfect credit. So that's, I don't know if that's the I still think I'm missing stuff with that answer, but yeah. I hope that helps. Senate Blumenthal uses ChatGPT in opening remarks at AI hearing. Wow. That sounds fun. And then Michael Barr. I want to see this. Let's see.
Severe, terrible, continue to haunt us to this day. I don't know the answer to that question. I don't think any of us in the room know the answer to that question, because I think the answer has not yet been written. And to a certain extent, it's up to us here.
Yeah, I'm not doing this. Not today. I'm not going to sit in a room with like 80% old people of one demographic who don't know shit about this, argue with each other, and then make obscure rules about it. So I'm out. I'm going to respectfully retire that one. I just wanted to hear him sound like ChatGPT. But we have Fed Bar. I don't know if we're going to listen to that. Again, it's the Senate panel over SVB. I believe that is starting already now, too. And then SPY hit a low, and then bonds bounced. So right here, that was the second low. And then from here to here, bonds bounced. We went a little bit lower, and then now it's trying to figure it out. But the shape on intraday looks almost the same. Downgrade happened after the debt limit. No, it happened leading into it. So coming into the debt limit expiring, there was less time available, and then we got downgraded, and then that's what caused everything to react. again, the reason why back then, even back then, the stock market was ignoring it. But then the stock market, once there was a downgrade, everybody was forced to react. And that is the dilemma that we are entering into now. Because again, the market still doesn't believe anything is going to happen, and rightfully so. But the problem is that usually pretty much the less the stock market reacts, the more that Biden and the Republicans are going to be able to play political games. Why? Because if the stock market's not reacting and there's zero consequence, you're going to fucking take your sweet time. You don't give a shit. So that's the new dilemma now. Again, as we enter about 2 weeks into this, people are waiting and they want to see, okay, is the stock market going to react? But once the stock market reacts, you will get a resolution. Again, that's what happened in 2011. They downgraded, and that moved the financial markets viciously. And as a result, they came to a swift conclusion. Tech is the only thing up today. Literally, everything is in the red right now. Information tech is up 0.19. Again, S&P, there's only 50 names in the green. 450 are in the red. So it's kind of another one of those days. That could flip by end of the day. You got to realize by end of the day, if energy bounces, real estate, consumers, that could change. But as of now, the breadth is majorly sideways. Just we're being led by just a couple of names here. I mean, it's not like we're even being led. I mean, the Dow's down 0.7, SPY down 0.4, NASDAQ down a quarter. But this would have been a lot worse if tech wasn't just absolutely ripping. Yeah, AMD is crazy. Yeah, Tesla just woke up a little bit, and then HCMP, Horizon, they're on the high again. They had was it Avago deal? Or Amgen? Cisco, are they about to report? It's a small mover. It could be a good play because it's a small mover. I think their last earnings, though, got them out of their little hole, right? Or no, it was this one. Last earnings brought them back down because they were struggling a lot last year. So I think but it's a small mover. That's the best part about it. We'll go over the earnings preview later today. Shopify's on the high. KDNY bounce after Muddy Waters takes short position. HZMP on the high. Shopify, ServiceNow. Chinook Therapeutics. Oh, wow. Short report and then new high. It seems like that kind of day. NV. And then Baidu came down. Come on, Baidunius. Sad to see everyone move money into tech. Seems like chasing. I don't think it was a lot of people. I just think it was a lot of money. Does that make sense? Like, it's not. I'll just tell it, like, one David Tepper buying NVIDIA is equivalent to, like, 1 million of you guys. That's it. Even 1 million of me. Of everybody. That's ridiculous. More than that. Like, you have to realize David Tepper bought $40 million of NVIDIA in one. That's one position. That's half of Michael Burry's holdings were thrown into NVIDIA by themselves. So that's pretty big. Again, I think the amount of money that came in, I think that's the real thing. What price? You have to double check. You could run the numbers. Just go look at how many shares they have divided by the dollar amount, and that'll give you an idea. AI turned around. Google's on the high. Again, SPY's right below VWAP. Bonds and stocks kind of look the same. Google's still going. Too much greed or FOMO or just a handful of stocks. It's healthy. I think it's a mix. I mean, I don't know. I don't think I do think there's a lot of greed, but it's also like I see why people are doing certain things in a way, in the sense that you have to be really confident nothing is going to happen. That's it, in 6 months. Because if nothing gets worse or nothing gets bad, I mean, that the ship is still going to be chugging along. That's the only problem. So I think as some people are getting very, and then again, don't underestimate how people could hedge too. You know, you may be like some of these people may be buying massive amount of tech stocks right now. I wouldn't be surprised if they had certain hedge positions with stuff like bonds and other things. Amazon, Apple, they did good. Apple gave up a little bit from the high. Apparently, companies are hitting decade lows while others are flying high. Yeah, that's the volatility for you. Exactly. I think it kind of just shows the disparity between the whole entire market. Like legitimately, you have stuff at decade lows, stuff near highs, and everybody feels, you know, that's a very strong split to say we're going to buy these at the all-time highs and sell these at 10-year lows. You know, it says a lot about how people feel about certain things. And again, not to even mention the sentiment and then even fear or not. Let's see where Tesla is. Again, we're still holding. What time is it now? 10:30. Next set, Fed barking. We'll be at 10:30, so in like 8 minutes. 8 minutes, Fed barking. And then 11:30, bond auctions. 52-week bills. Agreed, bought upon by complacency. Yes and no. I mean, again, like the fact of the matter is, what I'm trying to say is like if you had a lot of money and you're not putting it to, remember, the idea of having money is to let your money work for you, right? If you have money and your money is not working for you, you're not doing something right. So where are you going to put your money for the next 6 months? Now, it makes sense why people, you know, the greed could be, well, why don't you go and get, you know, interest on the dollar? Why don't you buy bonds? And some of them did. But then again, too, you've also seen big banks get blown up by buying bonds in big amounts. Oh, that's real. Oh, you can never get blown up off of that. Bradley Frizzle and the Peach, ladies and gentlemen. It has arrived. Peach Nation, get your ass up. Horna, let's go. Wow. Let's go. Oh, my gosh. Oh, my gosh. God bless you, Bradley Frizzle. Thank you, Bradley Frizzle and the Peach Nation. Get your ass up. Google's loving it. Google's hitting a high off that. Wow. Wow. So we needed. So what we needed. God bless you. And then, what's it called? But like I was saying there, just quite simply, I mean, I think some of these people need to just put their money to work. Because if you don't have anything for the next 6 months, then, you know, if you don't let that money go to work, then there you go. Maybe the greed arises from the fact that they're probably going for equities rather than a 5% safe bond. But then again, just time. Sam Altman speaks at Senate hearing. I've never seen this guy. I think I have, but I haven't. Oh, yeah, I've seen him.
Technology advances, we understand that people are anxious about how it could change the way we live. We are too. But we believe that we can and must work together to to identify and manage the potential downsides.
This is the CEO of OpenAI.
Enjoy the tremendous upsides.
This is the CEO of ChatGPT.
It is essential that powerful AI is developed with democratic values in mind, and this means that U.S. leadership is critical. I believe that we will be able to mitigate the risks in front of us and really capitalize on this technology's potential to grow the U.S. economy.
Yeah, he creeps me out.
And I look forward to working with you all to meet this moment.
He reminds me of SBF.
Thank you.
He really does, 100%, Danny.
Thank you, Mr. Altman.
He reminds me of SBF.
Chairman Blumenthal,
Sam Altman-Fried,
and members of the subcommittee, thank you for today's opportunity to present. AI is not new, but it's certainly having.
Everyone creeps you out. I don't say everybody. I like a lot of people. I say that a lot. If I say I like them, if I was like, I like TD Jakes, you know, I can name. I like the Apostle Paul. He don't creep me out. He look funny based on historical, you know, representations of him. But I fuck with the Apostle Paul. You know what I'm saying? Like, there's a lot of people that I'm sure that creeps you out. Like, you know, it's good. That guy. I mean, he remind me of Sam Bankman-Fried. Yeah, OpenAI tests and reviews any new systems before release. That's what he says. That's a headline. HCMP, it was moving up everything though, man. There's a lot of things that started off very low today that just started going nuts. HCMP was one of them. Tesla's on the high now. Again, Google was already going crazy. What do you think about wheat? I think wheat's going to be done until the second wave comes back. So just wait. I mean, that's it. I'll just tell you this much: if the market does rally, if we get through whatever we're getting through here into 2023 and 2024, and there's no recession, then inflation is going to skyrocket. So then I think that's the time for wheat. Otherwise, not now. It's planting season. Indeed. Again, I mean, and they just, dude, the politics of everything is crazy. Like, just ever remember 2022 was wild for commodities, but do you guys realize how many changes happened since then? Like, do you guys realize from like 2022, the beginning till the end, they changed the way that the oil was shipped, the laws, the limits on electricity, a deal on grain. They brokered how many deals with other countries for wheat. Like, a lot of the pricing stuff changed. So even if it is planting season, just keep in mind, until we get that wave of inflation, they've already responded very heavily, the governments of the world, to all of the commodity pricing. So I think I'll give you a good example. Yesterday, you had news that that we're buying 3 million barrels for the SPR. So to give you an idea, we sold over 200 million barrels. So yesterday's announcement was very, very small, right? But this is where it gets better. We announced that we are buying 3 million barrels for the SPR yesterday, right? But do you know what else we did yesterday that was already pre-scheduled and that already occurred? We also sold 3 million barrels from the SPR yesterday. So welcome to the paradox. I was thinking about that the whole time. Oh, what's that? Is that Barkin comments? Barkin's about to speak, and I'm getting a pop in bonds and stocks right now. I don't have any headlines yet. Could be Barkin pre-written statements. I'm not seeing it yet. Tesla running, and Google. Tesla's already at the high. SPY is now bounced up. It kind of looks like the bonds, but this is still a low of the day for the bonds. And then SPY is now back up to the opening candle. Yeah, Tesla's woken up here. And then Tesla shareholders have major governance calls to make. Voting for the annual meeting is scheduled to get underway at 3 p.m. And then Sam Altman, government regulatory intervention critical to mitigate risks. So watch again. Barkin should be speaking here. Might get something. Well, yeah, like I was saying, though. So to give you, I mean, until there's like broad external pressures that make it, you know, unequivocally that commodities are going to go up. In the meantime, there's just a lot of confusion. Just again, we're buying barrels the same time we're selling them. You don't know what's really happening. That's it. They could be, you're thinking they're adding barrels to the SPR when they're selling the same amount they're buying. They're buying not even 1% of what they sold. So it's like, it's a weird, and then you have no idea what's happening every single day, not to mention how the changes, what's being honored, what's not. Again, even Russia, don't, you know, I hope you understand. I'm not saying this to, you know, criticize every other government when it's like, you also have fucking Russia doing the same shit. Don't get it twisted. Russia is saying we're cutting production and then shipping 9 million barrels a day. Like, it's not, none of it makes any sense. Everybody's lying. So the fog around the whole situation is very, very, very foggy, more or less. I think you need the external to really open up that door and make it clear again, like the first time we saw wheat and commodities go crazy. The fog is dense. Yes. Twitter sued for allegedly helping Saudi Arabia silence critics. Fed Barkin says demand is cooling, but not yet cold. All right, Fed Barkin now. Let's see.
Or at least get us moving back down towards your 2% target?
Well, there's a plausible story there that combines the things I was just talking about and add, credit tightening to say they're going to bring demand down and in time bring inflation down. I think that's a plausible story. I'll just say for me, I'm still looking to be convinced. I still see core inflation or trim mean inflation in the month-to-month 0.4% range, which implies we're sort of operating at an annual rate of around 5. And I'm still looking to be convinced that demand will come down, and then, of course, that will bring inflation down at a pace that won't erode expectations.
Well, what then becomes the tactic you would use? Do you think you need to probably go into the June meeting leaning towards a rate increase, or do you want to pause, see what happens, and start again, even though some people have said you don't want that stop-start?
Well, I like the optionality that was implied in the memorandum that we did, the statement we did after the last meeting. Obviously, in this period, even this month, we're going to have a full month's worth of data coming. You've got questions about the debt ceiling and what impact that might have. You've got questions about credit tightening and how significant that might be. So I think it gives you time and optionality to say either there's still more we need to do, so let's do more, or it's still okay to wait and we'll wait a bit. I think you have optionality either way.
So we put you down as undecided for the June 14th vote?
Put me down as tracking the information, tracking the debt ceiling, tracking credit tightening, and we'll make a call when we get closer to the meeting.
You've got some big banks in your district. When the Fed raises rates, banks always tighten credit standards, loan demand goes down. So the question is, are you seeing anything, or are they telling you they're seeing anything because of the bank issues we had in March that is worse than what normally would be expected?
Well, I've actually talked to all the banks in my district as best as I can. Deposit flows are stable. They've invested, of course, in making sure their liquidity is locked tight. I'm encouraged by the resilience I'm seeing. But I do then ask them about credit, how they're thinking about credit. And of course, if you're in a situation where deposits are repricing, that does mean they're going to look at the marginal credit a little bit tighter. And that could be the marginal consumer credit, certainly commercial real estate. Folks are telling me that credit's hard to get in that sector. Small businesses. And then the only other thing you hear this particularly with the smaller banks, is they do worry about margin in the context of deposits being a place of so much attention and obviously repricing.
What about commercial real estate? There's a feeling that that could be the weak point for lenders this cycle. Are they expressing undue concern, or do they see this as kind of a normal cycle?
Well, commercial real estate's a big sector, and so if you're in industrial or you're in retail or you're in multifamily, I think folks there feel the normal everyday pressures, but nothing out of the ordinary. But if you go to commercial office, particularly downtown commercial office, particularly B and C downtown commercial office, particularly in cities like Washington where people are not back to work, that's where you hear the most concern. And I think folks are concerned until occupancy rates get back to where they were beforehand. I think they do worry about valuations.
Well, are you concerned as a policymaker about the damage that CRE issues could do to the economy, or is it just kind of something at this point that is in the mix?
Oh, I'm watching that closely, and I think that is a vulnerability. Now, it's not an unknown vulnerability. We've seen commercial real estate challenges before. We know how that plays out. We know what to track, what to monitor. And we know that happens over time, not in a big fell swoop, but it's certainly a vulnerability that I'm focusing on.
Unemployment is not behaving as the Fed forecast it would. How are you thinking about that now? When you go into June and you do a new projection, are you still going to see unemployment at 4.5%, or do you think it comes down?
Well, the job market, 3.4% unemployment, maybe we're no longer red hot, but we're certainly hot. And some of the secondary indicators may be softening, quits, claims, but the unemployment rate is still a critical variable here, and it's still quite hot. So that's how I see it, and therefore it has not softened as much as I would have imagined 3 months ago. So I'd imagine my forecast will come down a little bit. One thing I'm watching closely is the professional segment, because if you look at the layoff notices over the last 6 months, they by and large haven't been in the sectors that they used to be. Sectors like construction or manufacturing or even frontline service workers, those places are still tight. They've been much more support and overhead technology kind of layoffs. And the unemployment rate in that group is quite low. The propensity to file for unemployment is quite low. So one thing I'm playing around with is the idea that maybe unemployment won't spike as much as normal, because the folks who are being displaced are folks with less propensity to unemployment and a faster ability to repot.
Well, what are CEOs telling you in your district about their labor plans? Are they hoarding people because they're hard to find, or do they think maybe we aren't going to go into recession, so there's not a need to let people go?
Most of the folks I talk to do anticipate some sort of a downturn coming over the next few quarters. They've got the recession playbook out and they're working it. But when it comes to downsizing, I think they're quite cautious, and it's exactly the reason you talked about. They fought tooth and nail for 18 months to try to find workers and hold workers and retain workers. They're just reluctant to let them go. That's particularly true, I think, in frontline service workers, manufacturing, construction, places where they're just concerned there's an overall shortage and they just don't want to have to go back to where they were 18 months ago.
Are they still paying more to attract workers, or is that trend starting to slow?
Frontline pay is still elevated, still high, but absolutely the year-over-year rate of increase is coming down. And when I said that's moved from red hot to hot, 18 months ago there was desperation. You really couldn't get the job done. Now folks are getting the job done. It's just a question of vacancies or concerns. Attrition rates are down. And so I think the pressure on compensation is down.
What about on the price side? Are people finding a limit to their ability to raise prices, or do we still see that trend continue?
Well, most people think if there is a recession 2 or 3 quarters down, they're not going to have the pricing power that they had last year. But they're not going to give it up without being forced to give it up. And if you look at a lot of the earnings reports over the first quarter, particularly in consumer goods, you saw a lot of companies with prices up 10 to 12%, maybe volume down 0 to 2%, and therefore revenue up 10-ish. And folks who have that business model aren't going to stop increasing price until customers or competitors prove to them they have to. And so that's, I think, what you're going to see is there are places where price increases have stopped or stalled, but there are a lot of places where they're continuing. And that's what's behind the elevated inflation we're seeing today.
So when you put it all together, how would you describe the economy? Is the soft landing still a good possibility? You said most people that you talked to are forecasting a downturn, but what do you see?
Well, there's a plausible story that we get inflation down due to a lot of the actions that have been taken in the past, both ours and by others. But like I said, I'm still looking to be convinced on that story, and it may take more.
Now, when you say you're looking to be convinced, do you think it's a good idea to stop for a while and then start again? Because that sends mixed signals, according to Chairman Powell.
He's asked him this
or
twice.
Is it better to be cautious because
he's trying to get it out of him
much, and you don't know the full effect of tightening on the economy?
Well,
they're trying to get a headline.
I think the message sent in the last statement was one of optionality. It wasn't one of a pause or a peak. It also wasn't one of a predetermined course that we were going to increase if we have to. Uncertainty's high, environmental uncertainty, and also uncertainty about the impact of what's happened to date, lagged effects of rate increases and the like. And so I think in the context of that uncertainty, a path that is cautious but not stuck would be a good way to put it. So I do want to learn more about what's happening with all these lagged effects, but I also want to reduce inflation. And if more increases are what's necessary to do that, I'm comfortable doing that.
The idea of hold for a very long period of time, I assume you're on board with what everybody has said about that. You get to a certain level and you're not going to be cutting rates anytime
Yeah, the headline.
soon. But if inflation comes
The
down
headline
quickly,
from that says Barkin
would you
says
cut rates?
last
Obviously,
FOMC was one of
if the debt ceiling
optionality.
goes over the cliff, you might be forced to. But is your preference to just get up to a certain level and stay there?
The Richmond Fed's done a lot of work on the lessons from the 70s. Number one lesson of the 70s is don't quit too soon. And don't back off of fighting inflation because you're worried about what the other consequences might be. And so I definitely buy into that school. I think you want inflation put to bed, and put to bed finally and firmly. And if you don't do that, it'll come back higher, and then you'll end up doing even more damage. So yes, I'm in the world of let's make sure we have convincing, compelling evidence inflation is behind us.
Now, the Richmond Fed has, like everybody else, bank examiners there, and you have some big banks in your district. Does something about the banking supervision practice need to change, you think? We have Michael Barr up on the Hill today. Is there something from the regional president's viewpoint that needs to be adjusted?
Well, I don't want to front run whatever he's saying today, but I read his report with great interest, and it resonated to me. And so I certainly think the parts on supervision that are practices in our world and other banks, I think those are worthy places for us to push.
Tom Barkin, thank you very much. The president of the Federal Reserve Bank of Richmond, joining us from Amelia Island and the Atlanta Fed's Financial Markets Conference. I'll send it back to you.
Thank you.
Thanks so much to Richmond Fed President Tom Barkin and our own Michael McKee in his
Tom
natural element.
All right, you got a couple of headlines. Barkin said he's willing to raise rates if necessary. He said what I said on the other one. He said it's optionality on the last meeting. Bonds kind of reacted, but not anything too crazy. I think the real question is whether or not the market is going to actually process all of what's being said here. So, again, AKA stop pricing and rate cuts. But we'll see for now. We stopped tweaking out from earlier. Again, today you already witnessed like 2 3 minutes, 15-point moves. The bonds are near the low. SPY is the same percentage, down 0.45, same as the 10-year. NASDAQ is still down by 0.10, and then Dow 0.7, and we still got more. Fed Barkin says he wants to put inflation firmly to bed. So now we have him out the way. In about an hour or about 50 minutes, you're going to get the bond auction. And then at 12:15 Eastern, you have Fed Williams. That one will be big. Fed Williams is pretty much the number 2 next to Powell. So that one's going to be exciting. And then again, bonds still lower, where it's kind of the same setup as right here. If you guys remember, the first time we started hitting a low on the bonds, the market didn't really react right here. So we might hit a new low on the bonds. If the market bounces, watch out. But again, everything matched up and moved small enough where any 30-minute move could change how we close. So there it is. Bonds going lower. Stocks getting a little green. Let's see how long that lasts for. NASDAQ is still in the red, though. Have you ever owned land in a foreign country, got offered to buy 2.4 hectares for cheap? Never individually. Again, if I've, like, any projects I've done other places, I've had partners who are residents of the area. So if you're not, like, if you don't have a partner who's a resident of where you're buying the land, or you really, like, know the local laws and regulations, I would shy away from it. But it really depends on the opportunity. But hopefully you have somebody as kind of a guide and a partner in the area. And then, again, you got that little pop there. Bonds, 10 years still at the low. It's crazy. This is actually going to be the lowest bonds have been, I think, even since Powell. Yeah, this was Powell. Those were those 3 days. So we're actually up more on the bonds than any other time since Powell. And then we're going to see if it gets to the pre-low or the yield high of before Powell. Whoa, G-sit on the low. And then Tesla's still running here. So another Tesla rally. They're actually up 1%. Bonds are going lower, and SPY's trying to make a move to VWAP. G-sit, GSI Technologies, they're down 20% right now. Upstart's starting to wake up, still down 3%. Home Depot, 1.9. They came up good. Baidu's still kind of up, but less than 1%. Gold is playing hard. I know, right? But either way, I think gold, it's looking at it, I think there's only 10% upside. But it's good if it comes down. But what I'm saying is that pretty much if the debt ceiling, it's because gold has already moved a ton. But it's like pretty much what I'm trying to say is if the debt ceiling becomes a problem, I could see gold going up to like 2,200, maybe 2,300. If you have the worst case scenario. If not, keep in mind this is a pretty high price for gold right now. So until then, but I think as we get closer to the final week ahead, I think gold will start to do its thing. Altman says GPT-4 will automate away some jobs, but create new ones. Oh, yo, I got a crazy anecdotal story for you. Actually, I forgot. I got one, bro. I got one. You guys already liked the video. Can I just get 50 more? If y'all got 50 likes, like I said, y'all looking very wealthy in likes. So, but I got a good one. Oh, man. Somebody told me something yesterday, and I want to share it with you. So I got to put like a 50 like price tag on it. You know what I mean? It's really good. It's really good. It's actually mind-blowing. It's related to AI. Oh, you're going to love this one. All right, are you ready? No, it's not Lendington, believe it or not. But it's good. It's good. It's good lending. I'm telling you, it's good. It's comparable to Lendington. But it's a story. That's all. It's not even like a story. It's just what somebody told me. So I have a friend of mine. Oh, excuse me. He owns a very large like job recruiting company. Okay? So this guy gets people jobs. He has fat contracts with like Boeing, Lockheed Martin, and a lot of even like Nike, Coca-Cola. Like he's a recruiter. He sends a lot of big name companies jobs, right? So he owns this company, and guess what he told me the biggest problem he has seen lately with AI? It's actually mind-blowing. He said this is the problem with all of the tech jobs that they're trying to fill, is that they've discovered that there's a brand new problem with everybody's resume. Not the same template. No, it's not there, but there's something about the resume. It's not that everybody copied them. It's actually mind-blowing. So, what he has came to found out is that a lot of people Like, he's saying at least 30%, which is a fat number for some of the tech jobs. But he was saying that these people, a lot of them, are now starting to lie about their experience because AI can do it. So pretty much there's people who had AIs, they put them in their staff positions, and they said, oh, I know how to code. I know how to, do this certain analysis. I could go back and I could back test code. I could do all that, right? So that's what they put on their resume. They get recruited. They get put into a position. And then come to find out, these people had zero coding experience, and then they were just plugging it into ChatGPT. Yeah. So that's what he was telling me, because he was saying how, like, the problem right now is people's resumes. You don't really know if people actually possess the skill that they're putting on their resume, because now a lot of it's getting automated by ChatGPT, and some of these people don't really have that skill. It's crazy. It's crazy, but no, it's real. This is what he was. I was calling him about something else, and then we started talking about AI, and then he brought this one up. I was like, damn. The Mickey Mouse experience. So more jobs will be like coding. It just depends what it is. It just it's a crazy concept, but it's like, because I told him first, I was like, oh, like, are they saying they know Excel when they don't? And he laughed at me. He was like, no, we're talking like real big tasks. Because for me, like, I don't know Excel that well. I bet you I could put it into ChatGPT and I could become an Excel pro. But he was telling me it's like actually high level positions and stuff where it's like they actually need somebody to do the work. And then people are just saying they can because ChatGPT can. Walmart. Let's see. HD, SPHR on the high. Pan W. Amazon again. Amazon's at 113.50 now. My goodness. Williams is going to be at 11.30, I think. I don't know. I just had it up. Or 12.15. $12.15 for Fed Williams. And then Tesla got their first red. Again, they were running there, but now it looks like Amazon and Google are taking off. Bonds are still low. They did not bounce as much as the market, but the market's right below VWAP now. I mean, welcome to day number 2 or 17 of the cuck. So it's good, man. It's good, huh? No? And then update on retail sales. What's this? Google, again, they're running. Retail sales are not down enough for Fed cutting bias. The key sentence to the note in the U.S. Census Department retail sales data release is this one. Total sales for February 23rd through April 23rd were up 3.1% from the same period a year ago. That tells you that retail sales are down in inflation-adjusted terms. In fact, if you strip out food and services, retail trade sales are only just marginally higher than a year ago, and that trend has been down for 2 years. Does it matter for the Fed or the bond market, though? Not yet. But the big key takeaway in the U.S. is that consumer spending power has steadily been weakening, and it's at a level that is mostly associated with a recession. Since the last Fed economic projections of March, 4.5 penciled in for the 2-year Fed unemployment rate. With no rate cuts, we should see this as further support for a hawkish pause in June. The Fed will continue to communicate as the next move is more likely to be higher than lower. And yeah, that went from retail sales to just Fed. Diamond says unlikely JP Morgan will buy any more struggling banks. I bet. We'll see about that. Jamie, not hungry no more, but Jamie will bite at the right deal. Jamie Diamond ate enough today. I don't want more food. Not. Jamie Diamond hungry. Jamie want big bank instead. Jamie don't want small bank. Jamie want Goldman Sachs. Jamie Monster hungry. I'm sorry. I'm sorry. Why is the dividend yield on Bill decreasing? Is it because more people are buying short-term bonds? It's because the 1-month yield dropped in half. As people are worried about the debt ceiling, they've been buying the 1 month and selling the 3 months. And that has the kink in the bond curve due to, what's it called? Due to the debt ceiling, it caused short-term interest rates to lower. So that's why heading into the debt ceiling, Bill is being adjusted and being affected, all based on what's happening with bonds in response to potential default. NVIDIA is still up, bro. Everything is still, it's like 10 names. Again, the other 90% of the market is down. But maybe we could take a double check on that right now and see. Again, everything's red except NASDAQ. SPY is down 0.3. Bonds are down 0.4 on the 10-year, so those are down a little bit more. And then Dow is down 0.6. And then NASDAQ up 0.08. Yeah, 70 names. So you got a little bit more. It's actually 50% more. But you have 69 names in the green, 434 in the red. That's for the S&P. Play in Tesla on the high right now. Leju, L-E-J-U. And then SPY at VWAP. NASDAQ, 1,000 names up, 1,900 names red, and then 500 names unchanged. Yeah, Tesla getting back to the 170s. Google on the high, Chipotle. I would average on 3M. If I didn't buy all the other stuff, I probably would have already. NVIDIA, 52-week high, 293. Oh, my goodness. So NVIDIA is already at the level, I think. So you know how I was telling you guys yesterday how 460 is 10% gain? So, yeah, the whole S&P, like where NVIDIA is at, this would be like if the SPY hit 460. You know, reaching your pretty much highs of April 2022 or getting back now to your November highs. Yeah, this is the 1 trillion discussion for NVIDIA will come back up. Travel China. I just had Airbnb up there. They were running. Yeah, CCL is up 1%. UAL, they just woke up. And then SPY's above VWAP. Bonds are still low. Airbnb, Expedia, NVIDIA, 294, 293, 90, or 47. Again, 52-week high there for NVIDIA. Huge price level. Dollar at the high. Yes. Only up by 0.2, though. Nope. I haven't done the poll this week. That one day I sat down and I was pooping while we were listening to one of the Fed speakers. And then the poll just kept getting in the way in the chat. I didn't realize it. Like, if you're on mobile, you could only see like a quarter of the chat unless you X out the poll. I didn't realize how annoying it was. And then I kept trying to like see messages and shit, and then I couldn't. Bro, NVIDIA is insane. Again, Google's about to hit 120. Amazon, 113.84, up 2.3. Fat day, man. Fat day. Like, it's actually crazy, again, for tech at least. Very, very big. Again, tech's up only 0.5. NASDAQ's up 1.6, but you have big 2% names. You're dumping there, Chicle. Not too bad. DOJ charges Apple engineer for stealing car tech. What? Apple, the Department of Justice charges Apple engineer, former Apple engineer, for stealing car tech. Again, I don't know if that's moving the market. Again, Apple got a little cheek lay on it, but we'll see. SE's on the low. That was a bad earnings one. And then how long, if things start slowing down, will 8 stocks keep us up? Not long, but again, too, it's just like you need more of an economic deterioration. I mean, the fact of the matter is if things don't get better or worse for the next 6 months, we just spent 2023 without a recession. And then now what are you going to do to get return on your money for the next 6 months? So, but I agree completely. Eventually, 8 stocks will not hold you up forever, but it's not even about them holding up. You got to realize if it turns back, that's the problem. So that, people, analysts in the markets are very aware of it right now. It's just quite simply, the real risk right now, you don't like it when it goes up and you're like, wow, literally 50 names in the SPY are green right now, 70 names out of 500, and you see how the market's holding up, right? And you're like, that makes no sense. Oh my God, how is this? This is a bad breath. This isn't sustainable. But the negative side is that all of those positions could be unwound very, very quickly. And that's now the problem, is that whenever there is if there's a bigger enough event or shock or slowdown or whatever it is, if that causes people to sell out now, it doesn't matter what the other 90% of stocks do, because if those 10 start to dump and then they give back all those gains, then we have a whole different story. So it's a blessing and a curse, but eventually, market breadth has its benefits and negatives down the line. It all just depends how it plays out. AMD and then MPW. Our stance has not changed. They've just been selling off since the bad news a couple of days ago. For Apple, I think the keyword is attempt to steal self-driving car tech. That's just a weird headline. Oh, Treasury auction for $39 billion in 4-month bills. I think you're getting 4-month bill and then even 52 weeks. And then bonds are still low. So again, markets bounced a lot more than bonds right there. Tesla's still at the high. Amazon took a chicle. Again, Amazon, AMD, Google, NVIDIA. Those are, dude, was that AMD's up 4, Amazon's up like 2.5. It's actually insane, 2.25. Google even up 2%. I'm surprised Apple isn't. Again, this is the second day. If anything, Apple hasn't moved the last 2 days. When will the mega cap continuation stop or concentration? I think when acted upon by equal or opposite force. I think that's what we're waiting for. Again, we've been dealing with so much, but I think we really start to move once we actually get a development in terms of the narrative, whether it's inflation, Powell, it could be a lot of different things. Is there a reason the chips are going up? AI, half of them. Not all of them. The other half that went up was because they were so bad that they didn't do that bad. Again, like legitimately negative 50% margins was seen as a positive, because at one point people thought they were going to do even worse. And I know that part's a joke. I think that one's frustrating. But then again, I've seen crazier. But that's the first part. And then the other half of the names like AMD and NVIDIA, or if they showed any evidence of AI or cloud-based AI, they fucking went insane. So I think the other half of the chips is all AIs. ServiceNow clients to access technology from OpenAI now. I'm still holding MPW, yes. Honestly, I even bought a little bit more after it dropped. But if I didn't buy already what I bought this month, I probably would have bought a lot more, but I have no intention to sell MPW unless they cut their dividend. Oh, dude, do you know who cut their dividend? Newell. We were just talking. You guys kept bringing that one up yesterday, but then Newell cut their dividend. But analysts said it was expected, but they also had a dividend cut. Microsoft 52-week high. Yeah, Tesla shareholder. You have till 3 p.m. to vote if you're into that. MCRB still holding along with Ascend, the final two biotech plays. What is Apple? Oh, Apple's right there. Now, again, Apple's been weird the last 2 days. Apple has been comatose, regardless of what the market has done. Yeah, 3M 98.44. Altman AI concerns comparable to Photoshops, but on steroids. Okay. NVIDIA is still going. Baidu's still back at 130. SLV's on the low. Is gold dropping? GLD 0.6. Oh, and then oil was dropping earlier too. Where is energy? Energy's the worst on the day. Energy's down 2%. Utilities are down 1.7. Real estate is down 1.5. Materials 1.3. And then healthcare down 0.6. Only thing in the green, communications are up 0.5%. That's Google and Meta. Tech is up another 0.5%. That's Amazon and everything else. And then AMD and the chips. And then discretionaries are up 1/3. And discretionaries opened up the worst on the day because of HD and all of that. So very wild, actually. CEOs warn of the devastating scenario if America defaults. Airbnb is still running. Again, Charlie was saying earlier the travel names were going up there. Yeah, Uber now on the high. Target as well. Dude, I can't even, man, that HD rebound. That's still like that. RJ, that's what you should be pissed about. That's, you know what I'm saying? Like, I get the chips. Like, NVIDIA's been ripping for the last, like, 6 months. Like, I need you to complain about damn HD and consumer staples selling off and then getting instantly bought on one of the worst reports in a long time. Again, HD, that was the worst report in 20 years. And now they're even forecasting 5% decline in sales, and they're only down 1%. That's crazy, actually. Like that one, again, Target was down 2%, and now you're up ahead of earnings. Again, that one right there is you're going to have to scratch your head on that. Airbnb. I don't get it. There's no such thing as bad news. There is. It hits different. Like, it's like somebody coming up to you at a party. You know what I'm saying? Imagine you in a nightclub, right? Let's say you in Vegas, you at the nightclub, you partying, and somebody comes up to you and tells you bad news. Depending on how bad the news is, there's a good chance you're going to keep partying and deal with it tomorrow. So that's kind of how I see it. I think the bad news is still bad news, but sometimes the market is very selective with when they want to respond. They like, yo, you have a test in school tomorrow. They're like, okay. And then they'll deal with it tomorrow, but you're not going to see. That's like going up to someone in the club and you're like, hey, you got a test tomorrow. And then no one puts down their drink and runs out the door and is like, oh my God, I have a test. Oh my God. It's like, no, or, they're like, oh, your car is getting towed. You might still stay in the club. I don't know. So it's kind of like that, but they'll respond at the right time. But for now, just, the party is partying. It's funny. That happened to me this weekend. I went somewhere and they were like, you can't park here, move your car. It's probably getting towed right now. And I was with my girlfriend, and I was like, I was the stock market. I was like, fuck, I don't give a shit. I said, we're already in here. I'm not going outside. I was like, let them tow that shit. Let's go. More Fati. I said, run it. But then my girlfriend, she couldn't take the news, and she got up out of her seat, went outside, moved the car around. I was like, hey, man, that's all you, man. I said, we should have just I said, we'll deal with this on Monday. But nah, so, yeah, it happens. It happens. Airbnb, I have 2 Airbnbs. And then SPY pinned bonds low. So hopefully you know what's going to happen now. It's either bonds are going to rip back up here or the stocks are going to flush. But let's see what happens. A breakout would be nice, because then I would love to see stocks go up and then see what the bonds do. But we are going to see. Upstart reversing. I don't know where our plays are at. I think they're at like $1. Still not bad. Dollar actually is at the same price I sold at yesterday, believe it or not. Just a little under. Disney dumping. Just see if Disney goes below 90. Oracle's on the high. Did they report yet? Was that yesterday? And again, I think we have Cisco this week. FedEx is on the high now, so watch out there. You're getting other things beyond tech moving now. So FedEx, those are new highs on the day. So FedEx might go red to green. We might see other things move here. That's what you need. You need energy up. You need something up besides tech. Healthcare would be nice. What even then? Healthcare's drilling into the lows. Airbnb again. It's actually above 107. 107.50. That's the level. Hello, Josh. I'm from Taiwan. Taiwan. What's up, baby? How you living, Taiwan? Good morning. I don't know if it's morning over there, but good morning. And then SPY. So look, a little chicle. I want to see what happens with bonds. 41.24. Gold hates us. Yeah, gold is flushing and oil. And then bond plays. The bond shorts are doing phenomenal. But let's see there again. I think bonds too. I want to see how the market moves, because remember, there's also that Pfizer bond offering today. Aviva to redeem. Manskin will keep pushing to finish Mountain Valley pipeline. Oh, Manskin. I thought it said Munchkin. International Flavors hits 52-week low. Gold short. No, I grabbed a gold long in the in the middle of the night last night. But you're gonna watch me play gold a couple of times here. We made a flip on it yesterday. That was my first future on there. Pins. I haven't heard pins brought up in a while, actually. Bro, Amazon again, and now Airbnb, and now Google, and then SPY is actually above VWAP. That's only happened a couple times today. Yeah, Pinterest at the low. Tesla's trying to get to 170. That's crazy. OMH, that was the one from yesterday. They're dying. NVIDIA is about to hit 295. Bro, NVIDIA's just moved $2, $3 in the last 7 minutes. Ay. Can Tesla approve shareholder buybacks this meeting? Possibly. But I feel like I haven't heard a rumor about that in a while. From Iceland. Ho. Let's go, Iceland. Baba's on the high. Watch if Baba's actually break even there. That's another industry going green, but SPY just flip red. NVIDIA is something about chips on voice scanners. So that could be Troy saying there could be some news backing that NVIDIA move, because that's big. That was $2, $3 in 7 minutes. And SPY just had a quick 3-point flip there after, again, you've been above VWAP like a handful of times so far today. Bookings on the high. Travel names are still running. China names are going up still, but you'll notice the low ticker just picked up a little bit of velocity. We'll see if it lasts. Coinbase on the low. I like O for real estate exposure. The only downside is that it's commercial, but O is, I mean, they've been here since the 80s. They got a nice little history behind them, and I think they have different exposure more or less. But I like them. I got it a little bit cheaper, though. So just keep that in mind. Disney on the low. Oh, David Zapata. 22nd birthday, celebrating 2 years in the long term, too. Thank you for the knowledge you teach and more. All love to the cult as well. Happy birthday, David. Horn. Oh, man, 22. I'm feeling 20. Horn. Amen. Amen. That's hype, bro. 22 years old, man. Do you know how much potential you have? Honestly, man, that's a great birthday to have. Well, man, NVIDIA 295. It could be some extra news there, but they're running. Man, God bless you, too. 25 or 22. You're so lucky. Yeah, you got your whole life ahead of you, man. I hope you feel blessed. I hope you like, man, thank you, baby Jesus. I can't believe it. We made it another year. That's a blessing, bro. It's a blessing. PayPal bleeding out. Vero has been granted U.S. patent number for methods of treating coronavirus. Veru. I don't like playing those approvals, but they have ran. Like any of the COVID vaccine type beat, they've ran a lot. So, I mean, I'd watch out for that one. I'm not going to play them. The Tesla one, I said they could vote for it, but I haven't heard that rumor in a while. And Chad, do not argue about the complacency and greed of the market. You know, maybe this will relate to PHILO. You know, because I'll tell you, you know, there's a book in the Bible called Timothy, and it's the Apostle Paul, my homie, writing him a letter, and he writes him a letter because at one point the church in Ephesus, they learned a lot of things. But then you know what they started doing? Their culture in the church of Ephesus formed into a culture of debating and arguing and dissension amongst each other rather than an appreciation of actual truth and what the principles are. So, but the idea is do not foster the attitude of arguing amongst yourself because that right there is the degradation of society that you're probably arguing about to begin with. That's where it starts. So, you know, hopefully try to understand where everybody's at and all there. But just, again, anything that forces, like, you know, if it's an attitude of arguing, that will give you more complacency and more deterioration than not. Because if you haven't noticed in this world, we just all end up arguing with each other and the truth becomes very void and far away, as everybody is looking to argue something rather than, again, find and appreciate and respect what the actual reality would be. Very true. It's cool. I mean, I got a PHILO. I could give you the feel. I was looking. I was like, it blew my mind. You know, I was going into a deeper. Because I was reading Timothy, I was like, who is he talking to? And I was like, wow. Then you go and you look up the whole Ephesus thing. It's pretty dope. It's pretty dope. Pop. Yeah, Sam Altman is still talking, I think. Mexico, AMLO says there's no issues if G Mexico buys Bankamex. Florida General State asked the court to block marijuana legalization from 2024. We appreciate General Moody's transmittal to the Supreme Court, but we respectfully disagree. How do you go about getting your own health insurance? Well, it just depends. You could just contact anybody. I think if you have a business, you should probably make a business and go get business insurance for your company, and it'll save you a lot of money. But other than that, it just depends on how much work you want to put into it. You know, you could just go through the normal methods, or, you know, I don't know if you have a company or not, but there is insurance offered to companies, which is a lot cheaper than what it is to individuals. Baba's on the high again. So Baba was red all day. Now Baba is green. Baidu still below 30. Texas Roadhouse on the high. Oh, yeah, there is enrollment periods, too. That shit's whack. So keep that in mind, too. Depending on how you get the insurance, there's, like, only certain times you could get it. It's super weird. Yeah, that Elon Musk, it'll be the first time he's aired on CNBC. He said it's not CNBC. He said he's doing it just because of the interviewer, but it's pretty wild. Push up time. Oh, I want to try to lift because my what's it called? Dude, my shit still hurts. My wrist, dude, it's crazy. I can't, bro. I was just digging sandcastles, bro, and I couldn't yesterday. I tried to open my car door and like my arm collapsed and I couldn't even open up my car door, bro. So I'm gonna try. I'm gonna see if I could get a. I haven't tried to lift yet, so we'll see. But Chattadonia, ladies and gentlemen, boys and girls, we're live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. You're on mobile. Press hot chat. X out the chat. Hit the thumbs up button. Second link for the nightly watch list and main channel. First link for the Scream Alerts bootcamp and real estate course. But, ladies and gentlemen, we've been here for 2.5 hours. You got 4.5 hours left to go. Sitting is this new smoking. I need you to get beside your desk and do 10 push-ups. Oh, we're 8 minutes. Oh, I'm mad at you guys. We're 8 minutes early. Oh, wow. I was just looking. I was like, wait a minute. It's not even late. I was like, it's already Euro close? Oh, you got me early. But either way, I'm down. You had me thinking about my wrist and the weight. So, chest to the sun, flex the core, tuck the hips in, legs in front of you, not wrapped behind your computer chair, okay? You are not riding a dolphin. You're looking beautiful. That's what you're doing. You're sitting up straight with your chest to the sun. You look taller. Man, you look really good. I don't want to make this weird, but you look, wow. You keep it up. You look good, man. I like to see the progress. Wow, that's amazing. Wow. Anyways, relax the jaw. Go. Breathe in really deep. Go. Breathe out with your tongue out. Do the dragon breath and go. Beautiful. 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 Just like that. All right, let's see. Let's see what happens. I haven't tried to curl with my wrist. I got the 30 now. Oh, yes. 1, 2, 3, 4, 5, 6, 7, 8, 9. That's the other arm, though. I haven't tried the other wrist. Let's see. I hope I don't die. Ooh, it kind of hurts. But it's bearable. We could do it. Yeah, it still hurts. Kind of weird. Need to warm up. No, it's like I feel like it's a weight I could do. It's just my dude, I'm telling you, this little whatever I did on the weekend digging sandcastles with my nephew, it's just messed up, bro. Messed up. It's cool. I get to relax. Fed Bar says the Fed is looking carefully at commercial real estate risk. Small pop. Well, TLT can borderline get up to like right here or IEF, and that'll match up with the market. But all day today, there's still a little bit of bond underperformance than stocks. Let's do soft tissue work, muscles by the elbow. Maybe I need to. It's crazy. It's good, though. I feel a little better, but... And then Altman says ChatGPT 4 is not a good way to find recent news. Again, you just heard Fed Bar. What time is it now? 11:25. 11:30, you got 52-week bond auction. And then 12:15, Fed Williams. That'll be good. Chad's a great way to find recent news. It works. It works. Why is land cheap in Colorado? I think it depends where. You know, Colorado used to be, like when weed first got legalized, Colorado was like the Idaho or the Austin, Texas from like 2014 to 2016. Dude, Colorado is insane. So I haven't looked at the land there. I know there's some places, like where is it? Like Pueblo, Colorado. I always see cheap houses there, and every time I tell the chat, I'm like, yo, anybody from Pueblo? You guys are all like, that's the hood. But other than that, I couldn't tell you why Colorado land. I think it depends on the area, because I've seen places in Colorado, I've seen multi-million-dollar properties, and then I've legitimately seen just, you know, again, houses that were dirt cheap. So it all depends. Boulder, yeah. Colorado was like, it had a gold rush of weed. Again, 2014 is, bro, Colorado was outpacing everywhere. Colorado was really hot at some point. It just kind of calmed down. I want to buy the cheap land for camping and maybe future Airbnb. Honestly, yeah, just make sure people actually go there. I think that, like, yo, where my nature fools at? You know what I'm saying? Like, some of y'all who could, like, build shit and you like staying outside and, like, camping and shit, you guys need to go buy land at popular travel destinations and then just throw a fucking tent on there and Airbnb it. That's it. Seriously. Like, go buy an acre of land at any popular travel destination by you. Go buy an acre of land. Go get, like, a cow feeder, fill it with water and call it a hot tub, and then put like a tent or a yurt, and you're gonna make $250,000 a year doing that. I'm telling you, it's wild. It's wild. You have to be doing it, honestly. Especially if you like really like that lifestyle, you should be doing that right now. Again, just like, yeah, dude, you go buy. It has to be in high demand. That's it. The only way you're gonna fuck this up is if you buy the land in East Pueblo, Colorado that nobody's fucking traveling to. You see what I'm saying? But, like, if you go, like, Joshua Tree is the easiest example, but it's expensive now. But there's other places, like Montana, just there's so many random locations. Just go buy an acre of land, put a fucking tent on it, a yurt, a little cabin, literally a damn tent. You could straight up put a tent. I'm not lying to you, a tent. A tent with a water and bathroom, and then, again, take one of those the water feeders for a cow, and you fill it up, and it turns into a hot tub. You do that, you're going to be making $200 a night off of your $20,000 land. It's, I'm telling you, it's hand over fist. Shipping container, all of that stuff's good, but just remember, you get an extra at that point. All I'm saying is buy a gigantic tube and call it a sauna, and then put up a tent. That right there is $250,000. That's all I'm saying. I'm not even gay. You know what I'm saying? I did no shipping, no handling, no nothing. Just straight tent and a bucket of water. That right there, oh my gosh. In the right area, stop playing with me. Yeah, you got to use pop-up words like off-grid, overland, stargazing. Honestly, use all 3 of those in a row. Be like, book today, the off-grid, overland, stargazing tent. Boom, right there, you're going to be booked all year. I got you. I get 5%. Thank you. And holistic. And then SPY is popping while bonds are at the low, Chad. So here it is. I mean, it's actually one of the higher points of the day if this could hold up. 41.27. Last time when we hit this level, we sold off 15 points in the next 5 minutes. And then otherwise, this is literally the lowest part of the opening candle that we had this morning. Greedy long. You can if you want. I mean, I really think we're going to stay. Like, I think greedy longs, greedy shorts on the MESs are fine if you're trying to play, like, you know, smaller movements there. But it's like, I said it from the morning. I said it yesterday. I said it on the watch list. I said it before. I am fully convinced we are doing nothing. I'm in cuck mode, so even I could be biased, and that may hurt me depending. Well, I may probably trade less off of it, but the idea is I think you could play small, but I don't know how big your follow-throughs are going to be. So we'll see. You will get big moves, but just expect it to kind of end within a similar range we've been at. Euro close. And then Blink is excited to share that the chargers have commissioned a new innovative battery storage to provide for faster chargers. AI is going to ruin the world. I truly believe that. I think we have time because, you know, there's like a way worse technology that has already caused way more damage to the world, caused more pain, suffering. It's awful, actually. It's like probably the worst thing ever, and the world still didn't end. It's called humans. So if the humans have yet to end the world, I think AI, I mean, it'll probably take us in that direction. But for now, man, if this world is pretty resilient. I don't know. That's all I know. The humans, the humans. Don't underestimate the humans for a long time now. 52-week bond auction draws 4.645, 154 days, 5.07. 1-year bond. Quickly, come with me if you want to live. Get to the bonds. The yields are running. Hurry. I don't want to stop pandering me. What do you mean? I'm not trying to pander you. I'm trying to tell you to get to the bonds. The idea is there's a lot of fear. Why? Why are we afraid if you're not into the yields? Hurry. Quickly. Now. So you make sense. I'm specious just like Elon. No, I'm not really, I don't really care about species. I care about souls. Oh, y'all don't feel me. Stop. They playing with me, Chad. They don't understand. You know what I say? Amen, amen. You know, somebody know what I'm saying in here. They don't feel me. Build bonds better. Well, bonds are going, again, like I was telling you, just all day today. I've said it like 3 times, and now we have something different. Fact of the matter is, bonds, this is the 3rd or 4th new low on the bonds without the market hitting it. So you're going to have a wicked bounce at one point today. It's either the market is going to flush and catch up with bonds, or if the market rips, the bonds will stop going down and they'll catch up. But again, this is a low now. So we'll see. Does my girlfriend listen to the stream? I don't know. Let's find out. Damn, girl in the chat, you sexy. DM me on Instagram. All right, give it a minute. If she texts me, we'll find out. But I don't know if she's listening. We'll see. But I just threw out that test. We'll find out. And then bonds keep going lower. Again, this is lower than even Powell now, but not lower than the week before Powell. You're going to get freaky DMs now. I haven't in a while. I have at one point. I had a really weird experience. It was a compliment, but I was like, nah, I can't do this. This is getting weird. I showed it to my girlfriend. It was quite entertaining. But she hasn't texted me, so she's probably not listening. PayPal is just PayPaling, bro. PayPal is just PayPaling, man. No, not bad. I'm still in no and Perigo. Free to homie Perigo. CCJ. Weird note was like, it's decent, but it just has not moved since. I think we're up on it a little bit. Russian uranium import ban clears U.S. House subcommittee. You showed her my DMs. Did you? That'd be crazy, man. Charlie, if I found out that was you, I would still love you. Is it insinuated that the bonds sell off, the money will go into equities? Sometimes, yeah. I mean, that's a fair assumption, but it doesn't always have to happen, if that makes sense. So, like, usually when it's obvious, then you know. You know what I'm saying? Like, it's, like, as long as it's, like, really obvious, then you know. But if it's not, like, you'll see it where it's like, okay, every time bonds sell off, stocks start ripping, it stands out. But if not, then you could assume, but it's hard to tell if that's actually what happened. Memes on Insta. No, memes are always welcomed. Memes are always welcome, please. I love you. I mean, as long as you're not making sexual advances on me, most of it's pretty cool. As long as you're chill, I think that's it. That or just like, I don't know, any other weird comments, just hatred or sexually harassing me. I think those are where I draw the line. Do you look at the DM? Sometimes. I mean, it really depends. I mean, I don't know, man. Social media has been like, I don't really like it. I don't like, it sucks. I feel like I've even like watched more stuff lately, but then like I hate it. Like, I don't know. I need to go move up into a mountain and not have internet, except for YouTube, for when I'm live. But I don't know. I don't like it. I don't like it. So that's why I try not to use it too much. 411, damn. Dude, you did it again. I can't make, dude, last time we were here, 4127, you sold off to 4. Dude, you did it. This was like 2 points smaller. Bruh, another 10-point move right off of the level. So there it is. I mean, stocks are catching up with bonds. That fourth bond low now looks to be enough. Refresh the high ticker. I think the high ticker is working. It's all low ticker now. That's it. Even notes coming down. Everything's starting to react there. It looks like it at the very least. I think you're just getting less upside from the leaders. And then now you're getting more downside. Everything from oil to commodities is going down. Again, gold is there. I'm down a lot. I'm down like $20 on gold. I bought gold at like 20. It was like 2018 in the morning. It was like the first, I bought it. It was like 3 in the morning or something. And then it was like flushing or 1 in the morning. And then that's it. I'm down a pretty big bag on it. But I'm fine with it because I think we have until June 1st. And then the bonds are now up there too. But again, I just think right now you're getting more pressure in the names that are going down and just less upside. I don't think Apple or I don't think your Google and shit is going down. It's just not going up while other names are giving it up now. And then it's weird to see the China names kind of wake up. APLS is on the high too. Again, NASDAQ is up 0.03 still. SPY is down almost 0.5%, and Dow Jones is down 0.75%. Ubisoft sees first quarter. Wait, Ubisoft is coming out with guidance and earnings right now? Oh? Yeah, bonds are just dead. Again, 0.5%. Only thing worse than the bonds right now is Dow and Russell. PayPal going under 60. Yeah, actually 68. Still got a little bit of room, but that'll be a big one. Didn't it already do that or no? Where was it that one day? Yeah. No, this is a new low for PayPal. Bond yields go up when people are selling bonds, yes. So when you see the 10-year go to 4% from 3.5%, that means people are selling it. If you see the 10-year go from 4 to 3.5, that means people are buying it. So when yields go up, people are selling bonds. When yields go down, people are buying bonds. However, when you look at an IEF or a TLT, when the chart goes down, that means bonds are coming down, but that means the yields are going higher. So the chart shows you what it means when you look at an ETF, but just keep in mind that when bond yields are going higher, that is essentially bonds going down. When we finally stop raising rates, how long do we think it'll be till we're back at 480? It just depends. Depends how long we hold it there. That's the thing. That's the thing. On PayPal, I got in at 62. It was like 62.90. But I think it could go like low 50s would probably be the real bottom point. What is with Meta? Yeah, remember Meta even had that weird dump in the morning. And SPY's kind of slowing down here. I mean, you have done this move several times already. Legitimately hit that level and sell off. It's still very early, though. It's only 8:40, so whatever move we make outside of this range, maybe that sets it up. But then again, a lot of other assets are just absolutely murdered right now. Again, from oil and commodities. Now even banks are going down. Banks are almost down 1%, actually. Shit. But just see where we go from here. Again, that correlation with the bonds is key. One thing that's been moving all day has been the bonds. So watch out for that. Brian, you think inflation will get worse after the debt ceiling is raised? My opinion is it will affect, but not how sure. God bless Josh said that. Chad Hearn. Amen. I do think inflation will get affected, but I don't think it has to do with after the debt ceiling. I think it's very simple, and I'll keep it very simple for you. If by this time next year, if by May and June of 2024, if the economy has not entered into an unquestionable recession, and what I mean by unquestionable is to the fact that we are still arguing it. If we do not enter a recession by May or June 2024, my belief is that inflation will come back in 1970s style fashion. I believe that would be the real wave 2 of inflation. And going from 5 to 9% inflation was nothing. And that was not the second wave. I mean the actual realistic second wave, 1970s to 1980s, same situation that created Volcker. I believe that will occur if no recession is created by this time next year. It would be, if no recession. Stagflation would probably, depending on how they handle the stagflation, it'll probably turn into massive, again, the inflation will be embedded within it. As far as what the economy does and growth, well, that's the difference between stagflation and recession, is just whether or not the consumer could hang on. Why would inflation go up that much? I got roughly 4.2 trillion reasons, but they all end with the dollar. SAP, Germany. SAP updates midterm financial and a repurchase agreement of 5 billion euros. SAP just gave out, again, this is Germany, and Germany had business confidence earlier today. Again, repurchase of $5 billion, and then they update midterm financial ambition. Halted pending news. Fuck. Damn, that's it. You had it for 20 seconds. Damn it. Yeah, there it is. The raised guidance, $5 billion buyback. Yes, today is the last day to buy 3M before dividend. And then SAP just got halted there. I forgot about that. Today's the last day for, what's it called? IBM or Walgreens and 3M. Put in an order. Well, I don't know what the guidance is. I don't even know how the numbers compare. But it's good. So we'll see. Baidu is at 131. Yalla. There you go. But he needs to do more. Come on, China. Bonds are bouncing. I watch IEF and /ZN. I watch all of it. Oh, there it is. So SAP sees revenue more than 37 billion, cloud revenue more than 21.5. They see non-IFRS cloud gross profit 16 billion. So I don't know where that compares next to their previous results. Let's see. Where is it? Their earnings were on May 9th. They got their price targets raised. IONQ new high. Yeah, again, I don't know where it compared to, but it seems like it's a pretty decent raise. No, they lowered it. Hold on. So here, okay, this is great. This is for 2025. That's stupid. Their cloud revenue original estimate was 22 billion. They just said it's 21 billion. They said total revenue would be now 1.5 billion higher. So that's it. Just one. We did this before. Remember that? I forgot. Remember SAP guided down, and then I remember looking at SAP guidance. I just had major deja vu. This same exact thing happened last year with SAP, and I think I said the same exact thing too. So So we'll see. And then Euro close was already 20 minutes ago. Back to VWAP and a little bit of a bounce here too. Okay. Let's see. That's SAP. Okay, I need to go pee. So, Chad, I love you. I hope your day's going good. We're probably going to have a lot of today to do nothing, so stay in the game. Again, you just had the SAP stuff, Baidu's running in China names, but I will be right back. Follow me on Instagram at The Trading Fraternity, and I will see you soon.
Simply explaining some technical element of our offer. I cannot say that we will be offering more money.
Okay, let's talk about what those potential details are. Dario, very nice to see you. Thanks for joining Alex in New York. There is some concern that there could be antitrust concerns. You have a stake in Telecom Italia, you have a stake in Open Fiber. Presumably these two businesses are antagonistic. They work against each other. They're competitors. Can you bid for one while holding a stake in the other?
Now, clearly we are aware that there are some antitrust concerns, and we have started having a discussion with the European antitrust authorities. Still, it's too early to know what the landing zone will be, but we are aware of these. On the other side, we know that there is a lot of industrial value in combining the two networks. Consider that Italy has one of the lowest European take-up in terms of high-capacity broadband network, and therefore we will believe that by finding a way to combining these two networks, this will also accelerate the digitalization of Italy.
Going back to the valuation part, I mean, Vivendi owns a big stake in TI. So I'm wondering, they're going to value that at like 30 billion. Your bid's at 21. There's a big gap. Even KKR's is around that level. Are you not getting pressure to up that?
No, not at all. I mean, they have their own opinion. We have our own opinion based on the data that we have analyzed.
But can you get a deal done at 21?
I mean, it's up to the board of directors to decide whether to go up. I mean, at the end, they have two offers which are more or less at the same level, and then this will be a decision of the general shareholders meeting whether to go ahead or not. Clearly, we believe that our offer together, I mean, probably also KKR offer, will produce benefit on the company.
Could you, let's talk about a combined offer. Why not work with KKR?
I mean, because we were partnered with Macquarie in Open Fiber, and this is why we decided to go ahead with them. Let's see how it goes. We are still in the process, and we will not close the door to any future option.
Would you rule out working with KKR?
I mean, not. In the past, we have signed an agreement with them. We value their presence into FiberCop, into a part of TIM, so we don't rule out the option. But at present, we are with Macquarie preparing and, working on our offer.
So for those in the audience who don't know, the Italian government owns about 10% of the carrier TI through CDP, and they hold the golden power right. They can veto any possible offer. Have you talked to the Italian government?
Golden power. Spy back up, Chad. You gotta love and hate it at the same time. We need to get rid of this yen thing up here. He's getting in my way. But, dude, you've done this many times. You literally hit a low, rock it up 10, 15 points to the high, sell it all off to a new low, rock it up, hit a new low, rock it back up to the high, come down near the lows, and then now we just did that. This one wasn't a new low, but it was, again, right here at this level. But see, though, we've sold this level off 3 different times today, and now you're right back up to it. So let's see what happens. OMH on the low. That one is dying from yesterday. That one was a runner. Yeah, all the moves happening on the NQ. It's just all NASDAQ. That's it. For real, though. Like, low-key. The NASDAQ is actually climbing up. So maybe I think that makes sense. Every time we keep selling off, I think everything else doesn't go up, and then the NASDAQ is the one. Very good call out on that. All of the action is on the NASDAQ right here. Again, your only thing green right here. And then SAP is still halted. MPW, I mean, you got a month. Let the price fluctuate for the next month. We'll wait into ex-dividend. And then again, their earnings will be the big one. And then today, Walgreens and 3M your final moment, and then you, depending on where you average, you either should be right around break even on Baidu or you should be up. SAP, Oracle, IBM, all playing in the fields. Again, wait till SAP. Let me know when that gets unhalted. And then again, right back up to this level. Meanwhile, the NASDAQ is at the highs. NASDAQ is breaking out here. We may just watch the NASDAQ today. Because again, the SPY looks like nothing, and then the NASDAQ is where everything is happening. And that was your first little bond bounce of the day. Actually, let's check here. No, every time bonds came up. And then that's NASDAQ overlaid with bonds. That one is starting to get a little tricky. ZN around 110 or below. Well, watch out for the debt ceiling. So just depending on that, I think it should go down, but it all just depends. The debt ceiling, though, as people get ready, or depending on how that plays out, that will affect the demand. White House summons naloxone makers on drug prices. Naloxone? I don't know what that is. I was thinking maybe the regionals could be the ultimate Fed cut play. They have a risk, but it could be why Burry was buying them up, given some of the deposit outflows and inflows stabilized. It could be, but then I get drawn back to your previous comment. I don't know if the problem stops with the second big one just going under, but there's a lot of different like interpretations of why Burry did what he did. One, he could have saw the risk to reward. Maybe we weren't the only ones who were pure degenerates, where it doesn't really have to be too big of a gamble, where it was just like, again, if it was a $70 book value, $14, there's a good risk to reward if you want to play some of those. I could see that logic. The other logic, though, could be that Michael Burry simply believes that the government will just not let it happen. That could be him putting his money where his mouth is, that the government is just going to make sure nothing bad happens. And then finally, what you just said, maybe it is the ultimate cut play or the ultimate recovery play, where it's like that's your, in 2008, buying the banks was the best thing you could have done, or afterwards. So, but that's the problem, is just we don't know. Yeah, it could be a bet on moral hazard, exactly. But we don't know. We just don't know why Burry did it. But I think the banks, though, I still have my original bank plays, but I'm not going to go too crazy on them. I just still think just agnostic and then follow the broader market. The correlation isn't as high anymore, but it seems like everything will probably just react to the bigger stuff. I just need some certainty. But yeah, there's a lot of different interpretations to it. That's why it's so weird. It's just like, again, there's so many reasons why he could have did it. I like Chase Bank. They own part of the Fed. Yeah, I like JPM all day. And then you guys said the naloxone. That's the Narcan stuff. Energy stocks underperform as crude slides on China data. What do you mean by big tech overcrowded? So if you look at all the 13 Fs and you see the pension funds and the hedge funds and you see what industry they're primarily in, the biggest percentage of ownership is in technology names. So it's like 30% right now. So it's just like 30% of any new additions all went to tech. If you look at how hedge funds and pension funds are set up, it looks like most of them have about 30% of their money in tech right now. So that's why I'm saying it's crowded, because it's the most popular trade right now in the market. So you have more people buying tech stocks than anything else in mass. Is another tech bubble possible? I mean, I haven't seen one with 5% rates, but then again, if just like 2006, if they somehow keep the rates up for 2 years and the economy does not immediately lose its footing, then maybe you could call it a tech bubble, but you could stay up for as long as the consumer will hold up in that environment. Hedge funds and pension funds too. So even pension funds bought tech. They're overweight on tech, or again, it looks to be about like 30% of people's portfolios is tech. Why is everyone buying tech? Well, one, you had a lot of pivot pause narratives at the beginning of the year, but let's make it very simple. You know why they bought tech. There was one event that sparked tech before AI or in the midst of AI. It was the banking crisis. So right when FRC or right when SVB, remember, that was the irony. Right after SVB, people started buying the big banks and people started buying Apple, Microsoft, Amazon, and Google. Why? Because they were saying, well, shit, the banks are bad. Let's pull our money out of banks and let's put it in the tech. If there's a banking crisis, tech profits will somewhat remain stable, even though they have to deal with everything else. Exactly. They see it as defensive, 1,000,000%. From March till now, tech, it reemerged like it did in COVID, where it was seen as a defensive industry. So, that's why I think you have both bond yields lower and tech higher. That makes sense. But it's like, even though the yields are generally, higher than they've ever been, it's like both people are running into defensives and they treated tech as a safe haven. Nvidia on 300. What? So like PETA just said, Megatech has pristine balance sheets, low debt, or less than 2 to 3%. They have their maturities all under control. So like tech, they're going to make money. They have to deal with the consumer, but their balance sheets are good and they're not dealing with the same financial risks as other things. Like, I mean, here's the irony. Like, I'll use like Roku as an example. Like when Roku had, $1 billion of cash, Roku didn't go and buy a 30-year bond at 1%. You see what I'm saying? What did Roku do? They spent it, which is great. But again, that's like a underperformer in tech. But now look at like Amazon or any of those other ones. But pretty much they didn't, their balance sheets, their risk financially, although higher interest rates hurts them, it doesn't, depending on their investments. And since most of them didn't invest like a bank, their balance sheet, that it looks way better right now than anything. Well, it's all true. They aren't growing earnings and revenue. Stale or declining, but their multiples are expanding. That's all facts. It depends on who you look at. So if you look at the average, I think all of the multiples, they just stayed the same in the sense that I think we're still trading like 19 times the SPY or just under 22. Some names more than others, but that's kind of been the weird part with it. Just a lot of things just haven't moved. I would argue it's borderline the same premium you were paying for it in 2021 when it had growth. Now the growth slowed down, but since the stock hasn't moved for X amount of years, a little bit more stabler, it's kind of the same price. SAP resumed. That was a long time. SE, that's a bad earnings. They're down 16 now. They were only down 6. And then SAP, I think they lowered their guidance. It was weird. They raised their revenue and then their cloud by a little bit, but it wasn't the buyback of $5 billion, I think, is the driver. BMW North America and PG&E are testing vehicle to everything tech. Extend partnership until March 2026. At what point would you look to buy the long end of the yield curve? When everybody starts doubting it. Pretty much. That's what you should have done. That's the easy setup. Again, pivot, cut. No, it's not going to happen, right? You want to buy it right here. So same thing. I think we're going to get a flush eventually. Everybody is going to be like, wait a minute, why does this make no sense? The bonds. And everyone's like, oh, yeah, no, the Fed. Don't fight the Fed all of a sudden. The reason why bonds should drop right now, you're going to hear it in 3 months, and then it's actually going to drop on the reasoning today. And then it's like, don't fight the Fed, bro. Then I think once you get that pump fake right before the event, then you're going to get the, right as everybody starts to give up on it, I think you'll get the pump fake. Or if it stays up here for 9 months, then it'll just break out. That's another alternative. So it doesn't have to pump fake. It could just do nothing for about almost a year. AKA, we just hold this little range for like legitimately 6 to 9 months. And then the situation just gets worse or something spurs it, and then you just break out from there. So it doesn't have to necessarily drop, but just what I'm saying is just be mindful of the pump fake. And another thing, just false uninversions of the yield curve. So I think the yield curve is going to pump fake a couple of times. Buy now or sell. It's not. So that's the thing. I mean, maybe we could talk about it when it comes down to gold or bonds, but especially bonds. That's not how you play it in the sense. It's not like buy now or sell. Oh, you're talking about the US 30. I think that's a great. I'd rather talk about that in relation to bonds, because here's the logic with bonds is at the end of the day, you could buy it at any time, because depending on how you set up your portfolio, having one of these bond plays, whether it's a pump fake or not, do you see how you could build around it? So like in a weird, like even if you don't want to wait for the perfect time to buy bonds, I could understand buying it right now if you're going to hedge it with your portfolio. Does that make sense? So it's like, it's not just like wait or buy right now. That's not your only option, because essentially you could keep adding some, you could have a small position today and increase it down the line, but the idea is it's like it's an insurance play. So to own a little bit of insurance, that's it. Realistically, when it comes down to buy or wait, that depends on if you're trying to speculate on the bond pop aggressively. So that you have to wait, if that's the case. But otherwise, having a little bit to, again, even with some of these safe havens here, that's what a lot of people are doing. It's not. So again, having a small allocation of bonds right now, I don't think that's a problem. Wait for the squeeze to show direction for US 30, then listen to everything else Josh is saying. I like it. I love it. But this is what I'm also saying is like there's going to be fake inversions. I think it's ironic that the 10-year looks just like the yield curve. Again, you go lower, right? We had one false uninversion. You went from negative 0.8 all the way back up to negative 4.7. Then negative 4.7 reinverted back down to 1%. And then after SVB, you uninverted from 1% to down 0.39. Then you reinverted as things calmed down to 0.6. Then we uninverted. I think this was like FRC and everything else to start May. And then we uninverted back to 37, and then now we're reinverting to 54. So I think there's just going to be one more pump fake, low-key, because that was one. This could be the second long one, and then I think the third one or the fourth one will be it. But pretty much there's going to be a couple of pump fakes on there. And that's where you got to factor that into, okay, what's the bond market going to do? But even then, everything I'm showing you is like, you realize everything I showed you is hoopla. Right? I hate to end it like that, but it's, you know what I'm saying? Like, none of this has to happen when it's all said and done. I could be completely whiffing the ball on this one, you know, the bond market right now, to try to put him into a box and say what it's going to do. Impossible. So just keep that in mind, where it's just like, this is a way I'm looking at it, but I am very fluid with it because it's not a, you know, this is a very difficult analysis and a difficult environment to try to really know exactly what the future is going to do. The only way I can see a healthy uninversion if the back end of the curve goes higher than the front. Well, how does that will happen if they cut rates, or if why it happened this last time was because everyone thought they were going to cut rates, so they bought the front end of the curve, and then if the long end doesn't get bought, then there you go. Yes, the audacity to see I felt bad, bro, because yesterday my girlfriend, she came over, and like I needed to check something on the computer, and I was running upstairs. I said, hold on, I got to check the future, or I got to look into the future, and she was like, you know the future? And then I was like, no, I'm talking about the future. And then I was like, wow, Wall Street is so arrogant. Even myself, we literally trade in something called the future. You know that? We trade into, that's it. We have enough hubris to say we trade. What's it based off of? The future. We buy and sell the future. Isn't that crazy? Because I said it out loud to my girlfriend. She's like, you know the future? I was like, it's not like that. Yeah, I do. It's the bond future. Damn it. It's pretty crazy to think about. Yeah, notes kind of going up. I love you guys. I'm doing it for you. Okay? It always works. I sold out of note. I made $100, but I'm out of note. But I sold out at the high, so that's your shot. Cerberus targets $2.5 billion fund for supply chain projects. DR Horton buying down rates as incentive for 65% of sales. Whew. Dang, bro. That's what we told you they were doing, those new builds. DHI, they're still going up on that. And again, home building sentiment was good today. UNG on the downside, yes. Fed Williams could be big. I said it even on the watch list the last 2 days. I'm waiting for Fed Williams. I think Fed Williams is a low-key killer. He could do a lot. Okay, I got the video feed, but he's not live yet. Lendy Arch. 3M and Savante announced joint development to develop and produce CO2 removal projects. Or I don't know if that's going to move the stock. And then DHI's like popping. Let's see. Yeah, this is gonna be a crazy ex-dividend for 3M because it's even selling off day before ex-dividend. No, the wait times, they're still wicked, but they're also like, it's definitely more accessible, but it's still like, you know, you're still going to wait like a year if you walk in today minimum, and then they tell you a year, and then it really takes like 2.5 years. But it's not the same. Just definitely, that's the new build era is over. So remember, dude, it's so crazy. Because remember, I was telling you, I was like, bro, I had, you know how many new builds I bought, and I was just flipping them. I was just on the list early. I would get a new build and instantly sell it for profit. It was amazing. Again, the new builds were packed. But now it's not the same. Just because, again, now a lot of them have either raised their prices or lowered them for the market demand now. And then now with not everybody going crazy, I mean, you could still get a new build. You will have to wait, but it's not as packed as it was there. So pretty much like you could walk in, get a house in a year. They'll tell you a year. It'll probably take 2.5 years. A year and a half ago, they would have told you, no, it's going to take 2.5 years. And then there's probably another 3-4 years behind you with everybody else. And then like you could get phase number 18 or something. So that's the interesting part with new builds. But they're still active. I mean, they're holding up, but it's not like you can't get you're not flipping new builds and you're not watching, you know, the new builds start to just still go crazy like they were. Arizona has plenty of new builds sitting there. Y'all should come out and see. So I think it depends, but like that's why those prices are probably normal now. That's the thing. Back then, a year and a half, 2 years ago, if there was a new build for sale, it was probably 30 to 50% higher. Biden vetoes bill lifting halt of some solar panel tariffs. Check TAN, First Solar, Enphase. TAN is popping off of that. Remember, First Solar went crazy the other day. They're down 2 right now. TAN got a bigger pop. Amazon's popping right now, 114.34. They're Houston. They're still buying up everything. No price decreases. Yeah, I think it just depends. So I had my recent deal, which is like highlights some of the example, is Austin. So you remember all the crackheads in Austin, they all wanted $20 million for their house. So I had somebody reach out to me. They had a new build contract, right? And this was like end of last year, a little bit towards end of last year. They had a new build contract. Oh, Williams? They're introducing him right now.
Listening and learning from the various.
So, but they had this property in Arizona, or excuse me, Austin, Texas, and they had it on a new build and they didn't want it anymore. The property was $420,000. And they were like, hey, I will sell you the property for $430,000. They wanted to sell me the contract for $10,000, right? And if this was, it's crazy because at that moment, we were really, I was buying everything, right? If it was a new build, it was about to be delivered, I would have bought it, right? But then again, last year, end of last year, middle of last year, things are slowing down, interest rates, all of that. I'm like, okay, hold on. And I look around, I'm like, it didn't look like it was precarious. This was at the same time I had a lot of, remember I told you the other story, San Diego, I had a new builder guy offering me $400,000 cheaper than the latest sale. So that guy in Austin, it was like $420. He wanted to sell it with the premium. I said no. A couple weeks later, he's like, hey man, I'll just give it to you at the price I paid for it. He's like, fuck it. I don't want to lose on this. I don't want to lose my deposit or anything. Just take the house, $420. You pay the price. It's yours. So unfortunately, I did not even buy it at the value. And I said, nah, I'm good. I wasn't liking it. I didn't like the area, how things were going. And then fast forward till today, the builder is selling those houses at like 380. So now the demand is leveling out a little bit, but if I bought that house, I would have taken a 20% loss instantly. So depending on the price cuts and when they happen, there may be houses now that are there, but don't underestimate like the amount of price cuts on new builds in the last 6 to 12 months have been substantial. But now it's kind of balancing it out where now there's less hype, still a wait depending on where you're at. There could be some there, but it's a very finicky game so far. And yeah, we're gonna listen to Williams. That's why I think he's coming on now. We were waiting for the introduction. This is a William. This looks like an AA meeting. I didn't think this was a Fed meeting. Okay, there. That's a better shot. Yo, where my audio, bro?
Pleasure to participate in that process.
It's awful quality. Bro, they need better audio at this meeting.
Just indicated that you have met with leaders since you've been here.
This is going to be tough.
Since you've been here.
Watch your speakers because they might adjust it.
There's probably a question in all of our minds, which is, what brought you here? What is the goal of this particular?
And then no is ripping. I got you. I got you, Chad. Jeez. This is awful. DeSantis to launch presidential campaign by end of May, CNN. Bro, the only one I want to listen to has the worst audio. Work together with stakeholders in our communities to make sure that this is awful. Are thriving and serving. Okay, watch your speakers.
So based on what you knew before you arrived and what you have picked up during the time that you have been here.
I gave you the warning. They're tripping out.
Yeah, in regards to the Virgin Islands, or I mean, you mentioned, or I mentioned, the various states that are a part of the second district. How is the Virgin Islands doing in regards to the second district?
No, it's obviously, I should mention that we were here in 2019 and here at the university, and that was an opportunity to learn how the islands are recovering from the hurricanes. And since then, we've had the pandemic. So I think that for what I've been learning in the last couple of days and what we've been seeing is, those are still really important drivers of what's happening here. And I should mention, we went to St. Croix yesterday and we met with folks virtually from St. John. So you really do see this intersection of the recovery from the hurricanes, which were so devastating, that money coming in and being deployed in different ways, but obviously the effects of the pandemic and a lot of people who left the island and the economy struggling and with a labor shortage and some of the housing shortage issues. So I think what we saw was a lot. We're seeing now still a lot of the challenges from the recovery from the pandemic, from the issues from the pandemic and the hurricanes before, but also seeing a lot of optimism about what can be. A lot of investment into
gold is still getting smashed right now
of the islands. A lot of thinking about how do we train people for the jobs of the future, and how do we make sure that the island the islands are thriving economically. So you saw both sides of it. I think one of the
this is at the Virgin Islands. That's why they're talking about the islands.
Remote. It's expensive. We definitely heard that a lot. It's expensive to get here. It's expensive to get between the islands, and some of the challenges on supply chain issues here, and thinking about what can be done around those. And I think really about, how do people leverage the amazing, assets of the islands, and yet at the same time deal with some of these other things.
Yeah, good. Broadening the discussion out a bit, there's so many commentators, journalists, economists, talking about the outlook for the U.S. economy because of inflation, because of labor market shortages, because of other factors. And though we want to trust what they say, I think you have greater insight than they may have. So what is the outlook for the U.S. economy for the next few years?
Well, the U.S. economy itself is going through, still a lot, coming kind of out of a lot of the effects of the pandemic. And you mentioned some of those effects. We've seen huge supply chain issues last 2 years, labor shortages throughout the United States. And of course, as you mentioned, high inflation, unacceptably high inflation throughout the country. I think a big driver of those were the special factors associated with the COVID pandemic that reduced labor supply. It interfered with production and transportation and logistics, and it really turned our economies upside down and caused them to lurch forward and stop over the year, especially in 2020, 2021. We're seeing, I'm not going to say a return to normal because I'm not sure exactly what that is, but we're seeing something where the economy is starting to adjust back to a more normal patterns. Consumers are still spending.
He doesn't sound bearish.
That's definitely true. Consumer demand is still strong, but we're seeing it move back to more of a balance between,
but again, this is what everybody else has said.
During the pandemic, many of us work from home.
And then Amazon's hitting a high, NVIDIA tech stocks are gassing again.
We didn't do a lot of things that we enjoy doing. Instead, we apparently bought exercise bicycles and furniture and desks to work at home and things. So that was a big driver of some of the shortages at the time. So that demand is coming down. Now people are going out again. They're traveling. They're going to restaurants and theater and things like that. So we're seeing that happening. At the same time, we are seing, partly because of the Fed and other central banks are tightening.
Mondelez on the high, MDLZ. They just went green.
Demand and supply imbalances that were such a big part of the story over the last couple of years, where demand exceeded supply and that led to inflation. We're seeing that start to move back into balance. People have come back to work. Labor force participation.
Damn, gold below 2,000.
Between the age of 25 and 54, which for some reason is called prime age, which I think is just wrong. But I call it the very young. But the 25 to 54 crowd, that's back to where it was before the pandemic. I'm talking about in the United States as a whole. So we're seeing things kind of move back to better conditions. Demand is still strong. And one of the things we need to see in the Fed is we need to see the supply and demand be back in balance, and that will help bring inflation down. So you asked me my forecast. I'm happy to give that. I expect the economy to continue to grow this year in the U.S. At a pretty modest pace, but continue to grow. I expect to see some of the inflation that we've seen peaked in the measure that we look at the Fed, the particular measure we focus on. It got up to 7% back in last year. It's come down to a little over 4%. I'm looking at that to come down to a little over 3% by the end of the year and then continue to come down. Our goal is 2% inflation on average. We're still not there. 4%, as you know, we're twice as high as we wanted to be, but it's moving gradually in the right direction. Again, I see an economy that's growing, at a modest pace, continuing to move forward, and really getting this balance between supply and demand back, and see inflation come back. I mean, for us at the Federal Reserve, we have two goals. We have maximum employment, price stability. Maximum employment is really strong labor market. We have that. We have the lowest unemployment rate in the U.S. in the past 50 years. A lot of other indicators show the labor market strong. It's inflation that's really the issue. We want to see inflation come down, and we've taken strong actions to help that happen.
To drill a little deeper on the inflation issue and what types of policies you put in place, tell us a little bit as to how does the Federal Reserve know that the policies that they're putting in place are actually working? because we hear the announcements or the pronouncements that there's going to be an increase in the rate. And it usually takes a while.
Amazon again?
You know that
Ay,
it's
ay, ay.
having an impact. So I would assume
Yeah,
that
William's
there are
sounding
other
bullish, though.
indicators that you look at to know if you're
Again, it's
going in
all
the
the
right
same
direction, to
phrases
know
we have
whether
heard,
those
though.
policies need to be changed. So,
But he is a
could you
voter in
elaborate
number
a little
2,
bit
so
more on
any other phrase
how
he says
you
will have
measure
weight, but he's
success?
echoing everything
No,
else.
that's a really important and a really hard question because, as all of my friends in what they call the real sciences tell me, economics is a social science. It's about understanding how human beings behave and make their decisions. And of course, there are billions of people in the global economy, and they're all making decisions. And it's hard to discern exactly how they'll respond or act in different circumstances. I think that, when I go back to your question of, what are we measuring? It does start with our maximum employment and price stability mandates. It's kind of simple at that level. You look at the inflation rate. If it's 7% and we want to, inflation's too high, we need to cool the economy down. Similarly with the employment, we can look at some indicators there. But now to get to your question.
Yeah, Uber's coming down.
How do you calibrate this policy decisions? So what we did, starting early last year is really, realizing that the economy was, way out of balance, demand exceeded supply, and inflation was too high. It was clear where we needed to go. And we moved very quickly, raised interest rates, what we said, expeditiously, and really to try to get policy back closer to where we thought it would need to be. At that point, it wasn't really about fine tuning or getting exactly, did we know what the right rate exactly was going to be? It just let's get closer to what it probably will. So early this year, late last year, early this year, we slowed that process down. And it's really about looking at the totality of the data. Mm-hmm. So when people say, what data do you look at? I said, all of the data. And some of that data is actually talking to people, listening to what they're saying. Mm-hmm. Some of it is, very serious statistical models and analysis, but it includes some of the really interesting things that we've learned in the last few years. We get real-time data, up to a daily or weekly frequency from some of these tech companies that, track everything that goes on. You get a lot of information that is telling you what's happening, very currently, and what's happening that may be different, say, here than what's happening in New York. But it's really looking at all the data, assessing how the data seem to are evolving, and then looking back at some of our analysis of how our policy actions affect the economy. So we've studied, the effects of monetary policy in the economy
coming down
for
a little.
Very long time. We know it takes a while for our decisions to fully affect the economy, but you can see indicators along the way. So when we started raising interest rates, the broader financial markets responded. We also saw the housing market respond. Housing market's very sensitive to interest rates for, reasons we all understand. Higher interest rates make it more expensive to buy a house. So we saw those effects starting to play out. And then we saw it appear in some of the demand for goods that I was mentioning earlier. So it's really about watching the data, the flow of the data. How is that consistent with how the actions we've taken and achieving our goals? And I think that one thing that's most important here is a phrase I love to use all the time, so do my colleagues, is we need to be data dependent. And that means we don't just make up our minds, we think the interest rate needs to be whatever, right, and then see what happens. We've got to make our decisions.
That's another point for data dependent. Again, market, I don't know if they're responding to that or not. No at 212, cities on the low too.
And that's what we've been doing. And as we go forward, we just have to have this ongoing process of assessing how is the economy performing, how does it seem to be responding to the higher interest rates we put in, and then how is that helping us to achieve those goals I mentioned. But it's a constant process of a learning adjustment, and being willing to, in this world, in a world like this, to have that flexibility to say, well, this is how I saw it 6 months ago. Here's how I saw it, 3 months ago, but here's how I'm seeing it now.
You're over the second district, and within that you have New York State, and thus the city of New York, which some views as the economic capital of the nation. And then you got the Virgin Islands.
Do people view it as not?
It's debatable.
Okay. I wasn't aware.
Especially from here. But the point is
So
that
SE is still dying.
You can develop policy that is you want to apply uniformly.
Yeah.
But the Virgin Islands,
time is
Puerto Rico, there's some
Still only
differences
9:30. It's still
between
mad
us
early, Chad.
and New York or even Connecticut. So how do you take that diversity into account? Because you may create a policy that works well for New York, but may not work well for the Virgin Islands or for Puerto Rico, and they're all part of the second district. So how do you balance that?
Well, it's absolutely a really important point, but it's broader, because of course I represent one district, and my 11 colleagues from the other Federal Reserve districts, all the way from the West Coast and throughout the country, they're doing the same thing I'm doing. So we're analyzing and the data, we're meeting with people, we're trying to understand our district. They're doing the same, and then every 6 weeks we get together and we exchange our perspectives and hear. Well, and typically in the United States, there are parts of the economy that are red hots, growing really fast, and there are other parts that are lagging behind, and so you're always trying to take all of that information, and in the end of the day, we're making national policy in terms of setting interest rates. It's an interest rate for the whole country. It's not an interest rate for one part of the country or another. So we have to take all of that in, assess it, and share that information and try to get the most holistic view of what's happening in the economy. So monetary policy in terms of setting interest rates is really a national policy. So you have to kind of have that big picture, understanding that there are different conditions, different experiences in different parts of the country. However, I say there's a lot of other policies that aren't. I mean, I'll mention a couple because they come up a lot. Well, there's fiscal policy, which we don't do. But of course, a lot of fiscal policy at state and local government or federal ones, those are ones that can really be directed more effectively at some of those issues about local conditions. But also we do work in our community development and economic development work that we do. And that's part of what we're doing here is you think
SY, this thing's been halted a couple times. Cody on the high.
Parts of
That's the cheaper makeup play.
It's really not so
then
much
again,
about
Amazon, Nvidia.
It's more about
Amazon's the
making
one
sure
hitting new highs,
that
but all the other ones are
businesses
still
and
right there.
organizations who need access to capital to be able to borrow, that they're able to find that, and that we're bringing, so really what community development, a lot of that's about, is really bringing stakeholders together and making sure that given the local conditions, the capital is being brought to bear and being utilized to support local communities. Now we don't fund that, we don't make those decisions, but we can work together with stakeholders, hopefully, and help them do that. But going back to your original question, it's really about getting that big picture, understanding where things are strong, maybe where the economic conditions are weaker, and trying to take all that into kind of together, but in the end, make a decision for interest rates for the country.
Okay. I have one more question, and then I'm going to throw it open to the audience.
Audience
They have
questions.
to say. But after thinking about where the economy is going and what are some of the challenges, but more importantly, what are some of the opportunities for growth? If you were advising the governor, the Senate, just average citizens in the Virgin Islands about opportunities that are there, what would be your advice to us as a community?
Well, I'm going to speak as an economist because that's what I am, I'll speak to the audience rather than trying to advise the elected officials. They'll make their own decisions. But
I do that all the time.
Amazon Chicle finally. SE is dying. Again, that's down 10% from the morning. But I do hit a high than Chicle.
Over the long term, you think about the research that's been done on that and what we've learned from around the world. Well, one of them is something economists call human capital, but it means education, it means job, training, it means all the things that help people develop skills and abilities and productivity, if you will, to contribute to higher levels in the economy and society and benefit from that financially, economically. So to me, one of the biggest, most important investments our economy makes. And I'm not just saying that because of what your role is, but
I'm going to capture that point, though.
Is education. So education is we are in a knowledge economy. I mean, there's a lot of different types of jobs, a lot of different types of careers, but pretty much all of them rely on,
AMD still holding 5.
Our knowledge and experience.
Yeah,
and
5.6.
Learned and often learning on the job or learning by doing the things, but really it's about having that foundation of education and investment in people. We talked a lot about workforce development here, and so that it's about lifelong learning. I think the second thing is, so one big driver of prosperity in the long run is education and investments in people. And the second is investments in what we call capital and technology. Is that, one of the things I think we've all learned here during the pandemic is the technology, whether you like it or you don't like it, it's critical to how we live and work, and especially, for everybody who was working from home or their kids were learning.
So again, we're doing the same setup. SPY can't break above, but it's really just the new high test for the NASDAQ.
Technology that helps everybody in our society, basically function in this modern world, and that does mean things like broadband access and cell access, which is a big issue here, but it's also a big issue in northern New York and around the country. So I think there's a lot of investments both in people, in technology, and access to technology that are big drivers. And the other thing I heard here, which is inspiring, is also having a vision of like if you're starting a small business or you're starting your career, like thinking like, what can I do and how do I move that forward, and taking some risk and being willing to really work hard at
Airbnb upgraded to buy by Morningstar. Price target 128.
On education. So
Yes, I do, and we're going to turn.
And then there it is, SPY breaking out. Most likely the NASDAQ playing with it.
But thank you for that answer, and I can say that having been president for 14 years at this university, that the local government and the people understand the value of education and have been willing to invest in it, even when there are scarce resources. So that
that was an upgrade. That was their first upgrade since February.
From those of you who are in the audience.
But stock's not responding.
There is a mic that will be
audience questions now.
So we have one question here in here.
We have 2. Yeah. 3, 4.
No, we recognized him first. This is, and then we will just ask that you keep your questions short and that they are questions.
And if it is a statement, can you just add, don't you agree at the end?
Does mic work?
Yes,
Yeah.
it does.
Shit, he's telling him how to ask the
Archie
questions.
Ogden. I'm a Virgin Islander from St. Thomas, and I am so happy you're the first person in my life that have ever been able to answer these questions. Since the age
You sound old, dog. That sounds like, I don't know.
cannonball, they became obsolete, so we don't use cannonballs anymore. In our new age of communication, the only reason that I can think of to even have a Federal Reserve administration is to hopefully hold our own or gain an advantage over another country by our fiscal policies. I can't think of any other one, but you know the answer to that. So in my looking at it, I think that at this time in our life, there was a great need for the Federal Reserve many, many years. But I think if the Federal Reserve was, as the Republicans like to make smaller government, if the Federal Reserve was one of the parts of government that disappeared and we whole economy only worked with market forces, it just seems to me in this particular age of enlightenment that we would be better off.
So I will respectfully disagree with that, but let me, I know, do that.
It's your job that way.
Jeez.
I understand that.
Calm down.
So it's
Calm down,
So
sir.
why I'm wrong.
Happy to take that question. So first of all, I do think even with the market economy and with the changes in technology that you're referring to, that the Federal Reserve does still have, even in monetary policy, or especially in monetary policy, a very important role. And that's because we still need we use the dollar, the currency.
He hasn't been that excited in years
of that currency. That's what I said about and the value of the dollar, I should say. That's what I meant by price stability. We know that low inflation, stable inflation is something that we had achieved for 30 years until the pandemic, is really critically important for people's standards of living. It's important for stability in the economy. We've done research in the last couple of years where the high inflation clearly is hitting those families who can least afford it the hardest. So we do have a role in maintaining price stability and financial stability. I'll go back to March of 2020. This was a period where financial markets were under extreme distress. People were terrified of what the pandemic would mean beyond the health and how it would affect our lives, but what would happen to the global financial system and the economy and the Federal Reserve. We took very strong actions, and the way the only a central bank can do is adding literally trillions of dollars of liquidity to the system, helping support programs, pandemic programs, and it's something that only a central bank can do in that kind of situation. We moved in hours or days, not over months and years. So I do think there's an important role in what we do. It's supporting really the stability of our economy, the value of our dollar, and being there as a central bank can be when there's a crisis. And people, you can think of it as when people are afraid, we're the ones who kind of run in and make sure that there's the financial system has the liquidity and what it needs to do to continue operating.
And that is called the Powell put.
So we'll come back if we have time, but I want to get others involved in this conversation.
Good afternoon. My name is Lawrence Mills. Could you speak briefly to the potential?
So again, NASDAQ hit a high. NASDAQ hits a high, SPY and everything coming down. Low tickers picking up, but again, you just had some momentum there to the upside.
Could you speak to how that would potentially impact GDP, unemployment, households, the financial market?
Right. So the question was really about this issue about the debt ceiling. And obviously, it's a hugely important issue, and it's coming up very quickly, as you said.
297.
When the inability to issue, basically the debt ceiling will be breached. So my answer to your question, and it's a sincere answer, is we don't know what the effects would be of truly breaching the debt ceiling and defaulting on the debt of the United States. It's something that's not happened. It's something that shouldn't happen. It's something that Congress and the administration need to address, and they need to address it very soon, because we're talking now about weeks potentially, based on reports from Secretary Yellen and others. So the effects on the economy and the financial system are definitely of a default would be very negative. But because it's not happened, because we can't really know what would happen, in a way, it's I can't say, well, this will be the effect on GDP or employment or inflation. But the fact is, that's itself a statement about why it's so important that Congress and the administration come to a way to increase the debt ceiling as they've done in the past. But from a purely we think about, again, going back to previous times of stress in the U.S. Treasury market. That's the market for U.S. government bonds and notes and T-bills and all of that. This is the cornerstone of the global financial system. The market for U.S. Treasury securities is not only a market for government debt in the United States. Pretty much all of other asset prices in Wall Street and around the world are priced off U.S. Treasury yields, and everything is very interconnected, not only in the U.S. but around the world. So when you look at March of 2020, I'm using that example because kind of reminded me of this from the earlier question. Once the Treasury market doesn't function well, then all the other kind of connections in our financial system.
Okay, here's the interesting part about all this. We barely move, but now the last hour has brought your first bid on bonds kind of back to this level. So in a weird way, bonds and stocks will be matched up here if this holds.
We have a question.
Hi. Good afternoon. My name is Tamara James. I am
Netflix at the low.
A senior research analyst at 13D Research and Strategy. So I have a question for you. So this year's net interest expense for the federal government, which is $640 billion, will be almost as large as the entire budget deficit that it was 6 years ago. And the net interest expense to GDP ratio is forecast to rise from 2.4% of GDP this year to 3.6% in a decade, which would surpass the highs of 30-year growth. Or 30 years ago, I'm sorry. How will the government manage the growth of interest costs against other budget priorities like Social Security and Medicare without crushing economic growth at the same time?
Well, the answer I really, really want to give you is that we don't do fiscal policy, and that's up to Congress and the administration. But I think you're asking a different question. Is really more of the economics of economic consequences of the fiscal situation. So these are not decisions the Federal Reserve makes. We don't do we don't set taxes or government spending. But it is a really important backdrop to our economic and financial, if you will, outlook.
Ethereum staking reward temporarily halted.
Unsustainable fiscal deficits has been around for decades. And the argument many economists have, and I mean decades, the argument that many economists make is that this is exactly the trade-off that you don't want to have in the long run, which is one of huge expenditures on interest payments that then crowd out the expenditures on things that are really high priority and really important. And so, to my mind, the issue really is for the future elected officials at the federal level to to find a way to get the federal budget on a sustainable path. But do it in a way that doesn't, obviously, have, huge negative consequences for the economy. But this has been I go back to,
Ken, VWAP bounce, you're coming back up. The NASDAQ still rocking.
If you don't, this is kind of like the thing is, you want to fix your roof when it's not raining. It's a lot easier to think through and how to manage those situations when times are relatively good or where the situation is less challenging than it is to do it later. So I don't have the answers because that's up to elected officials, but it's definitely something that I see as an important kind of uncertainty around the economy over the next 10 years is how does this all get figured out and solved? Because depending on how that happens, that does in the end have consequences for the U.S. economy, and that affects our ability, or not our ability to do our job. We can do our job. It just affects the context in which we do.
I think we have a question over here.
Mr. Williams and Mr. Hall, my name is Sunil Mohanani. Being an economist, we went through a crisis when we had a housing boom, and then the banks, where they were giving faulty loans, where they were not looking at people's incomes and all incomes. And we went through that in 2009, where nobody really knew what short sales were and all that, where even the banks were trying to figure out where they were
Galapagos, GLGP or GLPG,
since they were underwater. And so
it's at 42, but you don't see
kind
it.
of in another situation I see just like this, since 2009 to 2023. And there's been a lot of buzz between a lot of the banks and regional banks that have invested in large commercial developments, where commercial developments now, where since the pandemic, a lot of people
VKTX price target increase.
A lot of people are not using.
Damn, that thing's still going 9%.
Some are multi-use, where some have retail, where retail sector is being shrunk every day, where people are closing locations. Then some of the commercial buildings are empty. And there was one building that I read in San Francisco that in 2019 was worth, $900 million, that was sold for $60 million. And these type of shrinkage in
gosh, that audio.
Is the federal government prepared if some of these regional banks were to fail and the bigger banks are not able to pick up all the debt from the smaller banks? Do you think we could end up in another situation that we don't know, that we went through, someone like that? And my other question some of my other colleagues had were, since I was young, gold was like at 300. Now it's reached 2,000.
Coinbase dropping again.
Then
There's
between
something
all
on
these new
Ethereum,
currencies that
but
come in and
I don't know if
everybody
that's
in other
moving it.
countries trying to change with the SWIFT and trying to find other ways to formulate their economic growth. What if the federal government was to put a spot on gold? Like, do you think that they would do this where people would be forced to even sell, where everybody is trying to back like all these assets with gold? Do you think that the government is prepared where in the end the little guys like us, you know, they're saving and all that, even in
Is
the
he asking
market,
if we're going
you know,
back to a gold
how do
standard?
we save, you know, like for retirement in the next 10, 15 years, where, you know, like from the millenniums where they got to start saving now for retirement, to now the ones that, you know,
Zella
are
on the
starting
high.
late, you know, in their 50s. Like,
48% Xella.
what do you think that we all could benefit, like where you think that is safe? You know, the government prepared for it.
So let me start with the first question about basically on the banking situation. And I think the current situation that you're asked about, the regional banks, the banking system, and commercial real estate, especially office and retail, I mean, this is nothing like the financial crisis in 2008, either in scale, complexity, or kind of the reach of the issues. I think it's important to be recognized.
Meta's about to go green if that takes another one.
Clearly, the work from home has led to office buildings being far less, you know, much lower occupancy rates. We're definitely seeing that in a lot of retail establishments in urban areas that people aren't going to the office, so they're not going to, you know, grab a salad for lunch. So we're seeing all these things. We're watching this. And at the Federal Reserve, one of our responsibilities is the supervision of banks. So we need to be, you know, very cognizant and very watching closely how this interaction between some of the challenges in commercial real estate, office buildings, retail, some other, but basically those areas, you know, making sure that the banks are managing those risks that they have where they made loans on that, those kind of investments. That's, to me, in the big picture, is something we need to be very aware of and obviously focus on. It's nothing like the housing, residential housing issues in the housing boom and bust in terms of magnitude. Back to the issue of the banking system in general, I think one of the important reasons.
Mother effer, he asked if we going back to the gold standard. Hold on.
Is sound and resilient. We have a lot more capital, which is the reserves that banks are required to hold, a lot more other reserves and liquidity, so that they're prepared for you know, things like if they took losses on some loans. So I think today the banking system overall.
Meta's going up, break even now. Baidu's going for 133.
Resolution. They had some pretty.
Tesla's just moving. I think they're all moving again. Nasdaq, it's the same setup. The SPY looks like it's doing nothing, but this is just grinding up the Nasdaq.
In terms of the decisions that those banks had made and ran into difficulties, but that's not an issue throughout the banking system. It is really concentrated in a few banks. And like I go back, we have to make sure that our banks are well run and that they have adequate reserves and capital situations where, you know, in case there are some losses in office real estate, that they're prepared for that. So that's what we're focused on, making sure that happens. I think in terms of where you should invest and how you should do things, I'm not going to give that advice. You know, I know economists kind of overreach a bit in giving advice to people. But I go back to you started with gold, and I think you were, you know, in some of those issues. And, you know, I do feel that gold is still, to me, a mystery in a bit. Gold used to be our international monetary system was based on gold, the gold standard. You may have heard about in ancient, kind of ancient history. We got off the gold standard in the 70s. Gold isn't used for anything for our financial system. Sure, people can buy and sell gold. And that's part of our, you know, that's decisions they make, but it's not a core part of our financial system. However, at the New York Fed, we have a very cool gold vault where the central banks around the world, I can't name who or how much, store their gold there, and you can read about that on our website. But it's an interesting thing because it's a vault full of bars of gold. Yeah, it's really cool because you get to like see these bars of gold, but there's filled with bars of gold. They're just sitting there. They're not part of our system, you know, or, you know, tens of trillions of dollars of our economy every year. The gold is not the big part of it. But I can't answer your question about investment, how you should invest, because I think that's, I'll leave that to maybe some of the professors here to do that. So we're down to a couple minutes, you think?
Yes, and there'll be one last,
you have an extra
mic. So
go for it.
This unfortunately will have to be our last question.
Okay, great.
Great.
Thank you for this opportunity. My name is Monique Richards, and I'm with Banco Popular. And as you know, the FedNow program is expected to launch in July of 2023.
It's going to launch in July of 2023.
It's going to. I'll speak in the affirmative. With that anticipated launch, how many banks do you anticipate will be part of that initial go round? And what are the benefits for those that will be available day one, and those that will not be? What will be some of the drawbacks that you see or challenges going forward?
That was not a planted question, but I love the question. Thank you. So FedNow is something.
He said that's not a planted question.
Payment system that the Fed's making available.
I thought you never asked.
The banking system means all of the financial institutions, and it's, when we call it a rail, like it's a train track, but payments are kind of an obscure part of our financial system. But you probably think of checks. Probably don't write as many as we used to, but electronic payments.
Baidu knew high.
And things like that. So we run, along with others, these payment systems. So we've created an instant payment system that is real-time, instant payment, and completely secure. So that means when you're
NVIDIA 298
to friends or family or to anybody to pay bills, if whatever you need to do, you don't have to write a check or.
I think it's almost at $1 trillion.
But it's a really safe.
No, they got 50% more to go.
System. So we've been working on this last few years. It is going to roll out in pilot phase in July. So it's a very small number of institutions that were just for the pilot. It's just to learn how this is working. What are maybe some of the things we need to, get better, add some features, just make sure we understand the basics of it, and then build from there later this year. I think is the plan, and then over the next coming years. We're looking forward to, everybody hopefully joining, all the banks joining in this and offering services and products based on it. So I'm taking from your question is there's a little bit of, hey, can you roll this out a little faster?
Dude, NVIDIA is doing it again. That's another $1.50 in 3 minutes. Watch the NASDAQ and watch the S&P. NASDAQ is going to hit a high, and S&P is getting back to the range it's sold off every time.
I guess, I don't know if they want me to say soft opening, but what I mean. It's a stage to really kind of, get this, work this through so that we can make sure that it's really exactly what everybody, will work well as we bring in, hopefully thousands of institutions into that. But one of the things I just want to mention, I mentioned safe and instant and all that, because a lot of people don't think about how their payments actually work. What we want to make
so again,
sure
NASDAQ hits a high, SPY chills out,
the money went to the
but you're getting a lot of push and pull here, and then a lot of tech leaders still at the highs. Only thing green, communications,
really,
tech, and discretionary still. Energy down 2.1.
People serves what the needs of the people, and is done in a way that, like I said, is very safe. So that's something we're looking forward to in July, which is not far off. It's one of those things that doesn't happen every day. I think our last big rollout was ACH in the 70s. So it's been 50 years until we came up with a new rail.
Good. Well, thank you very much for being here, for listening, for sharing your insights. It's very good to have you physically here with us. I want to thank everyone who came to physically be here, and those who are listening online. This has been very, very enriching. So please join me in thanking our ever-observing.
Thank you.
God, the awful audio.
And from the university's perspective, you are always welcome.
Always.
We would love to have an adjunct faculty member who is...
All right, thank you. I hate to break it to you, Chad. Another one. Another dud. He didn't say anything. He said the same things. There was a couple of times he could have moved the market by saying data dependent and inflation, and then a lot of bullish things about the economy leveling out. But again, this is what every single one of them has said. That's it. Every single Fed speaker so far, I mean, we got another 3, I think, on the day, but they've all said the same thing. And I don't know if the market's reacting or not because the bond market was already reacting prior to it, but it looks like Powell, and even though we'll see if even Powell is able to move us on Friday, but John Williams was big. I thought if anybody would have said anything or could have had the chance to move the market, it would have been him. He's also speaking again on Thursday, but for now, I mean, it may have to boil down to Powell. So that was your third Fed speaker of the day, I believe, and already very, very minimal reaction. And the interesting dynamic of today is not only NVIDIA just ripping faces off, but like we were saying there, again, Danny called it out in the morning. It's very, very unique here. If you haven't noticed it, it's like the S&P does not look like it's moving, but the NASDAQ is. So here's the S&P. It looks like we cannot get above 41.1230 or whatever. But every single time the NASDAQ or the SPY wanted to move, the NASDAQ was hitting a high. So again, first time we hit the high and sold off, the market sold off, NASDAQ went here. By the time we came back to the same level, NASDAQ started to hit a new high. So again, we were doing nothing when NASDAQ was hitting a high, and it's repeated that every single time. So when you're watching the market not move in the S&P today, just keep in mind the bigger weighting on those NASDAQ names. Those are moving you more than anything right now. So welcome. Can we get some PHILO or however you spell it? He said, let me get some PHILO. Everybody like a PHILO. You know what I'm saying? I love a good PHILO. I think we might be able to today. Let's see what else do we have here. Today, right now, it's about 1 o'clock. 2:30, you got Fed Goolsby. 3 p.m., we got Biden and McCarthy. 3:15, you got Fed Logan. And then 7 p.m., you got Bostic and Goolsby again. So let's see what we got here. Good thing I prepared. I got my carbo ahead of time, so we will be good. We will be good. Ba-da-ba-ba-ba. Do the song for NVIDIA. There's a NVIDIA song? What's a NVIDIA song? He said, do the NVIDIA song. Happy birthday from all of us to you. We wish we were NVIDIA so we could have 100 PE too. Hey, happy birthday from all of us to you. The economy's in the toilet, but not NVIDIA too. Hey, that one? That's the only one I know. That's the only one I know. Oh, you want to pump it up? Oh, you mother effer. When was the last time we heard that? I'm not playing it, but I'm just saying, y'all stop asking for a couple of months because we didn't move more than 1% in 6 weeks. Wow. There he is. There's the pump it up track, huh? There's some optimism. Now we're talking. Man, come on. I thought that's it. Everybody, y'all were getting bullish this time around, but not like it wasn't the same type of bullishness. It was like bullishness with worry, not like, yo, play a song. Just remember, at one point, that's how the market would be. That's it. That's it. It was good enough. A song would play, the stock would go up. That's it. That's all we needed. Life was simple. Now we're like, wait a minute, Josh, why does the bad news and the good news not make sense? How does this happen right now? Why is the market not moving? What about the interest rates? How are the interest rates low, but the tech stocks are up? How is a tech stock defensive when the market is not playing defense? I don't get it, Josh. So it was easy back then. That's it. We're like, oh, it's up? Play the song. 6 months later. Hallelujah, 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 hallelujah. Hallelujah, hallelujah, hallelujah. Banger. Or go to the bathroom. I was going to the bathroom. I went to the bathroom twice during Williams. Ain't nothing happened. The market did not respect the potty break. Argentina, boom, ba, boom, ba, boom, ba. Pump it up for NVIDIA 300. I feel like, I honestly, like, we live in a society here where, it's good to keep in mind other people's feelings and all of that. But, like, I'm not going to lie to you. I feel like NVIDIA at 300 is offensive. So, I don't know. I'm trying not to get canceled. I'm trying my best, but I feel like NVIDIA at 300 is a very offensive thing in the market for a lot of people. I feel some people will get madly offended by it, and they'll be like, are you celebrating this? How can you celebrate such a high price-to-earnings ratio in such an environment? You know, so I don't want to offend anybody. If you like 300, you'll love 330. You're a sicko. This is the problem right here, but I respect it, but that's the problem. Okay, I love you, but that is the problem right there. Right there. Man, we're telling you, said, wait till you see 330, mother effer. Oh, man, that's scary. You're right. You're 100% right. Oh, man. I know. That's the funniest part, bro. I think the funniest part about NVIDIA that nobody mentions, NVIDIA is a dividend stock. That's all I know. NVIDIA pays a 0.06% dividend. It is still a dividend stock. So I do know there's at least 10 people out there like, oh, yeah, I'm buying it for the dividends. You're like, what? If that's okay. NQ gonna drop. Maybe not today. This reminds me a lot of last week. We had a very similar day last week. Remember, the breadth was all messed up. Only 10 names were moving. So it's the same thing right now. We just got to get freed up by the rest of these Fed speakers. We'll see what happens with the debt ceiling, and then that's it. But chances are tomorrow is gonna move you, but it's not gonna move you out of the range. But today's a shitty day. I mean, really what you are waiting for right now, besides all of these other speakers, I doubt they're going to move anything. But really what you're waiting for is how everything settles. So, like, right now, it was just like today is so lopsided that where we end up just depends where all of the other industries settle. Does energy come back up? Do materials, healthcare, and finance, do they come back up? That's all that matters because tech is running, tech is leading, 90% of everything is down, but the where we end is just going to depend on whether or not all these other ones. Jeez, man, this thing's messing with me. So, like, this is what we have right now. So this is what I'm saying. You have 3 industries that are green right now, and really, like, where we end up depends where these guys all end up. Again, if energy even goes up to 1%, that'll support the market. But like I'm saying here, financials, healthcare, staples, industrials, like these right here, if they could chill out, maybe materials, one of these 1%ers calm down, that's going to determine, you know, where we're going to close. Otherwise, if tech still holds up by the end of the day and everything gets worse, then we're going to close either right here or at a lower range, but not outside of the range. So that's all it is right now at this point. That's my opinion. So we'll see. We will see. And then Amazon 114.78. Amazon's insane. Even AMD. Don't forget AMD had a bad earnings. AMD was just at $82. My view on bank stocks, I like some of the big banks, but I would really, unless you have a very big appetite for risk, that'd make your life easier. And then if we do get some certainty on the market in terms of what's going to happen, they're either going to be a great dip buy or just something we're going to want to shy away from. Yeah, Zella's been running. We were calling that out during Williams. But Zella's at 516, 67%. No place today, I don't think. All we sold out of was Note, I believe. And then I got clapped. I lost $3,000 on my gold play from last night. Then Baidu came up. Yeah, and then I closed Note. That's about it. So not too bad. But that gold play destroyed me on the second one. But I'm going to get back into that one eventually. I'm still in it, though. I want to add another one, but I'm going to wait at least 24 hours. Sorry, it's part of the game. Yeah, MCL is down $100. We did good on oil this week, so we realized, I think, like $600 or $700 on oil between the flips, and then the MCL's down $100. I think 300 is your obvious short for NVIDIA. I think 310 to 315, because I think everyone's going to go for the obvious short, and then it's going to squeeze up a little bit, and then it'll come back down. But NVIDIA is hard. Remember, we were just shorting it on the way up. It was crazy. Oh, love, but that's how you answer everything. We're at the level we're either going to go up or down from here. Yes, 100%. I mean, I don't think I always sound like that, but, you know, when your 3-month chart or 1-year chart looks like this, you know, it's fine. I mean, the best thing I could give you is I told you we were going to cuck from after Powell. So if you really wanted something actionable off of what I'm telling you, hopefully you were able to get it earlier. But I've been saying it even from 5 a.m. this morning to the minute after Powell. Just, dude, we're about to cuck. We're not going to do anything. So unfortunately, you know, a lot of people are looking for answers every day, and I feel like to try to box it in there, it's not, you know, you're only going to get so much of what the environment is giving you. You could only go outside of that so much. And then the bonds have been good. Again, bond yields higher for a little bit until we get the buy, and then gold, that's the bid down day. But there's been a lot of other little mini things. Just depends on when you're picking it up. But if you're going to ask me where the market's going to go today, right now, or this week, again, I'm thinking we don't do anything for this week. Even from last week, we said probably going to stay here till after expiration. But it's just, it's not easy to answer. And just quite simply, nothing is happening, unfortunately. I think it's actually just, it's crazy. We have to be mighty patient. You have got to be patient. The week could end negative. I mean, last week we're on a streak of 2 negative weeks in a row, but then again, and also too, it's been a month and a half of not moving more than 1% on the week, which is crazy. Condors, I think you're good up until the 19th, but again, after this expiration, we may start to move. And then if we don't move at that point and the narrative is nothing, I mean, we might have a month that looks like April. We're already halfway through, but just, I think that's a good example too, maybe. Just, you guys, do you remember how April played out? Or we did nothing. Remember, you had the fat run into it on March 31st. You had 2 days of up. You went up a little bit. It seemed good, but every day was like this weird range, slowly grinding up. Then you grind down, and then the final days of April determine the whole month. Yeah, the market is. I agree. I think it's lulling everybody into that complacency, or where it's just like the minute it moves bigger up or down, and then it'll chill, and then it'll do the opposite. But it's still gonna, like, that's the problem, is that we're moving so slow until it doesn't. Zella did some BS split. I think they had something the other day. I haven't looked into it. I just see it as a runner. That's as far as I'll take it. 3M 10-year low. And ex-dividend is tomorrow, which is crazy. Or I guess March 18th or May 18th. $2 trillion reverse repo. Where's the volume on the SPY? 28 million, and we are hour number 4 almost, actually. That's pretty wild. Pretty wild. End phase on the low. Uh-oh, hot dog. Wait, hold on. Lending Tips texted me. He wants a play. He's inspired by his Target now. Or by his Home Depot. He wants Target next. Ba-da-ba-ba-bop. Gold pop, not good enough. Bro, gold just got murdered today, below 2,000. That's like the first time, I think, at least in the month almost. Or no, it was just at 2,000 the other day. But where was it? Below 2,000 was like last week of April. But then it even started May out. But that was a big drop from yesterday. He was right with Meta and HD. Get him his target. He said, bro, I want Target next. Oh, Baba hasn't reported yet. I'll check the pricing, and we could go over some of those earnings previews if you'd like. Wait, were you saying Amazon going to take out Target next? No, just consumer stocks. That's just it. That's lending. That's Lendington. Well, we might have to go over it in a little bit. Short the clown. No, McDonald's. Crazy. HD reported worst earnings in 20 years. I'd probably wait a bit. If market tanks, HD will too. And just, you never know. I mean, once they do really, really bad, I can't even believe HD got bought up. So I think the initial reaction might be down, but until you really need everything to dump there. What is it? Was it Costco? It reminds me of another consumer stock that did something very, very similar. So we'll see. No tins on the bricks. Nope. PTPI. All right, yeah, 3M's going lower. There's Amazon. Now the SPY at VWAP. Baidu's up. VKTX, they got like 2 different price target increases today. I think it was Costco. I think the first bad earnings, they went down. But I don't think they were as bad as Home Depot. But then Costco it ripped right off of it. It was down 10% in a day. Next 2 days, it came right back up. And then everybody just realigned at a newer, lower expectation. The reload, well, watch the NASDAQ. I think that's about it. I think if the reload candle is very simple, NASDAQ's actually going down with this. But watch out, because if SPY drops and then Amazon and Google and everything starts ripping, it's not really a drop because the NASDAQ is just chugging along. But we'll see. We're right back to this point. Adobe. But Chatadonia, Google's on the high. It's time, baby. Oh, Chatadonia. Ladies and gentlemen, boys and girls, how you feeling? Yes. It's PHILO time, baby. Oh, yes. And I like this PHILO because I got to read something the other day, and I got a new outlook on it. But I got something for you. I mean, we're gonna talk about the game of life today. I don't know if you guys wanna talk about the game of life, honestly, because it's a very interesting one. Unfortunately, there's some Bible history. However, even if you don't like it, I don't know. It might change your view on some things, but that's not what I'm trying to do. Let me just get into it. So we're going to talk about 2 Timothy. I was telling you a little bit about it, and it was a very, very interesting one. But this is the first thing. I was reading it the first time, and I didn't like it as much because I was like, damn, like this is very like aggressive. And I was like, let me get more context on this. And I started reading why the book was written. And I don't know if you've ever read the book, bro, but sometimes you'll read it and you'll be like, damn, like, okay, I think he's talking to me, and he wasn't. So pretty much the interesting part, and I think some of you might be able to relate, the interesting thing about this book that was written, 2 Timothy and even 1 Timothy, it is a letter from Paul to Timothy. This is like his mentee, the guy that he's mentoring. So the whole book is him writing a letter out to this guy. And if you read it like that, it definitely hits a little different, because if you read it and you're like, damn, is he talking about me? He's not. When you read it as like a story written to somebody else, it starts to have more meaning. And now here's where it gets good, because the context was there's two books of Timothy. There's the first book and the second book, right? And it's funny because the first book, Paul was writing a letter to Timothy, and he was like, I taught you guys so good, and now you're falling back. Now all you guys are doing is arguing. All you have is a culture that is focused on arguing rather than truth. Honestly, it's crazy that this book was written thousands of years ago, right? But that was the first letter. And then in the second one, Pfizer dollar bond book tops $85 billion. But that's the first one. Then the second letter, Paul gets in trouble and shit is going down, and then he's telling Timothy, yo, you gotta stay with it. And actually, the second letter he's writing to Timothy is because at that point, Timothy was losing hope and was getting frustrated and was getting ready to give up. Oh man, it's a beautiful story. If you read it like a story. But that's the first part, because I thought it was pretty funny when you think about it. Why? Because isn't it funny? The first letter, he's like, oh, we're doing so good. Why did you do this? But then the second letter, once he runs into trouble, the first letter, he doesn't even care about it. Everything flips to come here. All right, we need to do this. Focus on the mission. Don't lose hope. Rather than, oh, how come you're not upholding the standard? I thought that was a big shift. I think it reminds me of life at times. I think it's like the first part, you're worried about trades. You're like, oh, am I slipping off with this? Am I doing good? And then that's it. If everything goes down, you're worried about something completely different. That's it. 2 years ago, you're worried about top ticking something and getting the extra 1,000%. Now you're worried about, oh my gosh, is anything ever going to go up? Why is it going down? So that's the context. Okay. I hope I didn't bore you with it. Okay. I hope I did not bore you with the context, but I hope you understand a little bit about it. The whole thing is a letter to somebody who is getting frustrated and discouraged. Now, to me, that was very encouraging. It was actually great to see. But then there was a part he said. There was this little verse in there that kind of tripped me out. And he starts talking and writing to Timothy. He says, what does he say? He says, soldiers don't get tied up in the affairs of civilian life. Then he says, athletes cannot win the prize unless they follow the rules. And hardworking farmers should be the first to enjoy the fruit of their labor. Think about what I'm saying. The Lord will help you understand these things. It's funny because I love how he ends that, because right away he says the weirdest thing ever. right away. Right after saying that, he says, also, just don't forget, Jesus Christ died and came back from the dead. That's just the fun facts for the believers out there. It's interesting how that came right after it. But I want you to see those three things, and welcome to the game of life, my friend. That's it. The first part, civilian life is different than service life. I know we got a lot of spies dropping and bonds catching a bid after the Pfizer stuff, low key. But I know we got a lot of military people in here. Shout out to the vets. That's what some people say. I've had people in the military say that. They say the moment you sign up for the military, you as an individual ends. Why? Because now you become a part of something bigger. You are now part of something way bigger than yourself. You are now committing to a duty and service 24 hours a day, 7 days a week, 365 days. Your service does not go, that's it. You're always serving when you are in the military. That is one of the biggest differences. Your standard of life and what is held up to you now, your life completely changes from how you live to how you behave. So this is crazy. Because it's a very interesting comment given the context of the book. And like he says, he lists these three different things and he says, listen, just think about it. The Lord will give you understanding on this. He don't even explain it. So I really sat there for a while and I was like, yo, Lord, are you going to explain this to me? I was really, really caught up on this. And that's why this first thing, it really did stick out. It does kind of remind me of the game of life. And this reminds me of something that I have told you guys a lot. I said Chad excellence. I think this is a better way to put it. You want something bigger. You want to be a part of something. You want to change the world. You want to make a business. You want to change your family's wealth. I don't know what you are looking to do, but you want something big. You better start realizing you're a part of something bigger. You now have a different standard of living. Guess what? Even if you don't want to do anything successful, tell me I'm wrong, but I feel like this is how everybody falls into a category. You are either a civilian or you are military. Even in your normal life, you are either a part of something bigger and you follow the broader current or you do not. Some of you uphold yourself to a standard that you set based on whatever you believe, your principles, whatever it may be. Your standard is different than whatever the world or common society may be. That's a decision we all make in life. Are you going to be a part of something bigger and uphold a different standard, or will you follow the prevailing standard set forth by everybody who is not confined to serve or follow in whatever it may be, military, call it whatever you want? So that's the first. I was really, again, and I hope all of you think about this, because this is just my take on it. And I'm still praying. I said, maybe give me some more insight into this one. But that's the first one. The second thing he says, this one's crazy. Athletes cannot win the prize unless they follow the rules. That's crazy. But again, welcome to the game of life. Do you get what that one's saying? Great. Pick your standard. Are you going to live a part of something bigger or not? Follow the crowd, follow a different standard. But now, no matter what, you have to follow the rules to win the prize. You could be extremely skilled. If you don't follow the rules, you don't get a prize. Simple as that. But what is that saying? The way I took a step back. I said, damn, kind of reminds me of the market. Kind of reminds me of a lot of things in life, of an attitude that I have learned to develop. Why? Because things were not always fair, my friends. You may realize in this game of life, there are parameters that all of us must stay within. Quite simply, we do not make the rules. So you could pick your standard, but regardless of the standard, we all have to deal with it. Again, there's parameters to the market. Even if I don't like certain things, it doesn't change that's the rules of the game. The rules are you get born on this earth. We are all born randomly. Some of us born into better situations than not, but we all have to deal with the same basic principles more or less. Is it easier for some people? Yeah. Is it harder for others? Sure. But the general logic is that there is a basic set of parameters that none of us chose. We were all placed into it, and you do not make the rules. Achieving success would require staying within some level of parameters, no matter who you are, how skilled or lack of skilled you may be. So that's the second one. But now, this is what I like. Again, he's saying you either military or civilian. You either follow in the rules and operating within the parameters that you did not choose, or you are not. And then the final thing, this is where it gets a little crazy, and this is where it kind of gets encouraging. He says, what? A hardworking farmer should be able to get the first of his fruits. He should be able to get the fruits of his labor. Again, this is written a long time ago. So that's kind of crazy. Because even with all of it, you pick your standard. If you pick a standard that is higher, you are going to live and sacrifice different than your peers. You have to follow you don't want to follow the rules, don't cry about it. You follow the rules and you don't cry about it. Again, though, but we all have these parameters, right? But then the last thing that is said is quite simply, all of it is worth it. Why? Because he is saying there is a reward for those who put in the effort. So I don't know if I figured this out. Again, I still need to think about it a little bit. But like I said, welcome to the game of life. And I feel like we are all challenged with this on an intraday level every single day. You have to decide whether or not you are going to live into the standard that you set or not. Are you going to act like everybody else, or are you going to act your own way? Again, are you going to follow the rules, or are you going to break them? And then how are you going to feel when you play that? Or are you going to say, oh, the game is rigged. There is rules, so this game is against me. I cannot compete because the game is against. No. Guess what? That's a decision you get to make every single day. But finally, there is a reward. And now that's the thing we ask ourselves is it worth it? That's what you go through the first couple of things, you live through enough life, man, I don't know. You're going to start asking yourself, is it worth it? Is there a reward? You're going to look and be like, I ain't getting no reward yet. The reward hasn't came. Will it keep you going? Well, that's the thing. That this is what we are facing every day. So I like it. And I like the end because it's borderline just saying, regardless of all of it, however you get to the steps, you will reap what you sow. You plant, you get it. You work hard, you are entitled to the reward. And the beauty is, I think this applies universally to everybody. So, either way, this was just something I was thinking about. And I liked it. And here's the best part. Like I said, don't let me forget to where this came from. This wasn't just the book. Again, you go and read this book, man, and if you read it at face value, it's going to sound like someone's yelling at you. You're not going to pick up on it. Remember, this was a letter to somebody. This was a letter written to somebody who was facing things that were bigger than him. Alexander the Great was persecuting them. People did not like them. People hated them. People were going at this guy, gave his whole life to something, and then a couple years later is getting very, very discouraged. Oh man, that's a touching Netflix story right there. But that's what all of this was, and this was a letter to him, giving this to somebody who is frustrated intimidated, and ready to give up. So hopefully you get understanding with this, but it's beautiful to see, man. And ultimately, he says it, man. He says you're going to deal with people on arguing rather than the truth. He said very, very simple, man. He said it's all worth it. Embrace within all of it. But again, all three of them. I don't care what you believe. Like I said, I feel like we all deal with this. We all have to pick what standard we want. We all have to decide the parameters and whether we fight against the rules or not, and how it changes and motivates our behavior. And then there's also a reward for what we do. There is a consequence. So I think it's crazy, but just don't forget, all of this was said to somebody while they were intimidated and while they were discouraged. And this is what it was saying to focus on. So Chad, I don't know what you're going to get out of it, but it blew my mind, and I got pretty excited off of it. And I think it's always good. Again, I hope it could bring you some hope, but at the very least, I hope it's practical and gives you something to think about that you could start acting on. But either way, baby, that is your philosophy. Make sure you guys are subscribed. We're live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. You're on mobile. Press hide chat. X out the chat. Hit the thumbs up button. Second link for the nightly watch is the main channel. First link for the Scream Alerts boot camp and real estate course. That is your philosophy. That is your philosophy. There it is. Oh, yeah. Whoa. Yeah, bro. where is J. Alt? I knew I wasn't seeing J. Alt in the chat, but he says he might have been banned. Did y'all pocket ban J. Alt? Oh, you motherfuckers. Damn it. You guys see, but guess what? It's all, you guys better show love and rejoice. You know why? Because that means I'm going to have to unban everybody. Fucking damn it. And there's no way. And then some of you might not even get unbanned. But now it's a blessing. Because that's it. So, to save one, we will save all of them. That's the message of the Bible too. So I guess, well, sorry, Jay. You should not be banned. I don't know why. I was wondering where you were. I was wondering where J. Alt was. Yeah, we need free J. Alt. This happens once a year. J. Alt is wrongfully imprisoned into Chad jail. I don't know how it happens every time. Yeah, we'll get you. We'll call King Stallman. We'll get you bailed out here eventually. That's very weird, though. I didn't know. I thought you were, mad at me or something. I thought, that's it. Origin earnings came in. I didn't buy it. I thought J. Alt was like, fuck it. I'm done with the cult. But no, that's good to know. That's good to know. He's here. He's safe. Hold on. Damn. Yeah, J. Alt. Damn. I'm looking through all the names that are banned, and they're wild. Fuck. No, J. Alt. No. I've been here since 2020, and I'm still broke. I'd say you could blame me for 10% of it, but I mean, regardless of where you're at now, let me ask you a better question. From 2020 to 2023, while you were here, assuming you were here every day, was there an opportunity to get stupid rich off of anything presented? Whether it was Bitcoin at $10,000, whether it was 2020 pickups, 2 TLTs, a wheat, a couple of other things, fucking, I don't know, any of the random 18 weeks of 1,000%ers telling you to buy real estate, all it is. So the point is, everybody's at different spots, no matter what. Some people made a lot of money, some people went down, some people made nothing, then it went up. The point is the opportunity, and I hope you do something with it. My thing and how I will judge myself is how I maintain and do I stay alive as well as save 10% in the long term. But the opportunities are there. That's why, in a weird way, if your bank account doesn't reflect it, I really hope these last 3 years gave you a nice example of several different opportunities and what is possible. And hopefully that 3 years, you're able to pick up off of it. And hopefully it showed something about things to do better than I did, and also where to avoid and to capitalize like we did as well too. Is saving all of your money bad? To a degree, if you don't ever put it to work, then yeah. We were talking about that yesterday. All right, I need to go bathroom. But let's have some talks. And then we'll have to free J Alt. I can't believe they got him. They got him, bro. They got him. Google on it. Okay, let me go pee. Follow me on Instagram at The Trading Fraternity. I love you and good morning. Still the morning, right? 50K saved up. Go put it in an Apple savings account until we find a house for you, or until it makes sense to buy some stocks, or start buying a couple of dividend stocks right now at the lows and wait a little. And that's it. Come on. Why does it do it? It does this no matter what computer I am on.
Sector. Let's get to our stock.
Let's get to our stock. You could put it in bill, but again, if I don't want to confuse people, it's like if you don't, because I've had people literally ask me, what do I do with bill? And then I'll tell them exactly what to do with it. And then the next day they'll be like, is it time? And I'm like, no, it's not the time. But if you really want to make it simple, just go fucking stick your money in an Apple savings account. That make your life so much easier. 4.5% Apple savings. Don't fucking worry about anything until the rate goes down. And even then, it's an Apple savings account. You see what I'm saying? So that's what I would do. If you had that money and then you could take 50 grand, put 10 grand, start splitting 2K into like 5 stocks, or maybe you could put like 3 stocks at like 3.5 a pop or something like that, and then save the rest and get interest until you get till you find a house or anything else. Okay, I'm trying to get you guys this.
How this ranks
there
in
it
terms
is.
of
All right.
book building. Have you
I'm
ever
going to go to the
heard
bathroom.
of somebody
Follow me on
writing an
Instagram at The
$85
Trading
billion
Fraternity.
book?
I love you.
Yeah, I think Warner Brothers Discovery actually got a little bit over $85 billion, but it's really big considering a lot of people were worried today that Amgen's, the challenge on Amgen's deal would have put a little bit of a damper on investors' demand on the deal. So it's encouraging to see people really want to snap these up and that the orders are really coming in.
Well, we're going to talk about the Amgen deal in a little bit, but just when you were working the phones, when did you start to get a sense that the appetite out there was pretty robust?
Yeah, I mean, everybody's been waiting for like a big M&A deal like this, and even before I started working the phones today, like everybody was just kind of talking about how much they've been wanting this massive M&A deal, and M&A has been really sparse in the high-grade market so far this year. I think we only got Amgen as one of the biggest ones and one of the only ones. So, everybody was just kind of talking about that Pfizer's a great company to be coming to the market. Everybody's really positive on their ability to absorb some of the debt that they're putting out. So everybody was just really looking forward to snapping up a bond like this.
So what is special mandatory redemption language, Josiana? Apparently they've taken that out.
Yeah, so special mandatory redemption language is basically language that some of these companies put in before they, when they put out a bond before they close an acquisition. And it's just to make sure that if they put out this bond and so unfortunately an acquisition doesn't close, that there's an ability there to redeem these and that people will get their money back. So Pfizer switched their language a little bit on the heels of this Amgen deal just to make sure investors were really solid on it and investors were sure that they would be getting their money back if anything happened.
providing a little bit of flexibility for some of those potential bondholders. But just reading what you've been putting out today, it really, it sort of echoes what you were just saying. It seems like the appetite was strong enough that there are plenty of players who are just happy to get into the mix with this bond offering. Is that accurate?
Yeah, definitely. 85 billion is huge. That means a lot of people were looking to buy it, and it just means everybody was really into what the deal was about. And, you know, with a deal like this, it's on the longer end of the curve. I believe the longest portion of the deal is a 40-year bond, and investors are...
They're loving it. They're loving it. And you got $50K. I want to pay my mortgage monthly. With that, should I trade? What should I trade? Are you trying to get passive income with zero risk? Or are you like, yo, I got $50K. How can I pay my mortgage every month with that $50K? With trades, I mean, it's going to be a little bit more risky. Or there might be a month you can't pay the mortgage or it'll cut into it. But right now, currently, if you had $50,000 based on an Apple savings account or bill, you would be getting around about 4 or 5 a month. So this is almost 0.5%. So you'd be getting $225 a month, risk-free. So that's the easiest way I could do it to you, in the sense that that's the best mortgage we could cover with that. Everything else would require risk. I want to fix income and I want to trade and make money to pay the mortgage. That's off, is it? I mean, it looked like if that wasn't, it seems about right. I think it's 0.5% a month, or 0.45 gets you like what, 4.7 annually or something. It was like 0.4. Oh wait, yeah, like 0.045 times 12. It's like that's like 5. That's a little higher actually. So that's 5.1% or 5.4. So you'd actually get paid less than that. No. Annually would be the 5%. So I divided it by 0.04. So I did the monthly. So yeah, that's going to be pretty difficult with the trading thing, but I'll give you a solid answer. I would sell premium. That's what I've done in the past. Wherever I wanted to generate income, selling premium had a nice place in my life, but it's not safe in the sense that it is generally safe, but you could easily, you know, again, I've wiped out 30K on an Apple spread. I've wiped out 30K on a Spotify spread. I could keep going down the list, but then again, I've had before blowing up on one of them, you'll probably hit 6 months in a row. So, but realistically, if you want to take a big amount of money, generate stable income that's not fixed and above fixed income, probably selling premium is your best bet, is what I would say. I've gotten clapped on credit spreads. It's easy to get clapped, but you just have to, you have to legitimately, strictly sell the worst, the lowest probability ones, and then even then, you got to still resist the temptation to go too big. Am I low-key bullish? Yes, 100%. Again, I have a lot of stocks. I have a lot of assets. Do I believe there's things wrong in the economy? Does the yield curve make me bearish? Yes. Do I think everything's a shit show? Yes. Do I think everything is risk-free? No, not at all. Not even close. However, unfortunately, fortunately, God is good, finger to the sky. I'm always going to be bullish as long as I own stuff. Again, everybody talks, everybody does it, but when it's all said and done, your ownership represents how you feel. When it's that's it. I've never really listened to people. I always listen to what they, their money says a lot. I mean, this is an age-old phrase on Wall Street. Don't do as Warren Buffett says. Do as Warren Buffett does. Okay? So Warren Buffett, even though you love the guy, he looks like a giant teddy bear, and you're like, oh, it's fucking Uncle Warren. You know what I'm saying? Everybody, he actually has a crazy contradicting history. If you go and look at a lot of things he said over the years, he'll say one thing and invest completely different. And really, you make the money by investing how he invested, not by going off of what he said. So that's kind of how I feel about anybody's intention. Like, you know, as a fake economist, I consider myself a fake economist because I'm not a part of the institution or establishment. But the thing is, that's how I boiled down everybody's intention. It's simple as everybody could tell you whatever they want. But, you know, like, again, when everyone's like, oh, the dollar's going to collapse, like, shut the fuck up until I pay you with a ruble. You know what I'm saying? Until you are actually physically embodying your belief, I don't believe it. That's it. Why? Because if you don't believe in the dollar, you wouldn't use it. If you really believed in the Chinese yuan, your fucking bank account would be flush with it. Why? Because that's what people do when they think something is going to work. Again, when everybody thinks tech is going to work, they all buy it. They don't just look at it, right? That's welcome. You've seen it throughout 2020. Houses, interest rates, it don't matter what it is. Meme stocks, AMC, GME, we could go down the list. But if people want it, they fucking buy it. There's no excuse. So that's where it's like, that's how I boil down a lot of things, is that people will say a lot, feel a lot, believe a lot, but it all boils down to your buying position and what that is implying. So, you know, when I look at bonds and I look at interest rates and when we look at earnings, there's something called implied volatility and the implied pricing. Based on the credit default swaps, we could imply the probability of a recession. So based on what people buy or sell, naturally in markets, there's an implication based on your purchase or sell. So that is what I focus on a lot, believe it or not. So that's where I'm saying, take whatever I'm saying. Again, I cover so much on a day-to-day basis. People getting mad that I'll tell you what's going to happen 2 weeks ago, and just because I say nothing's happened today, you're like, what the fuck? Say something, Josh. But it's like, whatever you're hearing me say, I will cover the up, the down, the bad, the good. Again, there's days I'll go long and short at the same time. Long stocks, short equity, or short bonds. A lot of different things. But when it's all said and done, my basis and what I've told you, I have held stocks since I was a child, and I am still holding them to this day, and I've added to it. I've expanded my portfolio. I've sold some things, but at the end of the day, I am a net owner of equities, real estate, and several even companies, just different assets. I am a owner, and I am bullish based off of that. My implied stance towards America, the economy, the United States, and the financial system, I am bullish simply because I am part of it, I own it, and I am fully invested into it. Not fully to the point where I don't have cash or other reserves, but it doesn't change the fact that by owning that stuff and for how long I have and to continue to own them, I am implying a certain sense of upside, or I believe in a certain sense of value with what I own. So yes, I am bullish by nature. Again, I could go to what makes me bearish and why I remain agnostic and how I am going about it all. But when it's all said and done, just don't. Anybody who owns fucking a bunch of stocks and telling you they're bearish, fuck them. And vice versa. Anybody, you know what I'm saying? Anybody who's telling you buy the dip, buy this, and they don't own something, fuck them. Again, because it means nothing. So unfortunately, what you own says a lot about what you believe. Say it with me, Chad. What you own says a lot about what you believe. What you own says a lot about what you believe. That's it. Simple as that. That's facts, man. That's facts. But that's where I think a lot of us forget that. And that's why, that's why we've always said, like, straight up, that's why I've always told you guys, post your fucking plays. Because that's it. Anybody in a chat, that's why I've always hated chat rooms. Because what people do, you have people pumping and dumping and they have a $10 position. You know what I'm saying? That's the irony of the stock market, is that somebody who owns nothing could convince somebody with millions of dollars something about their own assets. It's mind-boggling. But that's why it's like your background of what you are really owning tells you about the belief. You know what I'm saying? Like, again, it's a parable. This goes back to the Bible days. Even Jesus knew this, man. Even Jesus was spitting game back then. They didn't even have the internet. He said, if you stumbled across a field and there was oil underneath the ground, what would you do? He said you would go and sell everything and buy that field and rejoice. That's what it says in the Bible thousands of years ago, or whatever you want to historically date it to. So that right there is even, it's like, that's what I was saying, where it's like, if people believe something, they act on it. If someone is like, whoa, there's value there. Oh yeah, you're not going to see it. Like, people are going to go and buy it. They will sell everything and go and buy it. So what you own says a lot about what you believe. So we'll see. We'll see. But what about a stock got caught holding the bag? Still represents something. At the end of the day, you've seen capitulation. If you want to get out, you get out. Fuck it. You're probably bag holding if there's still a little bit of belief. Because again, what you own says something about what you believe. Or maybe you just believe that it's not even worth it to sell out. Because at that point, the risk to reward isn't even there. But again, there's still a belief embedded in what you are owning. Oh, yeah, I forgot. We got to get you this, too. All right, here, hold on. Pfizer selling $31 billion of bonds in 8 parts for CGen deal. Damn. $31 billion in 8 parts. Seems lower than the 81, but I don't know if they're going to tack that on to the end. But again, that's been affecting the bond market a little bit. Remember when Meta had that? Google's on the high too. Baidu about to hit 134. And then again, you've seen this. SPY bounces back up. New high for NASDAQ. SPY stays exactly the same spot. Damn. Bro, medical toolkit. He's just dropping heat. He said humans are the only species that thinks they own stuff is humans. That's dope, bro. That's dope. You could buy one of those PFE bonds, yeah. You want to see if we can? You could probably get in on it on TD Ameritrade. All right, animals also territorial. Yeah, I guess. Man, y'all fact check that comment real quick. Fuck, man. Damn, I was vibing with it, man. You're like, wait a minute, Josh. Hold on. Oh, there's something about this does not sit right with me. Hold on. ON Big Wick. Oh, yeah. ON Semiconductor. Big pop and drop right there. Does anybody know what the bond rating is for Pfizer? Is it AAA? But I think you can get it. 8-part. Where is it? And then SAP is on the high again. Remember, they gave the guidance in buyback. It's A, stable. That's what I was thinking. All right, let's see. But again, if you go to TD Ameritrade, so if you go to trade, go to bonds and CD. I don't know if any of you are fucking trying to buy a new issue corporate bond. I don't know, maybe. I think it's cool to know that you could do this, but these are all of the different, like you could buy a NVIDIA bond. This one's on June 15th. They're doing an offering. Here's I think this is it. This is Pfizer, June 15th. This could be it right there. This could be one of the parts. We might have missed the other one. So dated, when does it mature? Oh no, this is old. This is a 10-year. This is an old 10-year-old. So this one isn't a new issue. I don't even know. I don't even think they have it here. Let's check if they have it at the 7-year. Bank of America, Goldman Sachs new issues. Yeah, because they don't have 40-year plus on this. They have corporate triple B, 20-year plus, Dow Chemicals, that's it. But these are some that you could get in on them if you want. I can't lie, that statement felt deep, and I thought about it the first 3 seconds. I was like, nah, that's fine with me. That's like TikTok. That's fine with me. That was good. That's fine. Y'all came out with y'all turned into Elon Musk. Y'all put a little comment box underneath the comment. I usually just follow the 10-year bond. I mean, I look at all of them, but I do just view the 10-year realistically. You can fool some of the people all of the time and all of the people some of the time, but you cannot fool all of the people all of the time. Abe. Oof. That's deep. I like that. Are you following up with another? I like that one. I could take that one. Any fact checks on that? And then someone be like, well, Josh, actually, technically, the current administration. What? Okay, maybe. Bob Marley. Oh, do you know it, bro? Do you guys want to know my post-gym song? I feel like a schmuck sometimes, but then it makes me feel really cool. Every time I leave the gym, I put my windows down because I'm sweaty. I open up my sunroof, and then I start bumping Road to Zion with Nas and Ziggy. I'm like, waiting on the road to Zion. Oh man, I go crazy with it, man. That's my post-gym song. That's it. Just hyped after the workout, man. And then just some Road to Zion. That's it. And then I think about the regional banks. Because Zion, but then still. It's a good song. Oh, yeah, it's Damien, not Ziggy. My bad, sir. My bad. Sometimes I can't help but feel helpless. I see in nightmares at daytime, wide awake, try to relate. Oh, it's good. It's good. Nothing at 3 p.m. for the debt. Or for at least a debt meeting with Biden and McCarthy. Okay, give me a second, and then we have to talk lending tips plays. I'll be right back. Follow me on Instagram at The Trading Fraternity. I love you.
And of course, Janet Yellen recently saying time is running out. And we're seeing that in all kinds of markets, especially money markets, of course, a haven asset. So if we take a look at total money market funds and we go back before the global financial crisis, we can see total money market funds at a time of prosperity and stability about $2 trillion. At the height of the financial crisis, let's call it $4 trillion, and then back down to that $2 trillion number. Now in the pandemic, rising above $4 trillion. But take a look at 2023, because of course, relative to the debt ceiling, it was hit back in January. Since then, Janet Yellen has basically been doing special accounting maneuverings. Francis Stacey of Optimal Capital has talked about that before, and that's one reason that the Fed taking money out of the system hasn't hurt, but sky high to a record $5.34 trillion. But not all money markets are created the same, Romaine. If we go into the Bloomberg terminal, we are going to see, and this was kind of your point, if we see a default, it's going to be, it would hit those treasuries that come to maturity after June 1st. So what we're looking at here are T-bills that mature in May. So they're carrying a yield of about 3.3% and 3.7%. But when we push out into early June, above 5%. So investors are demanding more return for those bills. But Romaine, to your first point on whether or not we're going to see a default, if investors really thought we were going to see a default, where would they really be? 10%, 20%? I think that they would be a little bit above 5%, but that divergence certainly shows the stresses you're talking about.
Yeah, definitely a nice snapshot of what's going on in the here and now. Let's get some broader context from Jerome Schneider. He's PIMCO's head of short-term portfolio management and funding, joining us in studio here in New York. Jerome, great to see you.
Thank you very much.
I do want to start off with some of these short-term moves. Everybody's paying attention to T-bills and all of these short-term treasuries to try to gauge, I guess, just how much fear, how much risk is out there in the market. But I'm wondering if you could kind of put that into sort of broader historical context. How severe are things right now relative to what we saw in the past?
This is not only a conversation piece, but it's actually essential just to take a moment and survey the landscape. And in the landscape, we can actually see from previous episodes dating back to 2011 that in reality, the stress points are actually not that great. The magnitude is not that great. The fear quality is not that great. And so while we really need to be mindful of how we get to the end of the road, how Congress actually gets to the point of reaching a conclusion, and it might be a bumpy road and it might be at the last moment, the numbers that we are seeing that were just presented really don't represent that much stress. Fear is going to be exacerbated to the tune of hundreds of basis points, if not more, in T-bill yields, thinking about some yields in the excess of 7, 8, 9, 10%. We're talking about 30 or 40 basis points. Again, not the PIMCO baseline prognosis, but really what we're thinking about is the fact that the landscape right now is very divergent in short-term rates. And so a lot of the growth in money market funds that we've witnessed over the past, basically year or so has been defense. People really focusing on defense to portfolios and de-risking their overall portfolios away from risk appetite. What we're seeing here in this location is a fear of a microcosm of the X date. And unless your prognosis is actually to need cash on a specific day, then your fear is probably should be fairly benign in that regard.
And
You're actually bored today, and this guy's like, the prognosis of the progamity and the so that didn't help. But more debt ceiling talks. But now, Chattadonia, are you ready for some Lendington? It's actually not even Lendington. This guy's blowing up my phone. You guys are already hyped up on it. LT wants a play, bro. LT wants a play. So again, LT, he told us to gamble on Meta, and it popped. He told us Home Depot is empty, and it looks like it was, kind of. He went 2 for 2. Will he go 3 for 3 on the heels of his latest Home Depot lending tips? Says Target is going to die. Wow. So he wants a play. I don't know. He gave me a play. He said he wants puts. He said get some puts. I said, what about shares? And then he said, just do whatever. Whatever will get the Chad excited. I said, are you sure? I said, the Chad's already excited. I said, they already know what you've called out there. So now, right in between 2020 levels and in between 2022, this is Target. He wants to do it. So he said, I said how much. He didn't tell me an amount. I said, you could do shares. I don't know how you're feeling about it. So we keep on waiting. Let's see. There's only one way we could do this. We got to check the price. Oh, wow. Fed futures are back up to $100. I wish we did more. Target. Looks like they're pricing in $10. Whew. Yeah. Wow. 150, about $10. So it's not 10%, a little bit less. And let's see. I pretend I'm lost at Target. Okay, here's your Target earnings preview. So Target expected a report on May 17th. Comparable sales estimate 1.1, comp digital sales 1.9, adjusted EPS 1.8, sales estimate 25 billion, gross margin estimate 26, EBITDA 1.8. Second quarter estimate is supposed to be 198 for adjusted EPS, comparable sales of 0.5%. 2024 guidance, adjusted EPS of 836. Here is some analyst. I don't know if there's too many. Wait, here's one. Wait, where is it? No, we don't have this is the only one I have. So Target Let's see. A challenging environment may temper Target's first quarter as seasonal Easter sales and strength in high-frequency but lower-margin categories like food and household products are partially offset by muted spending on discretionary items such as apparel. The company forecasts a wide range for quarterly same-store growth from down to up in the low single digits. Target is investing $4 to $5 billion a year to help improve shopper experience and deepen guest engagement. Though it will take time to see the benefits, operating income is expected to decline versus the prior year, but show sequential improvement from fourth quarter. Target's progress towards their goal of returning to 6% operating margin by 2024 is in focus. Finding ways to reduce costs and eliminate inefficiencies will be the key to stabilizing margins on the long term. Adjusted EPS may fall 18%. Same-store sales could rise 1.5%, and then gross margin may expand. And then for Target, you have 21 buy targets, 18 holds, and 0 sells. Average price target, 180.35, 12% upside from current price. Implied one-day move following earnings, 4.5%. Adjusted EPS has beaten 8 of the last 12 quarters. Shares are down 27% in the past year, while the SPX is up 2.8%. Wow. So shares are down almost 30% on the year. They're up 7.4% year to date. And then earnings are pricing in about 7%. Huh. So, Chad, that being said now, what are y'all feeling? Shares or puts based on lending tips? And then how much? I don't know. I'm kind of content, but lending tips, I don't know. We might have to call him. We'll see. I'll call him after I see what you guys say, because you guys at the same time, you guys will get too crazy. Y'all get caught up into it, and then he'll feed off of you guys, and then before you know it, you guys are like, all in, we'll do it. I was thinking 500 shares. 500 shares, 78,000 net value of it, and then pretty much you're risking $5,000. If it goes down, up $5,000, up $10, you're down $5K. Down $10, you're up $5K. Is Target after the bell, or is it or is Target before the bell? Don't do it. Tesla, buy calls, 10 calls at the money, 500 short. We could just do 500 on a put. Or what if we did 5,000 on a put? Well, what if we did 70,000 on the put? I'm just trying to, he said whatever number gets you guys excited. Again, I'm charging him. He actually did a deal for me, and I owe him money, so I get to charge him for this if it doesn't work. So it's good. Sell everything. Target's in the morning. Iron Condor, $5,000 put. That seems the most realistic. Either if you did, or 250 shares would be 2,500 risk on the earnings, or you could put 2,500 for the option. Play Walmart as sympathy, 5K. All right, let's see. I do options with the +7, -3 P&L. Seems like more opportunity than shares. Well, there it is. I gave you a vote. How should we? Let's see the vote, and then we'll see if lending tips is available. Well, you have it. 2.5. A lot of puts on there. It seems like more options. A lot more people like the option plays than the shares. You guys really okay? That's it. That's only 180 of you have voted though. So, you know the laws of statistics. What's the expectation? Lending. This is so lending tips. He called me again. He's done this on the couple of earnings here. He was excited after Home Depot, and he kept blowing up my phone today talking about Target. And now with the market doing nothing, I figured it'd be a good conversation. And then if I could find a way to not pay LT for my last house sale for the commissions, it's a win-win for everybody. You don't get liquidated on puts? What the fuck is this guy saying? What do you mean, dog? You'll get everything get liquidated, man. I don't think they got anything, bro. I'll tell you like you tell me. Look at this guy. It's a real Chad right there, bro. Come here, Saul. I give you a hug right now, Saul. He said, Josh, I'll tell you like you tell me. Give me the money and I'll invest it for you. Yo, just give me the money, bro. Just let me get there. That's the smartest guy in the chat right now. He just went for it. He said, Josh, let me get at least 500 of that real quick before you do anything, sir. Hold on. He said, Josh, I get what you're trying to do, but while we're talking about it, let's make a wise decision here. Let me hold some of that. That's what I'm talking about. I trained you well. Amen, bro. Amen. You know the vibes. You know the vibes. All right, 500 votes, 36% say 2.5K worth of puts. I was kind of hoping it was shares. That's kind of disappointing, Chad. You fucking degenerates. Let's see, though. We'll see. We'll see if that changes. I think if you already voted, you voted. If not, you're not that motivated. So based on all the motivated voters and viewers, looks like we got 36% towards the puts. Okay, let's see if my guy's available. Let's see. Let me call my stalker first. He doesn't answer now that I know. Yeah, straight to voicemail. But then I'll call lending tips. Okay. Yeah, I got he's saved in my contacts now. Now I know who. It's good to know. It's good to know now. That's it. Now they don't talk to me. It's ironic.
Lending Tips Hotline.
Lending Tips Hotline. You're live here with the stock market live. We have just discussed your proposition, Mr. 2 for 2.
I still do stock market every day. Come on.
Every day, even when the market moves less than 1% in 6 weeks, we do it every day.
We need to get you guys some jobs, all right? I'll show you how to flip some homes, make some money. All you got to do is pay for my course, okay?
Oh, there. Damn, the real estate market is rough, huh?
I'll show you subject to. I'll show you all the stuff that you guys want to learn and do nothing with, all for free, okay? Too harsh? Too quick? Too soon?
No, I mean, I think some people are interested, actually. They said, hit me up with the link, man. They're ready to go. They're ready to go, sir.
The link below. What do you guys want? I have to work here, okay, guys?
Oh, I thought you have breaks in between passengers at Uber.
No, my Uber.
I thought there's like it tells you when the next person's coming on.
Bro, if I get a negative star because you guys owe me $4.95, okay? $4.95.
Well, we've came to some conclusions. Well, we talked about your target play. Why do you think it's gonna die? Give us the logic. You told us Meta, you were spot on. I told them you're tinfoil about how every single Home Depot was empty according to you.
Every single one, and you didn't act, and what happened? Crumbled.
Well, listen, I didn't act, but I told them. And then the irony is that the stock is like, it might be green right now. I don't know.
It probably will end up being green. but we had a good time.
Yeah, it's down 1.7. Down 1.
Same concept as Home Depot. You know my local charging station, correct?
Yes.
Tesla charging. I frequent that about, 3 times a week to plug in for an hour instead of just getting a gas car.
But then do you go into Target?
I go into Target. I use the restroom, right? I go around. Sometimes I have the kids, right? And so instead of paying for gas, I pay for toys. You've seen the toy collection.
Mm-hmm.
And what do I notice at Target? Every single time, besides the obvious, okay, I don't want to get political. I notice at Target that there's lots of discounted prices for everything. Everything is on clearance, and everything is empty. There's no one there spending money anymore. Even the Starbucks line is quick. I'm like, wait a minute. What is happening here? And you can't even find a red shirt anywhere. No one's even working. So
You say you can't find a red shirt. You know what they're called. Okay.
I see them. And they're all friendly, but they used to be. But now they're just nowhere to be found, okay? And I also look at my credit card statement every single month, and my Target transactions are lower. So that tells you something right there.
Yeah, you used to. I feel like you love Target. That's why I'm very surprised.
I love Target and I love Home Depot, and I frequent them both, right?
Yes.
All the time. I see the traffic. It's down.
All right. Well,
choose wisely.
So here are your options.
You kill. I see a cockroach right now. Do you kill it or just let it live? Do they lay eggs? How does this work? This is crazy.
Are you at one of my houses?
No.
Oh, I thought you were being serious. I was like, because I could have cockroaches at one of them.
But if it was your house, you're like,
okay. You mean this is a metaphor? It's a metaphor.
No, this is real. No, this is real, dude. I'm gonna kill it right now. Okay, go. Propose your proposition.
Okay.
I'm stuttering over here.
250 shares short, or $2,500 worth of puts, aka the pricing in is about $10 after earnings. If on 250 shares the stock goes up $10, you will lose $2,500, or you make $2,500 if it goes down $10. Or you could put 2,500 of puts, and that just depends on where the stock opens. And then you could also do 500 shares or 5K, but it looks like we've zoned in on 2.5K.
2.5K of puts. How do you short the stock? I don't get it. What was your first thing?
You just short 250 shares. So that's it. You take the shares, you sell them now at 156. The stock goes down $10. We buy it back $10 lower, and you make the difference on every dollar the stock moves. You make $250 or lose $250.
Okay. So you got to buy the stock first, and then you short it. Is that what you're saying?
No, we just short it, and then we buy it back afterwards.
Oh, okay. That sounds like the safer play, right?
Yes, because then you could sell out after hours, pre-market, and then you don't have to deal with premium. The only problem is that you do not get you take the loss dollar for dollar. So puts, yeah. So if it goes up $5, you still are gonna owe almost $1,000.
But if it goes down,
you make it dollar for dollar.
Yeah.
No premium, no market maker. You could exit before a market and after.
And then the puts, straight puts, 2.5 in puts is straight a gamble, right?
Well, you just can't. That's the thing. You can't lose more than $10. So with the puts, if it goes up, if the stock somehow beats and goes up $20, you only lose $2,500. But if you do that on Target with the shares, and then it goes up an extra $10, you're down an additional $2,500.
But I have the shares, right? Or no?
No, you owe the shares. You shorted them.
I owe the shares. Okay. Look, I'm learning here. Hopefully you guys are learning too. I think it's going down, so that means you pick your poison, bro. I like the first option. Looks safer, seems safer. Short the shares, and that's it. No premium. I don't like premiums.
All right. He says this, the Chad. So now I'll tell you. We took a vote. A minority of the Chad, just under 1,000 of them. 20% of them voted for 250 shares. 35% voted for the puts. And then the remainers all wanted 500 shares or 5,000 in puts. But the biggest odds... Huh?
Pretty good.
Yeah.
35% a lot.
Yeah, that's how that's the position weighting of technology stocks in pensions and hedge funds right now.
Well, you still have your coin? You still have that coin of yours, or no? That's gone.
I don't.
Inflation took it.
No, I got one. Unless I have to go downstairs.
Heads.
Heads for what?
Tails for puts.
All right.
All right, I'll be tuning in. Let me know what happens.
All right. Thank you, sir.
All right, later.
God bless. Okay. Heads for tails, coins for puts. Or for shares. Head for, what did I say? I'm not even speaking English. What's the point of the vote if we don't go with it? Hey, calm down, Donald Trump. Okay? We're taking an inventory of all of that. Okay? Relax. Relax, okay? Heads for shares, tail for puts. Okay? No, I don't got time for coin cam, bro. Actually, I don't even think I have the camera. Hold on. Actually, last time I couldn't find the camera. It was legitimately on top of my monitor. It was very embarrassing. So we'll see. I have it now. You're going to have to take my word for it. Wow. Tails. It was tails. It looks like we're going for puts. All right. Let's see what we got now. Oh, it's just outside the money. Scammers. They're very good. So now I'm shopping. They are expensive. And they have it priced beautifully. Because I'm looking at the contracts that are $10 out the money. And the ones that you need at the right price, they are $13 out the money. So they got a little bit of margin safety in there. And the puts are up 6% from yesterday. They were down a lot more, but I know how we could do this. Don't say I didn't warn you. It's never priced in. Writers Union says they're seeking $343 million raised from studios. Oh yeah, if Target says AI, you're screwed. $148 to $150. I don't know. And then you have to factor in the time too. Josh sounds so hesitant. Nope. This is my shopping sound. This is how I am with my girlfriend when she shops. I don't say shit. I just get quiet. I start looking through. That's my girlfriend takes me shopping though. I'm good because I could look at the price tags. I got small hands, so I could just find them all. It's great. I'm gonna try. I'm running numbers. Let's see. I got a couple ideas. Your boy has some ideas. You know what I'm saying? He got some ideas. Oh man, so expensive, Habibi. Those kind of suck. Oh, that one's good. I don't know if that'll happen though. All right, I got an idea. Let's see. I think it might be the same as this. Junk bond. Somebody asked me about that earlier. Goolsby says he has not decided anything for June rate hike. Mistake to commit to rate move when more data is coming. That's coming out right now. Austin Goolsby. Yeah, I think he's live now. Another Fed speaker of the day. I've never seen him, actually.
I didn't say that I almost dissented. Someone asked
me,
was it a close
damn, he's
call?
correcting his statement from yesterday.
For me, I can't speak for anybody else, but for me, I felt it was a close call. 2 meetings ago,
I've never seen this guy. He looks
was looking pretty hot. We hadn't had any financial stresses, and the argument for the improved, let's call it a improved economic outlook in the SEP, was making people a little anxious on the side of how much inflation might still be stored in there. Then 1 meeting ago, before this past meeting, we got the bank stresses and incorporated that into our plan. So at the last meeting, you had not seen yet in the data and in my conversations with financial market and bank participants, you had not yet seen credit crunch taking place in the data. So I felt that at the end of the day, staying on the plan that we had outlined, knowing that there was going to be some bank stress, did make sense. Now you've seen more slowing coming in. You've seen even numbers that were relatively strong, like retail sales. They were lower than expected. And if in nominal terms retail sales were up 0.4%, but inflation was up 0.4%, it's worth remembering, that what actually matters is the real economy.
When the Fed raises interest rates, banks always tighten their credit standards and loan demand goes down. So are you or the people in your district seeing something worse than what ordinarily would have happened?
Yeah, that's an important point to make, that one of the mechanisms of monetary policy when you raise the interest rate is lending standards go up. It's harder to get credit. Businesses choose not to borrow as much because borrowing is more expensive. That's the key. That's the fundamental question. Is there reason to think that the financial conditions are tighter than just what the interest rate says? In previous times of bank stress, they definitely have been. And if you look at the senior lending officer opinion survey put out by the Fed, as rates went up, you did see tightening before there ever was the bank stress. But we definitely need to get a handle on how much on top of the interest rates this is doing. And you've seen throughout the market numbers that range from what would be the Fed's fund equivalent of this bank stress. Kind of the lowest you've seen is that it's the equivalent of another 25 basis points. And there's some saying it's like 100 basis points, 150 basis points increase on top of monetary policy. So if that does some of the work of monetary policy, you just got to take that into account.
Well, speaking of the work, you guys are focused entirely on...
All right, hold on. I have another idea, too.
We haven't seen a lot of movement. After a quick drop from 9 to around 5, we haven't seen a lot of movement in inflation. Are you convinced that you've put enough restraint on the economy?
I don't know if we've put enough restraint. That's what we got to watch. Inflation is down.
I'm turning this up.
To make progress. It's not as fast as we wanted it to.
The audio's been weird today.
And therein lies that's
okay, but here, don't trade it. Not a recommendation. The LT play, I went with a debit spread. Believe it or not. So I capped the gain to the upside, but given the earnings and all that, I grabbed June 16th. I got him 15 of the 145s, and then I shorted the 135s. You're still about $2 outside of the pricing, but then that way we're able to slash this price almost in half on the premium. So thought it was a decent one, but debit spread was like $1.60, and then it was like $2,600 worth or something like that. So there you go. Not a recommendation. You will lose money. That is lending tips, earnings gamble play. And then we'll see. And then bonds are still right here. Market was doing a lot better there. And then again, we're going to keep listening here to Mr. Goolsby.
There are at least some forces that are going to keep moving in that direction.
Well, your background suggests that you care a lot about employment, and obviously it is one of the mandates, as you mentioned. Do you think that the data that we're seeing now, and you could include retail sales today, industrial production, suggests that the soft landing scenario is any stronger than it had been?
Any more likely, you mean?
Any more likely?
Strong? Yeah. I'm definitely hopeful in that there's one group that looks at the labor market and that its prized measure of tightness is the vacancies to unemployment ratio. And that ratio hit record highs, and it's come down a lot. It's still, the level is still higher than it was before, but it's come down in a way that hasn't tanked the labor market. The danger, of course, is if you get a recession and you try to land the plane nose down, tends to be that the labor markets, when they deteriorate rapidly. The unemployment rate goes way up, you see layoffs, and everybody's trying to avoid that if at all possible.
You probably would see, if you looked at a spread, that you've been put by Wall Street on the sort of the dovish side at this point, whatever a dove means these days. What would you say to the idea of rate cuts, in the sense that Wall Street is already thinking that you're probably going to have to do that by year end?
Look, Mike, the thing is, I've said, the very first speech that I gave is when I took over at Chicago, emphasized, I'm not a fan of setting monetary policy based on what the market says or try to predict how the market's going to react. I think the overwhelming thing that the Fed's got to do is pursue the dual mandate. It's about the real economy. It's about inflation, which is too high, but at least we're making progress, and is about the employment mandate, where the job market remains quite strong. And so I think it's far too premature to be talking about rate cuts, and premature to be saying, even for the next meeting, are we going to pause? Are we going to raise? Are we going to cut? We got to get as much data as we can, and it behooves us at a moment where we followed the strangest business cycle in history with one of the strangest credit conditions that we've seen in decades. We got to look at a lot more measures than just unemployment, inflation, and wages, and the kind of the conventional box of numbers that we looked at in the past.
Well, you get your next meeting is June 14th. The next CPI report is June 13th. Can we call you up in the Fed meeting room and ask you what you think? Austin Goolsby, thanks very much for joining us today. The president of the Chicago Federal Reserve. I'll send it back to you.
All right, thanks there to Michael McKee. Another great interview down at Amelia Island, Florida. We'll check in with him again, I'm sure.
Beautiful.
Let's check in right now on what's happening in the markets. We'll start with yields. A two-year yield now firmly above 4% here on this day, up about 6 basis points.
I can't turn it off.
The story across the curve. That's
it's not letting me turn it off.
A bit of a downdraft when
Shut
it comes
up.
to U.S.
Okay, I got him. He was about to drop the Riz. But here's the problem. Essentially, I think it's interesting listening to all these guys. I don't think they're like not saying anything, but you know, compared to other times that we've watched the market react to Fed speakers and this level of volatility, I mean, we're not really that volatile right now to begin with, but the whole idea is they're saying the same things. They are giving information. They're highlighting the data dependency, but it's not working to knock the market out of this. Do you guys get that? That's kind of like the theory we talked about in the morning today, but it's like bonds and rate futures are not moving a lot when they're saying, no, higher rates, we don't know yet. Like they're all saying, every single one of them has said, we do not know what's going to happen at next meeting, Meanwhile, every time they say that, the bond market's like, no, we know it's going to happen. We don't believe you. So every single time, it's like that video. They're like, blah, blah, hibbity hoo blah, diddity hoo blah. I ain't hear a word you said. Hibbity hoo blah. That's literally what, like, that's the interesting part about today. That's why it feels like everything's a nothing burger. Because that was, again, Goolsby, he was actually talking. He wasn't like a robot there. Again, he was responding to what he said yesterday. He literally was expounding upon what he said yesterday, and it was new information, and it sounded the same though, but it's like the market is not, the futures, nobody's reacting to this. The bond market is comatose when they're talking, and it's just kind of already made its mind up. Jail, out of jail. No, I haven't been able to find. I have to literally go through and like clear almost everybody that was banned, because I'm telling, it's like in here. I don't know. I hope I find him, because like sometimes even if I clear everybody who is banned, other names they just won't. It's the YouTube jail. I just think we've dealt with too many bans in this channel, and it's not like I'm that big of like a ban terrorist. It's just that every single of those sex bot accounts is on there. So there's a lot that's there. Adobe's just ripping. I mean, I think David Tepper bought into them as well too. But don't forget, Adobe is part of the AI plays. Honestly, that's an AI play that hasn't even really moved. Will you pardon me? Well, we'll see. I mean, we will pardon everybody to get back J Alt. I mean, I think that's just testament. One good Chad was worth a million baby back B words. You know what I'm saying? That's it. With one good chat, we fight for one good chat. You make a good chat. You know what I'm saying? You make a contribution. You really out here. You part of the community. That's it. We die for y'all, dog. Are you serious? That's all we. One good chat, sir. Again, it's a parable. It's a parable, sir. It's a parable. Amen. You know, because that means something to me. You know what I'm saying? The one out of the 99, that means something to me. Some people don't know what I'm talking about. You know what I'm saying if that means something to you. So that's all I'm saying. That's just how we get down. That's what it's built on, baby. They don't feel me. Somebody feel me, but they don't feel me. You know it. Amen. You know exactly what I'm saying. Amen. Hey, isn't that crazy? And then that can mean nothing to somebody. It's crazy. They like 1 out of 99. They're like, Josh, does that mean I should sell Bill? No, what? Aren't you pardoned if he could see you ask? No, he hit me up on Twitter. I was checking Twitter news, and then I saw like a little notification. I was like, J Alt, and I clicked on it. I thought it was going to be a book recommendation, a good one. And then he was like, yo, why can't you see me? And then I was like, boom. I was like, that's why I haven't seen J Alt in like 2 days. That's it. I was like, I haven't seen him in 48 hours. I was starting to get worried. If we made it into the weekend without J Alt, I would have went searching. I would have called everybody on the Origin board of directors. I'd have said, hey, yo, I don't know. I don't think he works with y'all, but y'all seen J Alt lately? Origin, I know, clean carbon capture. I said, hold on. Where's my man, bro? Hold on. Yeah, he low-key got Jack Mod. We unbanned everybody, I think, last August. So, and then after that, I went no mercy chattitative tightening. So I think I cleared out every single ban like July, August last year. You had a Jubilee. And then we unbanned I cleared out every account. I posted the evidence. I unbanned every account on my side. It said no accounts are banned. At that point, if you are still banned, it's because YouTube probably thinks you're part of QAnon. But at that point, I unbanned everybody, and then I held a higher standard. We went full on, no playing around from last August. And then if you broke the rules, you just got banned, and that was it. And I haven't cleared them out since August. So... but now we may have to. We'll see. 3 years. Thanks for the info and uplift and spirits, baby. Love the chat. You changed my life. Amen. God did, baby. God did. Finger to the sky. I'll take it. Amen. The jive turkey. Now when you in the morning, you're going to get booty calls again. Oh, damn it. Don't remind me, Candy. See, I forgot. See, that's what I'm saying. That's it. That's why I got to do all of that for JL. JL, man, I love you, bro. But now I'm going to deal with sex bots and booty calls in the morning. And then the person on his 18th account is like, oh, I got my original account back. Let me get on it and proceed with the same behavior. And I'll be like, damn it, man. That's it. It's always cool. I'll get bullied for an extra 2 weeks. That's chill. But hey, we found the stalker, though, so that's good news, actually. So, you know, God is good, baby. God is good. Mm-hmm. Schmeagol. Makes you a stronger person. You know, I'm big on, like, protecting my energy. Like I was even saying, I don't like the social media stuff. Dog, I don't want to be a stronger person, okay? I just, give me peace. You know, I wish, that's all. I hope anybody wants peace as much as I do. Even if you don't like me, I hope you just want peace. You know what I'm saying? Like, that's it. Like, let's just look at the market right now, the world, everybody. Oh, just give me some peace, dog. Just, that's it. I ain't trying to, I'm with you. I got some fighting. I got a lot of fight. You know, we ready to go. But it's like, yo, you know, can we just chill for a minute? Like, let's just chill, dog, and breathe in a little bit, you know, relax, and that's it. So we will see. If I saw you on the street, I wouldn't say hello. Nah, that's not what I'm talking about. Honestly, man, I could go back to the PHILO. It's crazy to think that was the letter to Paul. It was like, let me see if I could get you the context of what it said. It's trippy, bro. It's crazy how even then, just like I said, with like the attitude of arguing. So it's like, I like to question. I think you should question everything. And I think, you know, good discussion and seeking the truth is good. But it's like, just kind of like an environment where it's like, you know, people trying to argue for the sake of arguing. Not even, you know, some people don't even want answers nowadays. And that's why I think it's just like, you know, just have peace. You know what I'm saying? Like, you know, we're here for something. We could do a lot of work. We're going to keep doing it, God willing. But it's just like, you know, I hope everybody comes together, not trying to argue with the next person and, you know, talking to seek answers and to really seek the other person too. And, you know, helping other people, or again, even helping yourself without tearing anybody else down. And I think it's just like, it's crazy, but it's crazy that was the context in any biblical sense a couple thousand years ago. Funny to see how it plays, you know? I'll find it for you. I forgot what it said. It was like, it was a deep thing. It was on the study Bible. Let's see. No, I think it was second. Yes, here it is. Here it is. So things in Ephesus had not gone as Paul or Timothy expected. Paul had ordered both Alexander and Hymenaeus to step down from leadership, but they were continuing to oppose Paul. Others had joined them. And then this is what it was saying with like the logic. This is the line. But they were still misdirecting people into a corrupted version of the faith that stressed debate and dissension rather than a purity and obedience. So there it is. Now take out the biblical element to it and now apply it to modern day. And that's what I mean. That's why I'm saying the peace. There's either stressing debate and dissension or something like going to the purity of the truth and actually the heart of the matter of what's being discussed. But that is the unpeaceful spirit, I would say, 100%. So that was the context of even the philo and the letters that Paul wrote. That's why I was like, huh. That's why, again, the context got me interested. SPY 4-point move. Money. Let's even wait till the end of the day moves too. I wish I could believe in Bible stories. It makes me feel so jealous of theists. I mean, that's good. Most people, you shouldn't even feel that way. But, you know, the grass is always greener on the other side for what some people would kill to have certain views on the other side. But you never know until you experience it. That's the crazy part. That's good, though. That's an upgrade, Dominic. It was like, what? It was like 2.5, 3 weeks ago. You were like, mother effer, what God are you talking about? So, I don't know. We're making progress, I feel like. Either way, I'm glad to see you here, man, and I really do hope my belief does not stress any debate or dissension among us. Because, again, and I hope I could help you out in many ways, my brother. Let me know if I could answer anything to the market related, because I'm sure you may have gotten enough of my discussions here, but you'll have to deal with them every now and then. Walmart. I'm already down $120 on that spread. The lending tip spread is down $120. No news on debt ceiling. In 5 minutes, though, Biden and McCarthy are supposed to meet up. Thanks, brother. Peace be with you. Amen, baby. Amen. You know the vibes. I thought that was PRGO. That was FRGO. And then Square and PayPal. Meta's running. ACAM was a good one. Roblo's even just dancing underneath 40, but they're in the green today. FDA updates rumor control page to address the growing spread of rumors and disinformation about science and medicine. It'll be postponed, but remember, if they postpone it, it's a good sign. Stop it. You realize that's what we ended the week on? They were like, yo, man, honestly, the fact that they canceled this meeting when there's only 4 days left before the president leaves the country and Congress goes on recess, the fact that they're not meeting right now is actually pretty good. Yeah, and then on Monday, Biden's like, hey, listen, come on, seriously, I mean it. It's not hyperbole. I really mean it. We're the deal. I'm feeling optimistic. I'm feeling the optometrist towards the situation. My optometrist is saying it's looking good for the debt ceiling. That's what he said yesterday morning. Marcus went up. Everybody's feeling it. Everyone's getting geeked up off the vibes, you know? And then McCarthy's like, nah, no, not at all. And then now we're like all in the middle. Then the bonds are like, we're not going to move. Then credit default swaps are like, yo, we're still at all-time highs, but all-time highs are still historically low and not really a probability. And then everybody in the market's like, why is it not moving? How come it doesn't go down? So, yeah. That's where we are right now. Zella again. That's 150 now. I feel like it was up 150 in the morning, but there was only 50, 60% there. Ex-dividend is today on target. Do you think it will sell after? It just depends on their earnings. That's it. I mean, I think if Target has a bad earnings, it'll do what EA did. Maybe it'll stay down, but the whole idea is that if Target's earnings are not good, that's it. It's probably going to have a little bit of a drop. Remember, Target, Walmart, all of those guys freaked us out last year too. In the beginning, they were some of the earlier ones to fall. Like, remember when Target dropped from 210 to 150, literally where it's at right now? That was May of last year. So, and again, remember they were worried about inventory. It was a wild story. You guys don't remember? You don't remember Walmart and Target? They were chartering their own boats to get inventory. And then everybody was getting mad because remember, they were like, supply chain issues, we can't get our shit. And they're like, because Walmart and Target are ordering all the ships. And then they got their own ships, and then they got all the inventory. And then remember, halfway through, they were like, yo, we actually got way too much inventory now. And then that's what even the chip maker said too. And then they all played that game. So same thing, there was that consumer freak out last time. If you short Target, you could close after hours. But the thing is, Target is tomorrow morning. So the moves are going to happen pre-market. Then it's probably going to do a stupid gap up or down. And then that's it. Bro, and then Bill sucks this month, man. That's crazy. We're halfway through. Your yield is dramatically lower. Again, by what? By the 13th or the 15th right now, we would be like 6 more cents higher. So on the year, this time throughout the year, this is the lowest you've been. You could blame the 1 month yield. And Tesla came down. Did Nvidia hit 300, 298? MP Dubs, let's see again. 3M, ex dividends tomorrow. Same thing with Walgreens. But yeah, so let's see. I don't know if the meeting thing is going to be live, though. So right now it's 3 o'clock, literally right on the dot. Biden and McCarthy should be meeting. And then Michael Barr still giving it stakeout of Biden's meeting with congressional leaders. There's a video. Oh, we could watch the White House clips. Remember last time we watched this? They got like the door to the White House, but I don't, that's too dramatic for me. But then again, there's only 15 days left. $88 billion and 15 days remaining. Oh, and let me get rid of this Chad so it doesn't take up your Chad. Yeah, watching would be too dramatic for me. What was that where we were watching the door? I forgot what it was. We were I think was it I don't think it was UK. I remember we were watching the door to the White House one day. Working at retail got me wondering. Saw some expired products by opening the boxes from the warehouse. That was the issue like mid-2022, but I've seen that a lot, actually. I don't know if it's a bearish case, but that's Ulta. Ulta has a lot of that. So I go there. I go to Ulta to get my hair vitamins and my shampoo, and then my girlfriend shops there a lot. And that's one thing we both noticed. We could like randomly pick up random products from Ulta, and like I would say like 10% of them are on the shelves and expired. It's actually pretty wild. But I haven't written up a Hindenburg short report yet. But again, I don't know. I've only been to like 2 of them. Comcast to divest Hulu stake to Disney in 2024. I thought they already, if they get the whole thing, that could be good. But I think that deal, I don't know if that's already been talked about. You probably couldn't create a short report that could move the market. I have one, but I don't think people will like it. I know this one company, and like the CEO was like in the top 10 of like CEOs who got compensation, and then he's always on Twitter, and then he has talked in this group of people into thinking that a gold mine is there, and then there's another guy, and then he bought this company called Twitter. No. Oh, and going. Why is DHA and Toll Brothers at highs with credit crunch? It's because they guided down before everything. They guided down when interest rates were at 2%. And then so they were the first to drop, and then they were the first to recover as everyone was like, oh, it's not that bad. And then also, too, just the thing that's the credit crunch doesn't matter for the home builders. Why? Because literally they said 65% of their sales, they have bought down the interest rates for their customers. So what that means is that DR Horton, when somebody's buying a house from them, on more than half of the transactions, DH Horton is giving an incentive to pay down your mortgage rate. And they will even give you a better loan on it. Again, a lot of people don't realize these home building companies, they also have lending companies. So if you're worried about interest rates being high, whether you're a consumer or a home builder, and you go to these new builds and they're like, hey, I could give you this brand new house at a 4.5% interest rate. So what do you think? What do you think? So they have that, as well as what's the other thing that they do? Oh, because somebody asked that. They were asking about, like, don't the home builders, like, don't they care about the price cuts? They don't. So that's the difference. When you got to realize, home builders, they do not view the price of one house by itself. They view the total of their whole entire project. So essentially, a home builder is a different business than a house flipper. It's not like what you think. In a weird way, a home builder is like owning shares. So that's why, like, some of these builders, sometimes, depending on when they need to get that unit purchased or if they need cash up front, that's how they incentivize certain things. That's why when I'm telling you, I had a new home builder offering me a $400,000 discount relative to the last home he sold. Why? How can he do that? And why does that make sense? Will it piss off another person? Yeah, but they don't care. Why not? Because they're viewing their whole entire project. So if they sold the first 10 at 1.9 million, they could sell the last one at 1.4. You see what I'm saying? Because they don't care about just one unit. They're viewing the total, and then depending on their timeline and progress, that's how they start to go about it. So, and then again, not to mention, they have their own lending, and they incentivize in terms of making it easier to purchase a new build. What about escrow deficiency? Are you saying on people's mortgages where they have to, like, add more to it? Occidental raised to investment grade by Fitch. Yeah, builders, they have their own lending divisions. That's why they get mad. So they have their own real estate divisions too. So that's what I told you guys back in the day. I always said, if you go to a new builder, never go in by yourself and do not fill out the form until you are with an agent. Because if you go into a new build and you write down, like, you sign up on the sign-up sheet and you are not represented at the time and the agent does not take you in, they will not pay you a commission. because the home builder tries to take the commission as well or try to save on it. So they have their own real estate division for brokering the deals, and they also have their own mortgage division to fund the deals. It's part of even their own credit lines that they have. So a home builder is not just a builder of homes. They have mortgage, real estate, and then the building of homes. And then again, they pump these houses out like any other product you could think of. So how the metrics operate, they're trying to build and sell these houses as fast as possible. Yeah, that's why they'll offer you free upgrades if you in-house everything. They'll hook you up. They'll incentivize it, but they also try to keep you. If they could get you on every end, that's where they really make the money. You got to realize it's one thing to sell you a brand new house with a markup, but then if I get the real estate commission and the loan commission, they just triple-ended the deal. They got everything. It's crazy. That's an additional couple percentage points for them. The new builds are quality. No, I'm about to sue one of the builders right now. So I had an old project from a couple years ago, and now like the third house that I bought from them has problems with some of like the components in the house, like heating and duct and all of that. And I told him, I said, listen, man, like I was like, I get that it's been a certain amount of time, but I was like, this doesn't happen on 3 different houses all at the same time. I said, and then I had a third party look at it, and they were just like, this shit's a lemon. So I'm suing them. I'm about to, but they're gonna they're working with me on it for now. But so far the quality has been decent. But that's it. A lot of like the 2020 houses, some people rushed it, and then if they rushed it, remember materials were high back then too, or 2022. So it was pretty crazy. Ja Rule on Bloomberg. I'm not one. They gonna ban me and bring on fucking Fire Festival? Come on, Bloomberg. Come on. Biden leaders begin meeting on debt limit. Yeah, we'll see. So it starts now, and then it is already power hour. So your time is going down. I always viewed buildings as additional ways for them to control the transaction to reduce headaches and hiccups. It does help. Like, that's for anybody. If if the agent does the loan, it's easier, right? If you could sell and do it all, you simplify it, but there's a lot of money. Because, again, every time that a mortgage gets referred to them or a buyer's referred to them, they have to pay 2.5% on the commission. So if they could in-house that themselves, their margin just went up. So it is to make it easier, but there's definitely a monetary incentive. And then also, too, just moving inventory. Sometimes, even if it's not about making money, like in some cases here, they're just buying. They want to do the loan, not only to save the margin, but to also get you in the house. Because they're like, nobody wants to buy these at 9% interest. Here you go. We'll pay down 3 years of the mortgage for you. Here's a 5%. Would you like to buy this, this luxury home? Because, again, new builds are usually on the higher end. That's the thing that I think kills the new build market is once new builds, once they go back to once they go back to becoming a luxury product. That's the thing. At one point, like up until 2020, even during 2020, a new build home was considered a luxury product. You weren't buying it like you buy an existing home. The average new build was like $150,000, $200,000 above. It's like a premium product. You know, to go and buy a brand new house that just got built and spend that money, chances are you're paying a premium. It was a luxury item. And then as everybody wanted a house and the demand and all of that, it kept going higher and higher and higher and higher and higher. It kind of just became this thing where it's no longer, you know, you have more buyers at that price point just because of everything that happened. So that's why it's, if we see that happen where now people start saying, no, I prefer a discounted existing home, then I see the builders will have a lot of trouble. But if they could hold up, keep selling how they are, I mean, it's they guided down before everybody, and they showed signs of recovery before everybody. If no deal, will the market tank? No. You have till when? Where's my calendar? Maybe by the end of next week. Because then by that Monday. But next week we'll start the 2-week clock. But I would say if you want to be real certain, end of next week. See, I mean, I wanted to play the earnings. The earnings were bad, but at this point, I think that's just one of the death earnings. You either go for the bounce or you leave it alone. I mean, I still think there is some downside considering how it moved, but it was already lower prior. I grabbed the target put. Yeah, I did a debit spread just to hopefully save on some of the premium. TJX earnings preview? Yeah. If you need. Let me see. Oh, we have, or is this old one? Yeah, this is the old one. I don't even think I got the new one for this time. Okay, where is it? I hate how these are all in the morning. So after the bell, we don't have any. You have Copart, Doximity, Next Gen. Yeah, TJX and Target tomorrow morning, Jack in a Box. And then Walmart Thursday morning. Then John Deere on Friday. Hey, ma'am. That's on the high. Oh, geez. That's the headline. TGX, commentary on theft and annual guidance in focus. So I think we're getting off to a bad start. That's crazy. That's the headline, is legitimately people are worried about guidance and theft at TJX. How much did they lose to theft last quarter? Why is that the number one focus? I guess, I mean, they're still holding up, but damn, I guess your stock's near highs, so maybe theft should be the only worry, but damn. So TGX reports first quarter ahead of the bell on Wednesday. The off-price retailer is seen as a beneficiary of the whole pricers or the full pricer inventory overhang at the end of 2022, which should help support a strong first quarter. TGX is likely to comment on annual guidance, with some analysts hoping for a slight boost. Investors will also be interested to be more on shrink, a term used to describe the loss of product inventory due to events such as theft, either by employees or customers, vendor fraud, or administrative error. On its fourth quarter conference call, TJX said that an outside shrink charge resulted in a pre-tax profit margin coming in below the company's plan. So comparable sales estimate is 3.1 for the next quarter. The company forecast is 2 to 3%. Analysts are at 3.1. Net sales $11.8 billion. Company forecast 11.7. So analysts are more bullish than the company. And then second quarter net sales of 12.4, comparable sales of 3.1, and EPS of 79 cents. Bloomberg says TGX customers love the treasure hunt, along with strong event calendars and dressier fashion trends could aid to the company's first quarter revenue. Investors will be focused on commentary around retail shrink, which dominated the fourth quarter earnings, as well as consumer spending trends and inventory levels. Cohen outperformed. Cohen's off-price channels checks were mixed into mid-May, but data showed improving traffic trends in April, with TJX and Marmax looking to be the strongest. Based on these checks and survey data, Kernan expects TGX's first quarter EPS to top consensus. Also thinks year guidance can move slightly higher. William Blair outperformed. TJX is carrying strong momentum into the year, significantly beating their own revenue plan for fourth quarter, and noting on their earnings call that they were setting initial expectations conservatively given the volatile and operating environment. Current full-price retail inventory overhang coming out of last year, including luxury brands that might not otherwise be widely available to off-pricers, likely benefited TJX the most compared with discount retail peers. Also see a recovery in home category and international markets as supporting sales more throughout the year. As far as gross margin, management expects 130 basis points of benefit from reversal of freight cards, and then TJX carries the most room for earnings upside in the front half of the year. They expect TJX will be able to reaffirm or slightly raise guidance. They have 18 buy targets, 6 holds, and 1 sell. Average price target is $86.59, 9% upside from current price. Implied one-day move following earnings is 3%. Adjusted EPS has beaten 8 of the last 12 quarters. Shares are up 40% in the last year, while the SPX is down or up 2.8, and dividend expected to be 33% as opposed to 29.5% a year ago. Yeah, They tried to sandbag, but yeah, exactly. So they came in conservatively, but every analyst, the average analyst expectation is above the company's guidance. And then NASDAQ SPY's at the low point, but that was the first time that we did not hit a high since middle of the day after doing this little dance right here. Oh, that's the VIX. So let's see how this plays out. That's it. I might have to get out of it. Okay, CF stock coming down. Let me check one more. I can't believe, bro, the ZQ play is actually like his baby running. Or 1, 2, 1. All right, we're going to have to find another time to get back into it. But I am out of my bond short. About $900 net. I had $1,100 in the morning. But I'm going to wait until tomorrow or now, even like next week. But I want to re-short depending on the debt ceiling now. I shorted /ZN. So where is it? So this was exactly what I shorted right here. You could do it on TD Ameritrade. I don't recommend you do it if you're not familiar. But what we did, it was a couple days ago. It was actually right after Powell. Where was Powell? I have no idea where I am. So this was Powell, I believe. Was it last Wednesday? No, this one was Powell. So we shorted it after Powell. I was around here, I think, a little bit higher. And then it went up, and then it went down /ZN. It's a 10-year bond future. And then it went down from like here to here. It's about I think it was a quarter basis point. It's like $1,000 profit on it. But then again, we were down on it for a little bit, and I lost money that day on a 2-year flip. But that made up for it and some. Manu's popping. Again, Manchester is probably the buyout headlines. $114.30. That's basis points. It's priced very, very weird. It's priced in commas. I think it tripped me out the first time. I said, "What do you mean it's priced in a comma?" Sorry, I don't know anything about commas. But that's like you use commas for basis points. Peck Dubs. Is that moving? And Spotify on the high. Manu's still going. Someone walking up on. No, it's my girlfriend, I think. She owes me lunch. Because she usually make me lunch on Monday. And I didn't get to start off my day with Monday because I had an appointment yesterday. So I think she's probably surprising me with something. Last time I got caviar spaghetti. That shit hit. So let's see what happens on the next episode. Or somebody's trying to kill me. Either way, we'll find out. Eli's not overvalued. It's just, it kills it. That's it. It just kills it. So it just definitely has premium. But they've earned it. Do I see the housing market coming down this year? Not unless the stock market comes down. I think they're all the same at this point. But I think real estate already came down. And I think it'll trade how it is. But it's been stupidly hot. I hate to break it. I can't even believe it. But it's what, dude, the amount of houses going pending still. I'm mind blown. Logan says the Fed needs to offset bank stress effects on monetary policy. The market's reacting to that, but she could be saying that they need to be hawkish to get the bonds to go down. But that's Fed. Logan is a voter, I'm pretty sure. Again, panel discussing. She stresses banks should review post-GFC stress episodes. Qatari Sheikh made an improved offer for Manchester United. Oh, I think we could listen to Logan. Yeah.
The purchase's goals. But the Bank of England's actions still highlight how key principles, careful and transparent communication and backstop pricing, can help central banks navigate these type of situations.
Bank of England is...
I think this remains an area of active research, and I hope we'll draw out more ideas in our discussion today. And lastly, we could think of designing monetary policy strategies to mitigate financial stability side effects. I don't mean examining how monetary policy strategies can trade off achievement of macroeconomic and financial stability goals, but rather the challenge is to set monetary policy in a way that mitigates financial stability risks, but still achieves
another ON pop. Goals. Chad was saying that there.
I think this is possible because the restrictiveness of monetary policy
What's going on with that thing?
Entire policy strategy. How fast rates rise, the level they reach.
There's a lot of headlines coming from this. So she sounds different than the other Fed speakers.
Increases or decreases. So these levers can conceivably be arranged to maintain the restrictiveness of policy while reducing financial stability side effects. So in particular, I think gradual policy adjustments can be helpful. Financial conditions can sometimes deteriorate non-linearly, doing damage to the broader economy, but the risk of a non-linear reaction can be mitigated by raising interest rates in smaller or less frequent steps while using other dimensions of monetary policy to maintain restrictive financial conditions. So in a recent speech, I used the analogy of a road trip in foggy weather. When conditions are uncertain, you may need to travel more slowly. But a slower pace of tightening shouldn't signal any less commitment to achieving the inflation goal, any more than slowing the car would suggest you don't want to get to your destination. So with that said, I'm looking forward to hearing the perspectives of our panelists on these and other issues, and I think we'll dive right in with some questions around these three themes, and then we'll open it up to all of you for further questions. So first I wanted to explore the question around the pace of changes in the policy rate and their effect on financial stability. And I thought I'd ask Seth and then Kathy to comment on this theme first, and then open it up for Viral and Brad to comment. And I sort of had three questions in this theme for the two of you. If you could first, talk about the channels for these effects, the impacts on financial institutions, individual investors, and economic activity that feeds back to financial stability. So what are those channels that we should be focused on? And how can we distinguish the normal effects of higher interest rates on the financial system and economy from the unexpected financial instability? And then how should central banks weigh those trade-offs about how quickly to move? So Seth, why don't I start with you and then turn it to Kathy?
Absolutely. Thank you very much, Lori, and thank you, Raphael Bostic and the Atlanta Fed for having me here. Thanks, all of you. I think one place I'd like to start, Lori, and I personally thought it was helpful when you talked about financial stability and monetary policy. You didn't make it a stark
and another
dichotomy that a central bank could think about one at the expense of the other. In fact, I would go even stronger. I think
Weeble rumor, but it's Gasparino.
So
F him.
When I think about having been an undergrad, having been a grad student, having been a professor, and then working at the Fed, thinking about what monetary policy is supposed to be doing now and tightening monetary policy, it is supposed to be, in general, raising short-term interest rates, maybe throw QT in there with a specific purpose of tightening financial conditions, making funding costs for intermediaries higher, not lower, making willingness of intermediaries to extend credit lower, not higher. And so when we think about at least what's going on here in the US with some of the bank turmoil, I think everyone should think very, very carefully how much of what's going on in the banking system is an exogenous shock of financial instability that is complicating the lives of the FOMC in terms of doing monetary policy, and how much of it is just monetary policy tightening. I hear clients all the time saying, what's the Fed going to do?
Legion pushing to speed up asset sale.
For banks has now gone up, and it's gone up pretty substantially. They're much less willing to lend. There's going to be a credit crunch. They're pulling back from funding businesses across the country. And my reaction sometimes is, yeah, go on. So you've described monetary policy. Now, I think the challenge is one of calibration, and I think in some sense then the definition of financial stability or financial instability that we're worrying about is a large, possibly nonlinear tightening of financial conditions or breakdown in the transmission of credit through the economy that results in more slowing of the real economy than is anticipated. That could be a useful working definition of financial instability concerns here. On the other hand, if you ignore financial stability in this context and just think about what the Fed's trying to do with monetary policy, they're trying to raise interest rates, they're trying to tighten policy enough that the economy slows down and inflationary pressures come down, but not so much that they cause a severe recession. So again, for me, the distinction between financial stability
PAC W is down
in
11.
the current context and monetary policy are much more muddy than I think most of the public discussion has in mind. So that's, I guess, one starting point. I guess the other point, very specifically to the narrower question you asked, is about speed, and I think it does matter. And I think this is one point where it's very helpful to have these sorts of conversations where you have academics, you have policymakers, you have market participants all talking together, because the different perspectives matter a lot. If I think back to my time at the board working on the Teal book, and there were the different sort of simulations for optimal policy and things like that, the difference in most of the macro models that get used at the Fed that go to the board between waiting for a long time to be before starting to raise rates and then raising rates aggressively versus a much more measured pace. The difference in macro outcomes tends to be pretty small. You can sort of replicate the two even by starting later. But the difference in the real world, where I think most of us live, can actually be quite severe. And so, for example, if you think about the banking turmoil, a longer period of time to recognize the writing on the wall where
FSLR took a candle. I need to sneeze, but it's not coming out.
Time could have helped. Even
but
if
watch
you end
out,
up, as you
it's
said,
3:30.
getting the same outcome. The flows within money markets, I think, really do matter in terms of the speed here. And one of the things that I know you want to talk about later are monetary policy tools. This hiking cycle has been fast. It's gone to a relatively high peak if we're done. But on top of that, it's also using the reverse repo facility in a way that was used in the previous sort of quasi-hiking cycle, but not in previous cycles. So anything anyone thinks they know about the transmission, especially through money markets of monetary policy tightening, just has to be somewhat different because of the existence of the reverse repo facility. And I think as a result, faster movements in money market rates create larger dislocations or result in larger incentives for swings in money assets through money markets. And so, yeah, I think to answer your question, the speed really does matter a lot for the transmission.
Kathy, maybe turn to you.
Yeah, I would agree with Seth about the channels. You know, we all know what monetary policy is trying to accomplish. I think that's pretty clear. But when it comes to the speed, I think it matters even more than you do. So as a market participant, for me, the rate of change is kind of a key factor. So, you know, we look at things like the MOVE index, right, which is volatility in the bond market. And this not only has this been a rapid rate hiking cycle, but we've had a move up in volatility that really surpasses almost everything we've seen in the past. And that's because of the accelerated pace of rate hikes. So one of the things I think the pace has done is create a sharply higher level of uncertainty about the path of interest rates. And that's really all the volatility is reflecting. But you take that down to then the real world where people in financial institutions, businesses, individuals are trying to deal with this rapid rate of change and volatility, and you're going to have some feedback that is potentially pretty destabilizing. So in my view, the speed has been, I think I've said this publicly before, so I can say I think the speed has been a bit excessive in recent months, and a more calibrated approach would have been better. It also obviously exacerbates liquidity issues. So when banks, when individuals, when investors, when mutual funds have to change very quickly their strategy based on their expectations, then you get a shift in liquidity that can create more problems. And that reverberates all the way through the chain, right, in terms of the availability of credit and liquidity to businesses and down to individuals. You know, you can't get a mortgage, it's harder to get a car loan. Those are all intended consequences. Were they intended to be sudden is the question. So, you know, the other outcome has been, you know, deleveraging. Obviously, that's affected the banks, but other areas as well. And then, and again, a very rapid sort of demand to deleverage in order to meet liquidity requirements. And then this huge shift in the yield curve that we've seen, which, you know, historically has been pretty significant. So I think the rate of change has been very important in this cycle and very different from anything most people have experienced. You know, I started in the business during the late 70s, early 80s, so I do remember rapid rate hiking cycles, but our financial infrastructure and markets are very different now, and it moves very, very quickly through the system.
Sophia, Vidral or Brad, would either of you like to comment on the question about how central banks should think about this trade-off between the destination and the speed?
I fully agree with what Seth and Kathy have just said. Just one thought I wanted to inject in there is whether we need to think a little bit about the path dependence of these outcomes. I think we've now gone since the global financial crisis into, I would say, three sort of rounds of monetary easing. First, there was the immediate easing after the financial crisis. We tried to unwind and we caused a taper tantrum in the emerging markets. Then we postponed, and I'm calling that as like the second round of easing. Then we tried to raise rates, we succeeded, we did quantitative tightening, and then we ended up with the repo market spike of September 19. Then we started easing again, came the pandemic, we eased a lot, we are trying to exit, and now again we have some accidents coming out. So I want to fundamentally question whether the celebrated forward guidance, low for long, that macroeconomics is claiming as the victory of monetary policy after the financial crisis. I think we need to take a pause and evaluate it. I think we are ending up with a lot of financial fragility, sometimes outside the country, sometimes inside the country. And I think from what I can see, it's not working. I think it's not working as planned. It's a little bit sort of thinking on the fly on exit. The Fed balance sheet is becoming permanently larger after each round of this easing. So I just want to throw in this question whether we are easing too much and then we are trying to do too much on the way out, and whether this combination is sort of leading to a lot of sudden, unexpected consequences for the economy.
Maybe I'll throw in two observations. The first observation was to pick up on the driving through the fog metaphor, which I think is quite helpful. My sense is that because of its forward guidance, when the Fed started this tightening cycle, it felt it had to speed through a very foggy road, just because it felt that it was starting late. It maybe had taken for a 3-hour trip, the Fed had waited 30 minutes too long to get started and wanted to make up time, which intrinsically adds, I think, to the riskiness.
More like a year, but okay.
Cycle. The other observation would be, and it's just perhaps something that struck me, is that even though the Fed was tightening really, really rapidly and really aggressively, deposit funding costs for banks were responding with these incredible lags. So we had a really fast tightening cycle that was playing through very quickly into the bond market, into the foreign exchange market, but playing through very slowly to bank funding costs. And it may be that the bank funding cost mechanism of transition was more powerful than we thought. And it played out a little bit more slowly, despite a fast hiking cycle.
Last point, Brad, I think the point you're making on bank funding costs and how it played out highlights how every cycle can be a little bit different. Lots of people in markets see QT as the reason why bank deposits are going down by entirely ignoring the fact that deposits started declining in lots of banks well before QT happened, because we saw money market rates going up and banks did not start to raise their deposit rates, in no small part because they had a lot of non-operating deposits that they didn't want, and at least initially that runoff was welcome. That's the pattern we see in just about every interest rate hiking cycle, and this time was no different. So what went differently this time versus the other, I think, is that it kept going for longer, partially faster. And there probably is something to the story that it's easier now for all sorts of deposit holders, be they retail or institutional, to shift money into money funds.
Again, this is Logan was sounding different in the beginning. This is the panel. Other people are answering, but we got 20 minutes left. I'll wrap it up here in a little bit.
Slowly, if at all.
But 20 minutes, 18 minutes left on the day.
Aggressively is exactly right, and it highlights for me exactly how similar this hiking cycle is for the transmission of monetary policy, but also the ways in which it may be a calibration exercise because things did pick up even faster, and perhaps we've reached the limit or maybe gone just a hair too far.
So maybe I'll take one of the audience questions, which is related to speed. And the question is, the speed with which rates rose has created a class of trapped homeowners. They're sitting on 2.5% mortgage rates, unable or unwilling to sell. This has dampened the supply of homes for sale, and prices are rising again. Is this a problem? I guess I'd ask the question, is that about speed or is that about level in the question that's coming in? But any comments on that question before we move to the global questions?
Yeah, I guess I think it's probably about both, but I agree you would get this even if you gradually went to that level. I'm forgetting the name of the authors, but there's a very interesting
let's go, Gabriel. God bless you. So we're still working down, watch the NASDAQ. But I think Logan is asking the questions.
Not underwater, but
I hate the
mortgages
Fed
where
now.
The rates are very low
Well, hold on.
relative to the market rates. So people are very reluctant to leave homes as a result of that because they would have to close their first mortgage and then take out a new mortgage at the new rate. And there's some signs that this is actually adding to the tightness of the labor market. And so I thought that was like an interesting, somewhat unexpected consequence of the fact that once again we raised rates very low, and then we are trying to raise it very fast, and then this is throwing some wrinkle in the adjustment of the economy to labor shortages.
Yeah, the labor mobility issue is potentially an unanticipated consequence, but for the housing side of things, I think it's also important to point out that if people don't feel like they can move just to trade up to a different house, they are in fact taking away some supply from the market, but they're also taking away demand from the market. And so that particular phenomenon is responsible for driving up house prices alone is a little bit harder for me to sort of embrace fully because the same people who are stuck in their home are not demanding a different home in the market. There is a fact that relative to a very long run, sort of demographically calibrated sort of level, there's too little housing in the economy. I think that was a pre-existing condition. And at the end of the day, the increase in mortgage rates, at least initially.
All right, bro. Thank you. Again, I think it's the Fed. The Fed will wait for the headlines, but she's hosting the panel. She's not the one answering she's asking the questions. But here, Biden is shorting Asia trip amid debt ceiling, where to go? Debt limit negotiations. So that doesn't sound good, and it sounds good at the same time. See how the market formulates it. But for now, you're moving about 5 minutes ahead. But that's a debt ceiling update, and it looks like you're getting a change in Biden's schedule. But honestly, just watch gold and watch the bonds. So gold and bonds did not move off of that. There's no, again, that's why I closed out of the bond short now too. Because again, we have a couple more days, but realistically, as we get into next week and end of next week, if these headlines keep hitting, you'll respond. But you cannot attribute any of these moves until you watch gold or the bonds move. So starting to catch a bid now, but spies drop in. That's hitting now as breaking news. Biden is shorting Asia trip. Again, everyone's going to have their narrative behind it, though. Let's see. Again, last time he canceled the meeting, they said it was bullish. In this case, that either, to me, it sounds like he's shortening it because that means they really need to work on it and they're far apart. But also, some people say that's a good sign because it means he's going to work on it. So we're good. And then, yeah, PAC-W, I had that up there during that whole little speech. They were dying. PAC-W is down 15% on nothing right now. And that's bro, you want to tell me regionals are down today following news that the biggest bear bought millions of dollars worth of banks. So that's some food for thought as well. His trip was supposed to be next week. That's what people don't realize. Like, you got to realize in a weird way, it's very bad that we don't have a resolution right now because Biden is leaving at the end of this week to Japan. And that was going to be like, I think, a couple days or a week trip. So he's not even going to be here. And then after this week, Congress goes into recess. So even Congress goes on a break for a little bit. So that's what people don't realize. It's like if we don't have a resolution to this fairly certain, fairly soon, I mean, they're even running out of time to the point where people will not even be in Washington. Again, either the president won't be there or Congress will be on a break. I can get you the dates. So what month are we in? June? Yeah, so right now it's Senate only, but I don't know if you guys can see it, but pretty much both chambers, where is it? I guess it's saying from next week they'll be good, but I think after the 20th, so after next week, Biden leaves to Japan after this week, and then after next Friday, I don't think you're gonna have any what's it called? I don't think Congress will be in session there until July. Oh, is it? Oh, then here it is. I'm on June. So then May is next week, the 22nd. So Biden, we are right here. Biden is this. No, so they're same time. Biden and Congress will go out. Or no, House will only be in session. And then the 26th, 27th, that's the weekend. Then Memorial Day, no one's going to be there. And then Senate only on the 30th and 31st. I thought it was June. I'm sorry. Where am I? Is it 2023 yet? No, still. So what happens when you trade? I'm on the right futures date. That's it. That's the good part. I'm in the future. Bruh. So yeah. But point is, it's not even it doesn't even look like what's it called? It doesn't even look like the schedule is just gonna be difficult to get everybody there. You know, there's only a couple of days that you're gonna it's either we get an agreement or, you know, everyone's gonna be all over the place. I feel like it's all hype, debt ceiling, banks, Evergrande, Tiger, hedge fund, FTX, all supposed to move, but nothing major happens. You know, you're right and you're not at the same time, but so far we barely reacted to any of those things after reacting immediately and then going back to normal. But when you list it out like that, it reminds me, 10-minute rigged, coming in a little lower. It reminds me of the list when you read about the 2002 stock crash. That's what most people don't realize. That's what I'd always bring up. Everybody would talk about, it's like 2001, 2002. A lot of people don't realize what happened in 2001 and 2002. It wasn't just a tech bubble. There was like 15 frauds that got exposed. You had SARS. You also had 9/11, the biggest terrorist attack. Like 10-minute rigged. Yeah, he's getting. Then bonds are coming up here. So bonds up a little bit are holding, and SPY is just dumping right there. But gold's not moving. Gold and oil, nothing else is moving. This is fugazi. Yeah, you had Enron in 2001. It's all fugazi. All fugazi. Again, until we get an update, I think we wait. Remember, China had bad data. We'll see, but that's crazy. Everything else in the world is not moving. So you have Raul, but no, there's nothing else connected to this. So SPX, dude, you're hitting a new low of the day. You just flushed right there. Again, but like I'm saying, I don't even think oil started to just react right there. Gold did not move off of that. I do not think the yen did not move. The pound started to move. So the pound and euro reacted to the Europeans are moving with us here. Other than that, though, bonds and yen, anything more stable or safe haven-ish stayed the same. And then everything else. That was a huge dump. That's 10 points in 2 minutes. That was fat. Bro, 10-minute rig that's why we call it 10-minute rig right there. That's it. You said, don't ever forget about me. 10 minutes till the bell. So there you go. Again, a lot of your tech names, even Amazon, they gave up half of their high of the day almost, or a little bit less than that. Yeah, banks, again, regionals are flushing, and now so are your big banks. Regionals are about to be the worst on the day almost. Let's double check. Almost. Financials are down 0.95. Regionals are down almost 1.3. They're bad, but they're not the worst. The worst on the day is energy and real estate. Tomorrow, so many people will lose money. If it happens tomorrow, then they'll make it back on Friday. Otherwise, I think you wait till Friday. Again, Jerome Powell, Ben Bernanke, my nerdy ass is hyped on that. And Gabriel Horner. That's what I'm talking. That's how we're going to close out the day, baby. God bless you. Coming in hot this week. Even last week, too, Gabe. Let's go. The angel. You know, you're named after an angel. God bless you. Amen. Yeah, get some positive vibes. Amen. We have Target. Do you think the Target play will hit? You know, I'm down. I'm here for the culture. You know what I'm saying? But I don't know. We'll see. But lending tips, I don't know. This loose lending tin has been working for now. That's it. LT has based all of these plays off of his anecdotal evidence of tin. That's it. This guy looked at Meta and said, they're liars. Everybody's a liar. Buy it. He said, Home Depot, I go outside. I ain't seen nobody out there. Short it. And now he's saying the same thing about Target. That's it. So that's the due diligence you're following. If you're really looking for something there. I gave you what the analyst said, but that's the LT breakdown. Bro, that drop was wicked, though. So, welcome to close. About a minute and a half here. So, we'll see. He's right. It's 2 for 2 this earnings season. Better than Kramer. So, we'll take it. So, I said, that's why I didn't give him any shit this time. That's it. He blew up my phone. I said, okay. I said, you're 2 for 2. Fuck, give me let's put it to the test. Of course, let's put the third one to the test. I said, okay, I'm not even going to argue with the guy. I'm not even going to tell him anything about risk management. I'm not even going to, because again, I did that on the first two. I was like, nah, I thought, again, HD, I was right, though. I didn't think HD was going to be exciting. The number was exciting, but the move wasn't. But we'll see. But 30 seconds here until final five, baby. Till final five. Let's see what we got. Mike, I didn't even open up Bookmap today once. Oof, was that Expedia or is that NXPI? Yo, something just flushed. Or that was a group of things. So watch out. You just did 10 points in a minute, chilled out there for 2 minutes, final 5 in 10 seconds. I just saw something. I don't know. Maybe it was a ghost, but that the low ticker just tweaked out right there. Usually I have a chance to catch it, but I don't. Again, look at the velocity now. So here's your final 5. I mean, you're not really moving yet. Have not picked the direction. You're 10 points from 4,100 too. That's the irony. NXPI did gap down there. That was like a 50-cent gap down, but I don't know why. Again, a lot of things are moving right here. Again, NASDAQ has actually gone negative, so there's your shocker after literally hitting a new high every day. Now, ironically enough, the NASDAQ looks like how the SPY looked earlier in the day. So now SPY hits new low. NASDAQ goes back to cuck zone. And again, you do not have much time remaining. Target earnings in the morning. And we're waiting for debt ceiling. The latest thing that we did kind of start dumping on Biden shortening his Japan trip. So that was the good part. And, maybe we're going to hold that. I'm holding ZQ because I'm kind of tying that to the debt ceiling. But I don't like ZQ anymore until we chill out. So we'll see. Again, not that much. Yeah, TLT's, I close out the bond short for now just because tomorrow will be Wednesday, but I think towards the end of the week, depending on the headlines we get from debt ceiling, that's it. They're just next week. The market is now free to respond. All of this was just a warm-up. Target flushing. Oh, Target. So we're up 10% on our debit spread. You have $200 profit. Deal or no deal? So, GG with that for now, but speak now or forever hold your peace. There it is, my softies and sensitive ears. Get ready. Here is your warning, because we love you. It's all out of love. You know that. It's all because we love you. It's time to mute your speakers for the next 30 minutes. We won't even be live for 30 minutes, but you got to just mute them, because that's it. We're turning up right now, okay? So, if you want to go home, now is the time, but... Softies, this is your moment. I'm just waiting on my moment. All right, ladies and gentlemen, we're making our final approach. As we make our final approach, you guys are holding on to any bags. Please throw them in the overhead bins above or firmly beneath your seats. We'll be coming through the aisle with the trash bag if you'd like to dispose of those bags. But as we make this final approach, we're going to be landing here into the second link terminal. Second link terminal in description. That's going to be your nightly watch list and main channel layover around 4 p.m. Pacific time. Then we're going to be taking on promptly around 6 a.m. out of sunny San Diego, California. So we make make this final approach into San Diego International Airport. It's about 66 degrees, sunny on and off. A pretty decent day. Otherwise, if you expected the market to actually move again, you got cucked. So now it's not a good day, and the NASDAQ hates everybody along with the S&P. But we are no longer under COVID guidelines, so no masks are required. But we do ask that you exit one row at a time and drop a GG on your way out. As always, we appreciate you guys' business. If you're interested in your Cold Rapid Awards program card, please flag down your flight attendant, and we'll get you that as soon as possible. As always, thank you for flying with the coat, and hopefully have a wonderful evening. So let's go, baby. Bring it home. Honestly, it sucks because we are actually ending lower, decently lower on the S&P, barely on the NASDAQ. But just to give you an update, the only thing that caused this was both either the end of the day closing transactions, but you also had that Biden debt ceiling thing. So it came at a weird time. It's really hard to determine given is it debt ceiling or not. But like we said, bonds and other things barely moved. Wrapping up a very interesting day. Again, we woke up to bad China data, bad Home Depot data, and then the retail sales were actually good. And now we're here, and then you got your final debt ceiling, all of the Fed speakers. Oh, man, I missed that. 1 minute. Go, 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 go. Ladies and gentlemen, boys and girls, I said it to you, come. I gave you the recap on the day. It's time to bring it home. You should know everything that happened. You have more data tomorrow in the morning, more consumer earnings, more updates on debt ceilings, the UK, the ECB, all of it. But you only have 5 seconds. Wrap it up. 4, 3, 2, 1. That's it. Ding 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 ding. Or nah, let's go, baby. Oh, ladies and gentlemen, boys and girls, we did it, we made it. Let's go. I need that GG. You made it to the bell. What a day. Are you kidding me? What a week of nothing but something but nothing. Good game. Let's go. It don't matter if you made money or lost money. I know you learned something. Everybody that contributed, good game. You made it to the bell. 7 hours in the box. Let's go. All the lovers, all the laggers, all the lurkers, all the members, all the non-members, all the stream alerts. You made it. Good game. We did it. We made it. Good game. GG, baby. That's how you play. That's how you contribute. Way to stay in the game. The stamina, baby. Huh. Let's go, Twitch. I see you too. All the Chads, all the real ones. All the real ones vibing, baby. Good game. That's what I'm talking about. Let's go. All the members, all the donos, everybody showing love. Good game. It ain't hard, I don't want, cause then everyone got like opinions and thoughts why they don't mean a lot. Man, my money on size, I can show you the top, every bottom my bot. Wow, good game. Ha! I need me to rock. You won't see me a lot. Monday through Friday, you need me, let's talk. Go. Ooh, I love this. All right there. Put up in the big body. All put the top in. Hit me with the DV. I don't even need the NASDAQ. Wait, why are you talking like this, Josh? Jamie Monster. What? I'm tripping out, Chad. Let's go. Oh, Doximity guides lower. I don't even care about the earnings for today, but Doximity guides lower. I see that across the wire, but good game, Chad. Are we dumping after hours? A little bit of movement. You're kind of even going a little lower, bro. What the hell is this? Is it the bonds, bro? What is this? I bought the TGT puts. We did it. I mean, we followed the Lendington. I didn't even question it this time around, man. We'll see. Target is before the bell. I don't think it's after the bell. That'd be crazy though. So again, Target is, dude, SPY is dumping. Bro, Oceans, bro, if you have a SPY daily that is not expired and it is going down, you still can sell that if you are not aware. But you're moving right now, Chad. Oh, I'm just trying to tell y'all thank you for being here. Well, good game. God bless you all. For real, I hope you enjoyed it. We're gonna watch this after hours here. You should take a look. But Chadadonia, bro, that's it for real, man. We made it to the end of the day. Oh, 2.1 thousand on the like. Give me the horn. God bless you. And thank you, Gabriel. Nah, for real, but thank you. Nah, so if you saying thank you right now, for real, this is my moment to tell y'all, if you stepped in here today, you clicked on the video, you showed up with positive vibes, you know what I'm saying, and came here for the right reason, even if you were a hater and just gave me the opportunity, for real, man, like I'm saying, every one of you gave me this opportunity, and then you turned it into a community, and you see everybody else in here, and it's a joy and honor to spend this time. I'm gonna sound like Chick-fil-A, dog. It's my pleasure, for real, every day. 7 hours, open till the close, bro. But for real, if you came out today, gave me that opportunity, showed love to the fellow Chads, and made a contribution in your own way, for real, God bless you, and thank you for showing up. Hope I see you tomorrow, and maybe we'll see what happens. Bro, those just went in the money, the 410s. Again, if you have a SPY daily, you could still sell it. Fun fact about the dailies. But that's it, Chad. That is it. That's the day, man. So God bless you all. Big shout out to everybody, members, non-members alike. We love you too, Jay. We're going to get you back in here, but that's the day, man. I hope you enjoyed it. So Chad, thank you for liking the video. Check out the links. First link for the Scream Alerts Bootcamp and Real Estate course. Second link for that nightly watch list and main channel. Third link for the membership badge. Fourth link for the merch. Oh, we got merch. Tomorrow for Cole. Wait, is today Wednesday? No, today, dude, I don't even know what month it is. That's already Tuesday, man. That's it. That's crazy. But nah, run that up, man. Cole Real Estate tomorrow, because you guys all like to ask me how to get into real estate on Thursday for some fucked up reason. I don't know why, but maybe we should talk about real estate today, because y'all like to ask me. You like, I don't know what it is. Maybe we should move the Colt call to Thursday, because I don't know what it is about the Chad. Because on Wednesday, they don't want to get into real estate. Then on Thursday, they like, yo, Josh, you right. I want to get into real estate. How I'm like, man, just. So we got the call on Wednesday. Shout out to Tyler, Trey, the whole squad out there, bro. They killing it. And it's beautiful. So Wednesday, 6 p.m., free 99. We also got some other channels. Follow me on Instagram. I am the private account, okay? I am not going to ask you for anything. Wait, what did Lyft just announce? Lyft announces management change, CFO change in a statement issued today. New CFO for Lyft. Just submitted my license ad. Well, listen, you better be on the call tomorrow there. I'm telling you, again, it's way more than you could ever ask for. That's all. Josh is never going to hold your hand. You know that. Josh will never hold your hand, but those guys will run you through it and get you on board with it. And I know a lot of people are like, what do I do? But don't ask me on Thursday. That's all. But that's tomorrow. Follow me on Instagram. Again, no call this week. Well, even then, Wednesday, I don't care. I'm going to make it a call on Wednesday. Either way, you're not allowed to ask me on Thursday. Only on Wednesday. Only on Wednesday. It's every Wednesday, too. I think they've only missed like 2. So even if they don't have one, they do it how they do it. But I think 90% of the time they're there. Oh, BurgerFi. I didn't know they were public. I thought they were a scam. Biden appointed people to talk to McCarthy's people. That's your headline. And there's your mini after hours bounce. But again, until bonds and everything. Bonds caught a bit after hours, though. Again, I'm packaging a lot. I'm telling you about Cole Real Estate, active news right now. And I'm telling you to follow me on Instagram and not fall for the fakes, okay? Amen, amen. But Chad, that's it. We got tutorials on option pricing. We made an option play for earnings today. How to set up the long term. Still love it. We get a deposit in 2 weeks, man. So that's why you got to save the 10%, baby. Wow. Fake TikTok reach out to me. Damn. They went to TikTok. That's cool. That's fine. It's already there. I mean, I don't even then TikTok. I wait for you to tag me in a Christian rap song. That's when I get on TikTok. Otherwise, I just have my girlfriend show me TikToks now. That's it. So that's good. They can have TikTok. The imposters could have it. McCarthy says still possible to have a deal by the end. Oh, that's positive. Oh, no, McCarthy. And then Lyft says no change to revenue and adjusted EBITDA outlook. No. But, bro, McCarthy's actually like, no, that's low-key positive, though. See what happens if bonds or gold on that. I bet you gold actually dropped on that. No, gold didn't. Nothing moved. So we'll see. Yeah, structure of deal has been improved. That's the headline coming. Yeah, there's a definite change in tone by McCarthy. I mean, even yesterday he said no progress, but for him to say a deal by the end of this week, oh, dude, that's it. That sounds great. So again, the play from there is just pretty much unwind any of the other one. Airbnb's Gebbia sells 37 million of shares. Asshole. I think that's CFO or somebody. He's a director. Yeah, where did that come from? Dude, McCarthy, all of them. Dude, but then again, I will argue on the back end. You know, again, this is the whole fucked up part of the game. You read the headline, react, and then you get another headline that makes no sense. So just keep in mind, I will tell you, although it does sound like a positive change in tone, I encourage you to look at it in terms of volatility. So if you were going to price in these headlines on the VIX, assuming the VIX actually worked, how do you think that would work? See, so now he says, wait, see, what the fuck is this guy saying? So he says he would like to have more meetings today, but then he says debt limit negotiations are still far from reaching a deal. But you see what I'm saying? It's very volatile, though. They're going, oh, I'm optimistic. Nothing has happened. Nothing has happened. We gotta speed up our schedule. I think we're gonna get a deal by the end of this week, but we're still very far from it. That's just volatile. So at the end of the day, if anything falls through, I think the volatility of the situation still persists. Walgreens to sell Chile's Farmacias Ahumada. Did I say it right?
Make America stronger, less dependent on China, and actually curb inflation. Yes, sir. You know, look, if this is where we were in February when I first came down, I'd be very optimistic that this would get solved right away. The structure has changed, so we're in a better process. Mitch, you want to say anything else?
You say bitch? He said Mitch. Oh.
Seven of the last 10 debt ceilings have carried something else.
Jeez.
What the Speaker and I are advocating here is not unusual. It's more common than not. A perfect example of it is the Congressional Review Acts that we've been voting on.
I thought he said
periodically
bitch.
In Congress.
I swear, I thought he was like anything else, bitch.
Done
I said what?
On a debt ceiling.
He said
In
Mitch.
the Clinton administration.
Mitch.
So this
is Mitch McConnell.
Be this hard.
He's
Number one,
usually in the
we know we're not
spotlight,
gonna
but not
default.
this time around.
They know it. We know it. We're running out of time.
To
And
live?
just finally, as
Oh,
Speaker
debt ceiling.
pointed out, the president's agreed to designate somebody to be the lead, as I recommended to President Trump in 2019 when we faced the same situation. Do you think he wanted to negotiate with Speaker Pelosi? Of course not. I said, you have no choice.
He borderline talks just as bad as Biden.
Yes, ma'am.
Or again, maybe it's just the old person thing.
Can you talk about your discussions during the meeting on
Then
the
this guy
work
just looks like a
environment?
mega
Are you
Chad.
just discussing
Where did this guy
debt
come
payments
from?
now, or
This guy's going to be in government for the next 100 years.
Look, I'm not going to negotiate
Where
with
did
all
this-
of you.
where did
know
fucking
we need to
chiseled
get
jaw
to. We
come
know
from?
What bill we have passed. Look,
This guy have
the
a
way the
hairline
founders
still.
have developed this country, which is
Look
an
at this.
unbelievable country. You lend your voice to your elected officials. The House passes a bill, the Senate passes a bill, and then you go to conference. Unfortunately, the House is the only body that has passed a bill and raised the debt limit.
I know he's
We are
the
now
speaker, I'm
15
just
days
saying.
away from hitting this limit. Republicans didn't
I didn't
sit
realize
back
he
and
was
wait
such a
till
quarterback.
Janet Yellen told us when
Why
the
does he
deadline
look
was.
like he
We
played
passed it long before she
football
ever
his
said
whole
June 1st
life,
was coming.
and he was
Because we
the
didn't
captain
wanna
of the
put
team? This guy
America
does not
into
look. Did you
jeopardy
not
like
just
this.
see Mitch McConnell up
And so
there?
we have
I wish I
worked to
could
try to solve
rewind.
it. Just as you
That's a
looked at
crazy
Title 42
juxtaposition,
being lifted on
even
the
though it's
border.
not text.
We didn't ignore the problem like the White House. We actually put a border control bill out there so we can secure our borders. And what happened this weekend? A person on the terrorist watch list from Afghanistan was just coming across this border. Why? You know, we caught more people in the month of February on the terrorist watch list than we caught the entire time of the last
Yeah.
administration. You can't keep ignoring
If
problems.
he's
You
talking
gotta
about the
find
border
solutions.
right
That's
now.
what the Republicans in the House are doing.
We're talking about the debt ceiling. That's where we are right now.
concern about possible default and the implications in the
So, yeah, I don't know if that's progress.
Look, I think America's the #1 economy in the world, and when we get done with this negotiations, America's economy is going to be stronger because we're going to make the American economy stronger by putting more people back to work, lifting them out of poverty,
American
lowering
economy.
our energy costs, and more importantly, curving our spending at the runaway. So as the world looks around and look back at America said they were spending too much, they won't be able to say that when we're done. Thank you all very much. Have a good day.
Our staff meeting today?
Okay, that is the Republican congressional leaders outside of the White House after meeting with President Biden.
Yep. Well, there you go. I don't know. I think shit show. The same exact situation. Bonds, even then the bonds don't even know what to do. So they're like, we'll stay in the same spot. So again, equities, that's something we got to learn from today. I'll tell you that right there. If you guys wanted, that's something I learned today. Just pay attention because we saw it there at the end. The pound and the euro are more sensitive with U.S. equities. And then the bonds, gold, oil, and the yen are in their own little world there too. So correlation is not high. Again, at other times when we were like really dumpy and certain things were happening, you know, the correlation would be very, very high in terms of what would be moving. So keep that in mind. Keep that one in mind there. But that's crazy, man. Schumer says good and productive. I think the negotiation, there's nothing due. It's just whenever we run out of money or when the market reacts. That's it. That's where we are at this point. So you got to realize your faith in ability is them figuring out a deal before June 1st or June 3rd. They could figure out a couple of things. You got to realize. Like, actually, you want me to tell you how they're going to kick the can? So this is for all the people who are like, yo, this happened. Oh, NYCB, they're going after Burry. Oh, they're going after Burry. NYCB, why is it dropping? Oh, yeah, it's down $2. No, they're going after Burry. The only bank stock that is up, NYCB. I don't see any news. This thing, I think, just dropped 10% and then popped right back up. I don't see anything. Oh my, what an after hours. This isn't even earnings. Nope, it's back down 8%, 5%, 8%, 3%. Something's happening. New York Community Bank announces secondary. Oh! Wait, of common stock by the FD. Wait, hold on. What does that mean? So it's a secondary stock offering, but it says by the FDIC. So did the FDIC make them sell part of the assets of Signature? Is this part of the deal, or are they just dumping shares and they're just attaching the FDIC to it? Hold on. That one's weird. That's different, at least. Again, this time it didn't come with like a warning or anything. That's it. Oh, man. I think that was the only one besides Wells Fargo Burry was up on. And now NYCB is clapping him. So today they announced the FDIC as a receiver of Signature has agreed to sell an underwritten public offering of 39 million shares of the common stock owned by the FDIC receiver. The company is not selling any shares, nor will it receive any proceeds from the offering. The FDIC receiver will receive all of the net proceeds. Ah, there it is. So the government is dumping their stock, essentially, is what they got to recoup any money or whatever. So the FDIC is selling a 39 million share stake in NYCB right now. That's the news. Maybe they already did it, probably. But they say to sell, so it could be a plan. That's crazy. Just when things were... Well, I'm glad we are out of the fucking bonds there now, because then... where's the damn fucking rate hike one? I still like that one, but we could take $80. No, I'll hold that one. It's smaller. But, yeah. Yeah, they fall 8%. Now it's down 9.3. Well, that's the cherry on top for today. Again, debt ceiling after hours. Little back and forth drama here. And then now another regional bank. The only one that was green. Again, NYCB, after buying Signature's assets. This was the only bank besides like FCNCA that was up. I even think FCNCA, though. Where were they? I think they were the only other one up. They had, I guess, I thought they weren't. I think NYCB though. But them and FCNCA, those were the only bank stocks that were actually up this year. So now that one's, again, Michael Burry, that was one of the only ones he was in. That was like a solid one. They came for his neck. Yeah, dude, that sucks. Bro, he got wiped out. Assuming, we don't know when he sold, but there's a good chance he got wiped out on FRC. Now he's probably down on NYCB. And then if all the other names go down, like, wait, FNCA should be dropping then. I can't. FCNCA. Yeah, this thing should be going down too. Low key. Because again, don't they have receivership assets then? Because then if the FDIC owns any, or they sell them out already. Because if the FDIC owns shares of anything else, I mean, that's it. They could just dump whenever they want. That's wild. Again, the FDIC owns the shares. So remember, they took the company, the bank into receivership. They took over all the assets. They took over all the equity of the shares. They orchestrate this deal, and now they're dumping their remaining equity. Is the Tesla meeting on? I don't know if I can't listen to Elon for this, man. I can't do an Elon. I can't do an hour of Elon right now. I don't even know what my girlfriend made me for food, bro. I'm hungry. You know, I'm about to be surprised. That's it. I'm excited. It could be good or it could be bad. I mean, what other options do they have? Genuinely curious. I mean, I think the only other option would be like wait until the situation deteriorates, not deteriorates, gets better. But like you could wait maybe like a year. I don't know, maybe 2 years. So then that way, because they could get more for the assets. So, like, that's the thing where it's like in certain bailout situations, like the government's made money on certain assets. So it's like if they were already making a profit already based on the stock going up. But it's like you could let the whole situation cool over, hold that, and then sell it. But then again, if they are selling assets this quick, I mean, hypothetically speaking, there is a need for capital right now in any government coffer or federal coffer, if you think about it, simply because of this thing called the debt ceiling and extraordinary measures. But other than that, you would assume they would want to wait. Yeah, it doesn't really signal the future. They're like, hey, it's up a little bit now. Let's just get our money, or maybe they just need cash. Maybe the FDIC, in a weird way, though, this keeps the FDIC ready to defend, right? Because now they're able to, if they just sold 30, how much money is that? We didn't even do the math. Hypothetically speaking, between $10 and $8, we'll say $9. So 39 million shares times $9. That's 300. I guess it's not that much. Low key, actually. Am I tripping? Yeah, that's only 355 million. Did I put the right number? Yeah, that's 39 million shares times $9. Yeah, like that seems like a little bit too low. Wall a little pop. Only? Yeah. Bro, we're talking about billions of dollars of like assets. We're talking, some of these banks got like 50 billion of commercial loans, and they're selling their entire equity stake after receivership for 355 million. That's crazy. And then Wall is going. Did Wall give another update? Man, what? Tesla shareholders elect former CTO JB Straubel to the board. Western Alliance quarterly deposit growth 2 billion as of May 2nd. Yeah, they've given like 3 of these updates. They're trying to, yeah, their updates have been decent. Remember, they were the ones with the fake, they got the fake news the other day. Yeah, the fake FT article. Well, that's good for them. We'll see, but definitely getting developments. Yeah, Wall just gave a quarterly update on deposits. But Chad, it's already been eventful. You know, this has already been an eventful. We're just chill. We're chilling here, and then all this stuff. You have Tesla's reject proposal for key man risk report on Musk. Why? Shareholders do not want a key man risk report on Musk. They say, we don't, save the time, energy, and money. We don't need to know what happens. They said he will live forever. Next. He ain't Warren Buffett. Whoa. Spy kind of tweaking. I don't know if that's real, though. Key man risk, like Biden. Yeah, or not even just like if he dies, but like in general, or not Biden. I meant Buffett. But it's just like if somebody is like, if a CEO is very like important to the success of a company, it's like if pretty much, even though Tesla is a very good company, some people would argue Tesla would not be Tesla without Elon Musk. So it's the idea that if you have a key man in your company that is driving performance growth, it's like an intangible asset that's worth probably even way more. It's a human. It's not. So it's tangible, but it's like saying that the one person behind the company, they could be very detrimental to the material success or failure of a company, depending on what that person does. Whether they're a part of the company, whether they go crazy, all of that. That candle was fake there. So that candle was just tweaking. So NYCB has already bounced. Wall is up 12% on deposit report. You had 5 minutes of more bank fear. And now theoretically the FDIC probably sold their shares, or they'll make more money for it, or if they already sold, they sold at a loss now comparative to the We'll see. I think they haven't sold yet, though. But Chatadonia. Chatadonia. Yes, key man. Yeah, I would be key man risk, right? Like if I died, something would happen, or if what if I went crazy? Like, you know that? Like, that's a key man. Like, honestly, I was thinking about it the other day. Maybe it's not good, but I was like, low-key, I haven't gone crazy in a while. Like, when I was younger, I was, like, prone every, like, couple of years. Like, I would, like, shave my head, dye my hair or something type crazy. Like, I haven't gone crazy yet. Like, I don't know. So, like, I don't know. But, yeah, like, what happens if one day I'm like, I need to go live in the forest and join a nudist colony? Like, that could happen. So, I don't know. But, yeah, that would be key man risk for sure. What happened to your disciple search? I mean, who said we stop looking? I think every day. I think there's a couple. You only need 12. Not even, you only need one, bro. I'm not even trying to have a disciple. We just got to pass the torch. That's all it is, man, for the country, Olympics. I used to be a big Olympics fan back when patriotism was at an all-time high. Now it's different. But anyways, I have to get going. I was going to tell you guys the final thing. I was going to tell you to fill out the prayer request wall. We didn't get there. We just started reacting to so many things right there. You know what I'm saying? It's crazy. We just started reacting to all sorts of things. So, Chad, the final thing, shoot me a prayer. I'll pray for you. Pray for all your other Chads out there. You know what I'm saying? And show love, man. And I hope we're rooting for all of you. I really hope PHILO's intraday, not intraday, man. I hope it helps you no matter what, man. And I don't care what you believe, for real. That's it. I hope I get to grow more and more, and I hope you grow with me. And it's an honor to be able to share certain discussions that we have. But it's like, that's it, man. We got to fight for more peace. We got to kill any attitude. Paul wrote us a letter, bro. Paul wrote us a letter. You know what I'm saying? The attitude of dissension. We want the purity of the truth, man. That's it. You know what I'm saying? No dissension and contention and whatever else. And all over whatever else it may be. But all in all, I say that because, no matter what you believe, we're rooting for you, okay? And we're praying for you, man, and I wish you the best, and I hope you got people out here rooting for you, and I encourage you all to root for everybody, and let's keep working hard and keep working together, and God willing, we take it far, baby. But Chad, that is the day. That's the day, man. Go read the books, Richest Man of Babylon, Proverbs, New Living Translation, and The Strangest Secret in the World. And ladies and gentlemen, boys and girls, don't forget why we're here, why we keep going. Whether you're intimidated, frustrated, whatever it may be, why you keep going and try to run the race as well as possible, and why that faith, hope, love, and discipline ain't ever going out of style, baby. Why? Finger to the sky, baby. To God be the glory, and through the grace of God alone. Amen. Amen. Woo! So, Chattadonia, I love you all. I hope you enjoy the day. But that is it. We already had a lot to deal with already. You know that? We've already gone through a lot so far for After Hours. But, Chad, I'll see you in the morning, okay? I will see you guys in the morning, and I'll see you tonight on the list, and we'll see what other headlines we get from the government in China and the UK and everything else in the meantime. But, Chad, have a good day, and peace out. And thank you once again as well. Shout out to Chaz, bro. Let's go. God willing, another one. But I'm out. Peace. What about me, Chaz? Listen. I feel like we're making progress because we're not making progress, but we made so much progress we're not progressing at all on the debt ceiling, but we're going to figure it out by the end of the week, but it might take us a month, okay? So simple. Why are you freaking out? It's happened many times in history. I told you. We're not going to figure it out because we figured it out until the end of the week, but we'll tell you by the end of the month, okay? So come on, relax a little bit. The economy's booming. It's always going to be good. It's America. Seriously. So come on. Come on, simple as that, all right? Here, I forgot to tell you. I was going to tell you, that's what we're going to do to fuck with you. Here, I'll tell you. For all the guys, I forgot to say it. Josh forgot to tell you. So I'll tell you. You know what it is? Sure, hey, listen up. Listen. You know what they're going to fucking do, right? Everyone's like, are we going to run out of money? No, we never run out of money. We're not deadbeats. Come on, what's wrong with you? You prick? No, but seriously, I mean it. What's going to happen? We're gonna get to the we're gonna get close to the date, right? And everybody thinks we have to agree. I'll never fucking agree, never. No, do what I say. I'm the king of the castle right now. You gotta listen to what I say, motherfucker. So this is what I'm gonna do. I'm not gonna agree. And then right when we get to the deadline, we're gonna agree to suspend it for an additional month and a half, maybe 3 months. So we're all going to agree that we're just going to pause it for 3 months and do this again next quarter. Yeah. How you like me now? What? Come on, chill the fuck out, bond market. What's wrong with you? Who says something has to happen? No, they're not going to downgrade me. I'm fucking Biden. What do you mean you're going to downgrade me? They ain't going to downgrade me prematurely. I got that covered. Don't worry. That's it. We'll take it to the deadline and fucking just pause it. Hit the pause button. Come on. What do you think this is? We're not playing online. You could pause. Pause it. And that's it. And then we'll deal with it later. All right? All right. You have a good one, Chad. I love you. I'm leaving now. All right. Good morning. Hello.